Good morning and welcome to Traders Corner's Prop Traders special event. On our panel today, we've handpicked 7 professional trading experts of the highest caliber. They've agreed to share their most consistent and profitable trading strategies with us today in a free educational forum. In today's Investor Summit, we're going to learn a wide range of topics from a step-by-step guide to making 10K a month in the markets to how to leverage artificial intelligence in automated strategy. So let's not waste any more time. Today's show is packed with great information. Our first presenter has been a trader and trading educator for over 4 decades. He has over 1 million views of his 4-minute drills for traders found on YouTube. He's a former commodity specialist for Payne Weber and has managed extremely large accounts as a commodities trading advisor. Here to present the death of sim trading, prop trading is changing everything, is Mr. Norman Hallett of The Disciplined Trader. Welcome back to Traders Corner, Norm.
Thank you, Rob. I'm going to leak something out to everybody. I just, 5 or 6 minutes before we got on, I talked to Rob about his background. Rob, you should be doing some of these presentations. I mean, you're a solid guy when it comes to trading. So I appreciate you having me here. But I'm going to push you to do your own presentation one of these days.
Norm, not to interrupt, but one day I might launch a 0 DTE course.
There you go. Well, don't threaten me. Okay. Sounds good to me. Hello, everybody. Thank you for being here today. Thanks for jumping in early. I'm gonna, as I said in one of my emails today, I'm leading the pack. We have a pack of great traders here. I'm gonna zoom in like everybody, I think, will at least dovetail, but I'm gonna go directly into the idea of prop trading. If you're unaware of prop trading, you're just kind of hearing about it, just let me give you a couple of sentences on it, that it's an arrangement where hedge funds and other entities that have money to give you to trade will allow you to trade their money, but you've got to pass the evaluations. Some of these evaluations are 2-step evaluations, some of them are 1-step. Most of them are involved now in the futures market. Some are in Forex and stocks. Don't know of any in options, but it's real out there, and I believe that it will eventually, and that eventually could come almost before the end of the year. Prop trading is so popular now because of the attractiveness of trading somebody else's money, where you get 80 or 90% of the profit. In fact, I've been getting 100% of the profit for my first 25,000 that I make in with Apex, which is a prop firm that I'm working with. So the attraction of trading their money and you still get all the profit, that's an inviting calculation. But of course, there's their side of it. Don't worry about them. They make money, even though they're only getting 10% of what you make. They're collecting fees along the way as you test, and those fees are reasonable, but they continue to accumulate because most people will not pass the evaluation. I'm going to show you how to do that right here. I'm going to give you some very, I believe, key and necessary tips in order to adjust your trading plan so that you can pass the evaluation and start trading somebody else's money like I'm doing. So I want you to follow my footsteps here. Okay. I've called this presentation The Death of Simulated Trading. Really, it's only one small aspect of what I'm going to show you. And what you should do instead is really test for your get into one of these evaluation tests to be funded so that you can trade their money and get 90% of the profit. That's what you should be doing instead, testing instead of just empty simulating testing, because they both prove that your system works. All right, let's get into it. And again, I appreciate you being here. Just a quick about me. For the first 10 years or 15 years of my career, I was known as the trading plan author. I wrote trading plans for professional traders and others who paid me to do so. I've written books on it. I've spoken at many of the expos around trading plans, as well as my particular recent being the last 15 years, almost 20 years now, is the mental and emotional part. What I do is I try to build now a mental and emotional safety into my trading plans. We're going to show you a little bit about that too, because that's necessary for you. As Rob mentioned, I worked for Payne Weber. I also ran one of the largest option firms in the country in the 1980s. And when I left both of those entities, I started my own to say, hey, why shouldn't I do it for myself? And I've been doing it for myself ever since 1988. I've had my own entities. The first was the Hallett Group, where I was managing as a commodity trading advisor. Rob mentioned it, for qualified individuals, those that had 250,000 or more liquid. The accounts were 500,000 minimum, and I traded for 20% of that amount. 20% of what I earned, the profit. And I did it through my own IB. So I had a couple of ways that I was doing well for myself and for my clients. But then I decided, hey, it's time really to turn my attention toward helping traders with their mental and emotional capabilities. And so whenever I teach anything, I seem to dovetail into that, because especially with prop trading, without discipline, you won't be successful. Okay, you won't be successful generally without discipline, but especially when it comes to prop trading. All right, let's get into the presentation proper. I did want to show you a few of the certificates. I've been trading through a firm called Apex. Apex and I trade with them. There are many of these firms. As you see, I passed a couple. There's another one that I passed with Apex, and this is one that I passed with Top Step. Here's a certificate that they give you. This is the last request that I made. I only took $1,000 out of my earnings, and they give you a little certificate for everything to do, I guess, to keep you pumped up. But I just wanted to show you that I've done this. I'm doing it. I love it. I think I'm accelerating with it, and I think you could be doing this too if you just follow my footsteps and take your strength, add a few of the things that I'm talking to you about, and you can be there with this. This is a doable thing. Yes, most are not doing it, and they're not successful with it. They're not getting there. I'm going to show you how that's done. This is my email address. Please take a second and write it down. I'm a guy that really likes to communicate with traders, but I like to communicate in bullets. Don't write me paragraphs and so on. Just ask me a question, give me a little bit of background about what you're doing, and I will respond to you quickly. Not only the same day, but usually within the same hour, as long as it's during my trading hours. So go ahead and write that down. If you've got any questions about this presentation or anything in trading, go ahead and ask me about it when it comes, especially now, to prop trading. Okay, here is the traditional process to trading profitably. First, you create your trading plan. Okay, that's the first thing that you do. You create your trading plan. You can either create it yourself, or you can buy one, or you can go to one of these trading rooms and listen to what these people are saying and try to calculate and write down all of the points and create your own trading plan. I will say that as a creator of trading plans, I always found it's important to talk to the individual trader, because there are certain things that are in a trading plan that can be your Achilles heel without you knowing it, because it's on the opposite side of it's on the weak side of your trading discipline and not on the strong side. Again, I try to create things that are relatively generic, but I always include things that I call nuances, where you can adjust them for yourself. Enough said about that. The first thing you do is create your trading plan. The second thing that you do is back test your trading plan. Look at how it would have done if you had been running it. Now, there are weaknesses to back testing, of course, because it's easy to say, I should have done that. Yes, I would have done this, I would have done that. But in the moment, before you see what the future is, very hard to imagine what you would have done. The third step would be to forward test, okay, via simulated trading. So You can sim trade. This is the normal sim trading where you can do it one of two ways. We used to have to do it by looking at a static chart and starting on the left-hand side of the screen and going through. And now, of course, they have ways that you can roll out the future, start in the past, deeper in the past, and roll out into the more current past to see what would have happened. It's a little bit more valuable, but still, when you don't have anything on the line, your mental and emotional capabilities are pretty much there. You're not being stressed, okay? But you're forward testing your trading, and then you take that huge hurdle and and then you fund your account. This is, I'm going to call this a 10-foot hurdle. When you go from testing, from creating and back testing and forward testing and saying, now I got it, I'm ready to risk my own money, you fund your account. Okay, the hurdle here is that when you're trading your own money, there's a lot of stress, and that stress brings up the cortisol level, which is the cause of you jumping off your trading plan to be more safe or try the next thing, whatever reason you conjure up. I think trading will show that you have a pretty good memory, a pretty good creativity. The brain can create all kinds of scenarios that you think you're about to step into. So when you go from risking no money at all to risking your own money and then trying to stick to your trading plan, that's a big step. And this is the basis for why I believe that sim trading is going it's going to be 6 feet under very shortly, or just like 6 feet under. There are going to be very few people doing it when you have the alternative of prop trading. So when you get all of this done, okay, you're going to one of two things are going to happen. You're going to make money, or you're going to burn your money. You're going to lose money. Now you've heard the numbers before, that 10% of traders win, and I think that number actually recently, I saw some recent studies, it's a little bit lower than that. But I don't want to depress you here, because the difference between the 10% that win and the 90% that struggle and burn money is really the things that I'm talking about here. And really, you have to please listen to the end, because I want you to be in that. I want you to be in that 10%, and it's doable no matter where you are now. There is one thing I want to ask you. What is the dollar number? How much money in the past have you given up? Have you lost, as far as, say, for the last year or two? I want you to kind of think of a number in your head. I'm not pinning this on you that I know you're probably losing or struggling, but if 90% of traders are winning, are losing, then I know that the high potential is that you're either struggling or you're actually losing money like gangbusters. And so I want you to just keep that number. I'm going to make a point about this. Just remember how much you've lost in the old way of the traditional process of trading profitably. Okay. The better process of trading properly looks like this. Properly and profitably. Same thing, you create your trading plan, you do your back testing. That's the same. But when you get to the forward testing, you want to do it through these funded prop accounts. Why do you want to do it through that? Because you're actually testing with a little bit of pressure. You have a goal to be funded, whether it's a 50, 100, 150, they'll go all the way up to 300,000 to fund you, at least in Apex. And I mentioned Apex a couple of times. You saw my trading, you saw my email up front, and I have discount codes for Apex. Actually, right now they're offering 80% off. So if you want that code, let me know. Just write me, and I'll send you the code so that you can, instead of paying $200 a month while you test, or $300 a month while you test, for a $150,000 account, you'll only pay $60. And if you want to test for a $50,000 account, you're only, instead of paying $160 a month, you're only going to pay $30 a month. So you want to keep those fees as low as you can in the beginning as you learn how to test for these. Some pass it the first month, some take 2 or 3 months, but usually not longer than that. Forward test via being funded by a prop trading firm. This this gives you a little bit of a lower hurdle by having a little stress and passing and getting funded. And I'll show you what passing means in a second. But just to earn enough money in that trial account, in that fake account, in the test account, to pass, to be funded, that's your goal. It's a hurdle. There's a little stress there. This way, when you go to get funded after you pass your evaluation, you're going to let the prop firm fund your account, and so you're risking their money, not yours. Okay, that's a much lower hurdle from the standpoint of following your trading plan than the traditional way where you're risking your own money. Okay, now listen, you don't want to waste your time. You don't want to get funded and then blow out that account and have to reevaluate again. So there are hurdles along the way in anything that you do, but it's such a dream to think that they will give you 50, 150, 300,000 to trade and give you the lion's share of the profit. They're doing that. I chose Apex because they've paid out the most money. They've been around some of one of the longer ones, and they've paid out $3 million last month to funded accounts, of which I got a little bit of that. Not all of it, darn it, but some of it. So I wanted you to, just understand that this is my theory, that the fact that that this hurdle to go from forward testing through prop trading evaluation and then moving to their money, these are much lower hurdles to jump. This is more of a 3-foot hurdle than a 10-foot hurdle in the traditional way. What does that mean? It means that once you start trading, you're much more likely to pass and be successful because the strain is not there. Your cortisol level is low. So when you create this situation, two things can happen. Of course, you can make money or you can lose money. And I made that a smaller icon there because you're losing their money, and therefore it doesn't hurt as much. But you're also losing your time and effort, and then you got to go back and test and so on. And there are some fees. Now, even with trading, prop trading money, only 10% win on any kind of a consistent basis. 4 or 5 months of being paid before something happens, and you got to retest quickly to get back on track. Okay, still 90% of those who are trying to fund lose. They don't get funded, or they get funded quickly and they blow out that account because they're hopping off their tested trading plan. And there are fees along the way. Okay, you're paying an evaluation fee every month. You're paying a monthly stipend in order to test, to be in the evaluation. If you blow out that testing account, that evaluating account, you can easily reset it for $80 or $100, depending on who you're working with, the prop trading firm that you're working with. So there's an evaluation fee of a few $100. There's the reset fee, and then after you pass, there's a small fee. With Apex, it's actually pretty negligible, and it's only one time if you choose one particular way. It's not a lot of money, so I was always surprised. It's almost no charges after you've passed and start earning that 90%. Okay, but I want you to compare. I want you to compare those kinds of numbers that I'm talking about: $200, $300 a month for an evaluation fee, and if you get 80% off, call it $30, $80. $100 a month for the larger accounts. Your reset fees, maybe just kind of fantasize what that would add up to. Is it anything close? Is it anything close to what you've been losing with the traditional way of trading, what it's been costing you there? And the answer is no, most likely. Okay, it's a much better way to get into trading if you can trade. You got to prove that you can trade. I believe that the vast majority of traders, and I mean probably 80 or 90%, who are attracted to trading and the idea of it and the process of it, are capable of winning. They're capable of winning, and therefore it's, I'm sorry, that's should have turned off Skype there. The idea is that it's doable for you, and I want you to put that in your mind because likely it is very doable for you. All right, here, let's get into some of the things that you're going to need to do. Two things to pass the prop trading evaluation with these. These are the two major things that you need to follow in my footsteps. First, you're going to have to think and act like a professional trader. And I'll give you a hint. You'll need some discipline as part of that. You'll need strong discipline. It's not out of your control. If you have the right trading plan and you take advantage of some of these insights I'm going to give you, this is a doable thing. And you've got to act and think. And I'll mention as I go through the rest of this presentation, and I'm going to move pretty fast here, so please stay with me. The idea here is that you want to think and act like a professional trader. The other thing that you're going to need to do is you need to adjust your current trading plan to flow with the restrictive prop trading rules and at the same time reduce trading stress. Okay, I'll say that again. You need to adjust your current trading plan. I'm not asking you to go out and I've got a trading plan that I built just for passing prop trading. That's another conversation. If you have a current trading plan, I'm going to give you some insights right now on how to adjust your current trading plan to flow with the restrictive prop trading rules and at the same time reduce your trading stress. Okay, and here's the first insight. You're going to need the right kind of trigger. Okay, in order to be a successful trader, I have found for most people, since the vast majority of traders have an issue with patience, you need the right kind of trigger. It not only has to be a reliable trigger, where you test it where you've done your testing, as I've mentioned to you, and it gives you the right results. Okay, the majority of the time, but it also has to occur frequently. It needs to be a frequent, reliable trigger. You need both in order to keep that cortisol level down. You don't want to have to, because when you're waiting for a trigger to appear and it only appears infrequently, you start to be creative with your mind and start talking yourself into trading other trades that do not fit exactly your trading plan. So you want to stick to your test. You've got nothing if you haven't tested it, and therefore you don't have a trading plan if you're not following your tested trading plan. Okay, so you need a frequent and a reliable trigger to pass, I believe, And listen, the more trades you have, if it's a good system, the quicker you're going to make money. I think as I get older, the trading plans I write, I have a penchant toward getting the results quickly. Listen, we don't have a lot of time to waste. We want to do this. We want to make that profit now. So frequent, reliable trigger. And then there's a basic trader's dilemma. When a trade is off to a good start, do you take the profit or let it run? Okay, so here's a tip that I'll give you, another tip that's off schedule here. What happens is when you get it off to a good start, your mind starts to think, this could be the big one. You're always looking for the big one. I have not met a trader, and I'm included, that doesn't think that when a market starts to race in your direction, that this could be that big trade of the year, that you'll be like, look, there are resistances and supports all along the way. It likely will not be that, but you start to make that story up. So what do? You want to be involved in case it is, but you don't want to be the trader who lets it run and then have it come all the way back and you give back your profit and then some. Okay, so what I suggest is that you take on multiple positions. I won't get into exactly position sizing. That's a big topic of mine, position sizing. But if you just take a minimum of a couple of positions, okay, when you have your frequent, reliable trigger appear, then you can treat one as the scalp, where you can take money that gives you that nice pop, that gives you that good run in the beginning, and then you can leave the other one on and trail it with a stop responsibly. And some other discussion, I'll show you how to do that if you early don't know. And let that profit run to that dream, because one of them is going to be that dream run. So even though it's likely the one you're doing right now is not. I hope you get my so there are micros now. It used to be harder to do that in the old days. Now you get the micros and the minis, and you can have a very small contract size in the futures market, especially. So what you want to do is make sure that if you have that frequent reliable trigger, and another important feature of the trigger, not only frequent and reliable, but when it works, the majority of the time it's going to give you that pop, so that you can take that first quick profit, that low-hanging fruit. Okay, enough said about that. You need a frequent reliable trigger. Insight 2 is you need to offset the hurdle of the drawdown rules and turn them to your advantage. Here is this is the $50,000 account for Apex, and I'm not giving you all the rules. You can read them yourselves. They're easy to understand. Apex has very few rules. They limit you to a maximum of 10 contracts, but you probably will never get there. I've never gotten there in the $50,000 account that I've qualified for. You need to make $3,000 before you let that equity go back down to 2,500. Okay, but I want to show you what and you have to find, and Apex does this, some other firms do this. I want you to be aware of this, okay? Let me give you 2 examples of how this drawdown, this red line, I call it a red line, because once you hit the 2,500 drawdown, you've blown out the account, which is okay, because you can then reset the account, as I've mentioned it before, okay? So here is 2 kinds of the drawdown method. The first one is the P&L, when you offset a trade, okay? You start with, here's an example. You start with the 50,000, it's your first trade, okay? You're up $1,000 in open trade equity, okay? You're up 1,000, but you watch that 1,000 and you don't take it, and you close that trade at break even, okay? Some of the firms measure that drawdown just like it sounds, where at the end of the day, you could have had a nice profit. You didn't, you let it break even, but that red line is still $2,500, okay? The fact that you didn't keep the 1,000 toward the 3,000 that you need to build, that's another discussion. But the idea here is that when you close the trade at break even though you had $1,000 profit and let it go, you still have the same drawdown level. But Apex and a few of the other, I think it's a really good thing, to tell you the truth, to kind of force you into not compliance, but force you into discipline, being a disciplined trader. And I will say that Apex, for instance, you only have to pass it once. Some of these others, and many of them, you have to pass the same motion twice, where you've got to make 3,000 before 2,500. So here's the other way they do it. Open trade equity, $50,000, same trade. You're up $1,000, but then you let it go and you close it at break even. With this right here, with Apex, now that number is 1,500. Why? Because they count open trade equity that you don't take. So what I said before about having at least a 2-position process every time you put on a trade, but multiple accounts, 5, 10, you need multiple contracts so that you can take some as that trade, as the trigger gives you that pop, and then let the other, because then if it comes down with a stop, yes, you've lost some money back, but it doesn't hurt you because you've added money to bring the total up, and then you've given some back. You still wind up with the same trailing threshold. I won't go into this more, except for to give you that dynamic. I don't want you to turn you off with firms that have this OTE measure, because I think it's a better measure, to tell you the truth, and people will argue with me, but believe me, I have trained and written trading plans for thousands of traders, probably 1,000 traders, that maybe not thousands, but at least 1,000 traders over my career, and I can tell you, those that have that would qualify for something like this, would appreciate the discipline that this builds in, knows that it's taking you forward, not backwards. A lot of saying, well, I will not do that. They count it, and I'll go with the other one. No, they have other rules. Listen, all of these trading firms are making money, and if they're making it a little tough on you here, like Apex does, they have no other rules. In other words, there's there are other rules that other trading firms have that can handcuff you a bit. They don't have that. And so I'm going to let you compare those rules, but know that in the end, all these trading firms have the same bottom line outcome that they're looking for. They're giving you some, taking some as far as stringent rules. I like this stringent rule here because if I'm willing to accept it, and I am, and you should be too, then you don't have all those other hoops that you have to jump that are, I think, more hurtful than this. Okay, I just wanted to give you this, something I want you to watch, but you'll need to offset the hurdles of the drawdown rules and use them to your advantage. I've given you a tip here, a couple of tips on using this to your advantage. There are more that I want to give you in my offer at the end, which you won't believe what I'm going to offer you. It's not my usual offer, okay? As if I have a usual offer. Here's my third insight. Run your trading plan like a business. I talked about resetting. How close to the red line are you coming? Do you need to go to reset? In other words, if you in this example here, if I'm already down, if I make a couple of trades and I've lost $1,500, I'm $1,500 down, and so I have another $1,000 before I reach the maximum. Is that a time that now I have to get back that $1,500 that I'm down and then make $3,000? Is that worth doing, or should I reset and start over, give them the $80 and let me start over? There are levels and ways of thinking that make resetting right or wrong. And I have gone through enough and helped enough people to coach you on what that is. So how close to the red line do you need to go to reset? That's something that you're gonna, and every business has a business plan that would, in your business plan for your business here in trading, you're going to include when you reset and when you don't, okay? And then the other insight is that in trading like a business, there's many insights, and I've written papers on it, and I'll be, my clients can just ask for that and I'll give it to them. This is a long-term, I want you to think long-term on this. It's a business, okay? And you want to have, again, you want to have multiple accounts. Why do you want multiple? You want to test for multiple accounts. Why do you want to test for multiple accounts? Because if you blow out, if you only have one account, you blow it out, your income stops. If you have 3 or 4 accounts and there's the right number for your situation, I can't go through what it is, but all I'm going to say is that you want multiple accounts because you don't want to rely on one stream of income. A very close friend of mine who's done very, very well financially that I go to for my advice, one of the first things he told me 30 years ago, multiple streams of income. In this case, when you qualify for 3 $50,000 accounts or $350,000 accounts, I have a preference for a certain account that you should be, size account you should be trading for, and so, but whatever accounts you qualify for, you want several of them. There are tools that will allow you to hit the button once and put the same contract and in different contract size, 3-in-1, 2-in-1, just a single contract, another with one press of the button. It's like a multiplier. So trading multiple accounts is not as horrible as it sounds, but you want to use your position sizing to adjust the exposure in each of those accounts. And at some point in some other discussion, I'm going to help you to do that. But you want multiple accounts. So how many too few, how many too many? You're going to have to figure that out as you go along. This is something, or if we can work together, we can help you. But you want, but I just want to say multiple accounts. So these are insights. You got to run it like a business. You're in business here. You got to look for income streams. You've got to reset when it's right. You've got to use their rules to your advantage because you're running a business. All right, I want to offer you something right here because we only have about 10 minutes left. I want to show you what I have here because I want you to take advantage of this because I'm about to show you a price that you won't believe, but maybe you will believe it. And it's not thousands of dollars, not even close, not even close to 1,000. It's a program that I put together. Actually, I put it together for not only those that are just starting with prop trading, but for those that are prop trading, have struggled, and those that have even bought my prop trading course because it has even other deeper insights. So how to build a substantial long-term income with prop trading. This is what I'd like you to consider purchasing. Okay, there are 5 pieces. Here are the pieces. The first piece is an overview and clear advantages of prop trading. I want you to understand the game you're in. Okay, it's not a game. I shouldn't use that term, but a lot of, you know, if you want to think of business as fun, and I try to do, it's the game of business. Okay, overview and clear advantages of prop trading. There are 5 videos. These videos are not long. They're only about 15-20 minutes long. Maybe the longest one is a half hour. But so I quickly and concisely bring you to where you need to be. You'll understand how prop firms make money, what I've given you kind of hints here, what the prop trading rules are, and why it spells huge opportunity for the disciplined trader. Again, there's a lot in that sentence. You got to be disciplined. We've got courses that help you with that are, again, not inexpensive courses that can help you with your discipline, that use the newest technology. So you need to be disciplined, but I want you to understand that you're dealing with a huge opportunity here, and it is true. Don't let people take this away from you and say, well, they'll never do it. How can they give you the? It's all noise. It's all noise. It's happening for me. It's happening for the 10% that just got paid $3 million from just one firm, the largest firm, of course, and I think the best one, Apex. So, and I don't represent them except for to try to drive you to the right. I like Top Step too. That's the first one I dealt with. But I really liked some of the things that were going on in Top Step. I mean, I realized that Apex was giving out more money, and, you know, listen, it's all about results, and in the end, the firm that's giving out the most money must be a pretty good thing. That's what I think, anyway. But it doesn't matter which firm you go to. The first piece is to understand your opportunity. The second piece is the importance of the right kind of trigger. I've mentioned a few things here. You need the right kind of trigger to pass the evaluation with ease. You're going to discover in the second video the best win ratio, and you'll solve the common trading dilemma, a couple of them at the same time. I've given you one of the dilemmas, but you want, this video is an important video, and it's all about getting into trades properly, because you're only doing 2 things: getting in and getting out. Okay, and I want you to understand the best way to get in, because this is the setup for opportunities. Okay, the third piece is how to handle the drawdown rules, what I showed you about those drawdowns and that red line, so that you can trade with relaxed confidence. I trade without worrying about the confidence. You're going to understand how to keep your drawdowns low, and you'll compress the time needed to pass the evaluation. Now, it took me 10 days to pass the 10 business days, and I can't trade. Sometimes I can only trade, you know, 10 minutes or an hour or whatever. I'm like you. I'm doing other things probably. If you're dedicated to this and you can trade hours, 8 hours a day, now that may be 7 days for you and not 10 days. But I did it in 10 days for 50,000. The 150 that I show you took me 22 business days to do it. So it took me a month to do that. But that's the kind of thing, you know, if it takes you double what it took me, because you haven't been trading for 40 years, it's going to do it. But these fees, again, they become negligible when you can pass in a short period of time. Okay, so I want you to know how to handle the drawdown rules, because that's where the stress comes in. When you get a couple of losing trades, and it happens in every trading plan, you come down to that red line, you start to freak a little bit, and that's when you start to think maybe there's something else I should be doing to kind of turn this plan around. No, you have a plan. I'm going to show you how to handle the drawdown rules so that you can trade with relaxed confidence. There's one basic rule that overrides all others, but I want to show you how that, I've mentioned a lot about it. The fourth piece is how to run your prop trading as a business. I've mentioned it here as an important element, and it is a very important element. You've got to get serious. You're not doing this as a game. It's not you're not playing around. Whether you're trading for consistent retirement income or trading to diversify your portfolio, knowing which funding amounts to test for. Do I test for the 50? Do I test for the 100, the 150, the 300? When not to reset your account. We've talked about the importance of knowing that, and the proper position sizing, which I haven't mentioned here, but position sizing is so key to any trading plan. It's the most ignored element, but all of that is going to, you do that right, it spells a nice steady income stream. Okay, so I want you to run this as a business. I'm going to show you how to do that. Okay, I'm going to give you the tips, the hints on how to do that. Okay, and then The fifth and final piece is exactly how to get funded in 10 days. Now, it's a wrap up. It's kind of a combination of all with a couple of extra elements. And I give you a blueprint of how I got funded in 10 days for a $50,000 account and $150,000 account in 22 days. And here's where we put it all together and make you the next funded trader. Now, it's one thing to get funded. Listen, most funded traders, somehow they let loose a little bit. They get a little loose with their trading plan, and they blow out that account. They got to get funded again. So I want you to concentrate first on fund before you start really trading hard. I want you to fund several accounts. This way, it's taking the pressure off. Listen, I'm starting to get into the course, but there's a lot of things that I can share with you from my experience and from me doing this. You're going to hear a lot of speakers today, and they're going to have a lot of good trading plans. And I would stick to those that have done it, that are doing it. That's the way I feel about when I deal with others. I want you to feel that about me. I'm here to help you. I hope you can feel it in my voice. I want you to get funded and do this. It is doable. It's happening. Here's my offer to you. Well, before I give you my offer, I want to this is a new client. Clark said, Norman, thank you so much for your expertise and insight on prop trading. After blowing out 2 prop auditions for excess drawdown, I now see how right you are. I'm back in the game and staying disciplined. Clark, he's a trader who's a natural fighter. I love this guy. This is the kind of guy that can do very, very well. If you're a fighter, you're like Clark, you can do well, and it just takes knowing what to do. Here's Jeffrey, who said, since Norman created this course and also provided all of his experiences as well as tips and hints of how to do it as a professional, it has provided me with a new way to look at everything and a very good place for me to start. He's an experienced trader that's new to prop trading and that now wants to risk somebody else's money instead of his own. It's about the framing. It's about how you frame things in your mind. I'm going to talk more about that at some other time. I haven't traded in many years, and now I'm retired. I've decided to start over. Thank you for your help in these videos. Joshua, I actually have a meeting with next week on he has a couple of questions. I'm going to meet with him. He actually owns our full course, the trading plan that I mentioned to you. But this talk is all about making the changes in the course in the trading plan that you have. Okay, if it's not working, then we can talk about my trading plan at some later date. So this guy's a comeback trader. Not only he's come back many times, but he has no prop trading experience, and he's really on his way. He's a very smart guy, he's like you, very smart. Okay, I just want to show you that people are doing this with me and having some success. Here's what I'm doing. I'm offering this, how to build a substantial, we're doing this as a business, long-term income with prop trading. Okay, the first piece, overview and clear advantage of prop trading. Second piece, the importance of the right kind of trigger to pass the evaluation with ease. Then there's how to handle the drawdown rules, very specific, so you can trade with relaxed confidence. The fourth rule is framing this like a business, and then I show you exactly how I got funded in 10 days for the 50,000 and so on, and 22 days for the 150,000. Okay, the investment is just $497. That is the price of the course when I released it about last month. And it got the testimonials that you have this is the second time I'm talking about it, but I don't want you to have any resistance to do this. Prop trading works. I want you to get into it. I want you to feel it and do it, but I want you to do it the right way. We're not talking about $497. We're talking about $197. $197. And I want to guide you to stay away from what you should be staying away from, because the aha that you saw in one of the testimonials, I can't believe I was doing that. You're right about that. You're going to see that a lot if you've been testing and trying to get evaluated, get through the evaluation phase and not being successful. You're going to say, oh my God, I did that. I can't believe I did that. You're right. This is the kind of thing I want to give you, the specific things that are different about getting funded than even in normal trading. They'll work in normal trading just fine, but you need to understand it, not only the business framing, but also some of the finities that you need. For $197, thedisciplinedtrader.com. I'm going to leave it there because you want to, discipline is not the most exciting word to spell. So thedisciplinedtrader.com /income. I think you can, if you're looking at it, I think you can actually click that that on your screen, and it'll take you right to the page. Use the coupon code INCOME. That's where you're going to get your 60% discount. Okay. Use the coupon code INCOME. TheDisciplinedTrader.com/income. I hope you join me. I hope we can do this together. Really enjoyed this I love to give this presentation because I relive it in my mind, and I relive some of the people that I've helped. So I'm reliving it for you. Live it with me. TheDisciplinedTrader.com/income. Use the coupon code INCOME. Thank you, Rob. I think I'm a minute over. Nope, within seconds over.
Norman, I got bad news.
Yes.
Our next presenter is not in attendance yet, so I'd like to ask you to keep going or take questions, or if you'd like to have a conversation about trading, one way or the other, we can do it.
Well, we can. Let's see if there's any questions. I want to dig deeper into the idea of prop trading. If we can do that here.
Feel free, and I'll send you a message in the admin chat if our next presenter does make it into attendance.
All right, let me see. We've got. I'm looking at the chat here. I don't see any questions in the chat. I may.
You want to go into the questions box, not the chat. The chat box is where you'll get a message from me.
I got you. All right, we've got. I'm gonna have to keep you with me because I see the. I see one comment here. Is there a specific trading plan? I have a specific trading plan that I use. It's a modified version of what we call loaded gun. If you want to email me about that, I can do that. But this course here, this $197 course, is how to adjust your trading plan, what you're doing right now, to include the right kinds of adjustments in order to have you slide through the prop trading. That's what that is all about. So that's what this is all about. Of course, I'm not going to be able to help in this course mention some of the things that are in our main course. But if you want to go to that, I think if you can write my email address in that chat so people can have it. I don't know if they're seeing the chat or not, but it's nhallett@thedisciplinedtrader.com.
I'll put it in the box.
Okay, great. Let's see if there's any other thoughts here on video. Let's see, is the trading plan comes in print or video or online with instructions or no? I don't know if you're talking about this. I'm offering you here the adjustments that you need to make to your trading plan that'll have you pass with ease, that you probably never thought of, and that I've experienced and have other people passing because of that. So but we do have a trading plan. Listen, people they realize after trying to adjust their trading plan that their trading plan maybe isn't very good. So they're asking me for my trading plan, of which I can show you. All you need to do is write me, the Disciplined Trader, and nhallett@thedisciplinedtrader.com, and I'll forward you the information on that, and you can check it out. But and the trading plan, actually, it's interesting that you talk about the trading plan coming in print. I offer what is called a simple trading plan. A simple trading plan is something that fits on one sheet of paper. And therefore, yes, it comes in print. It's printed on one sheet of paper. And yes, it's videos online. In our main course, not what you're looking at here, this is a static 5 videos of which you have email access to me to ask me questions and so on. But in the loaded gun offering, then what we're doing there is I actually give you 90 days of one-on-one coaching with me, where we can work one-on-one together. For as many times as you need to understand the simple trading plan loaded gun. So yes, you look through the videos and then we work together on it. Again, I like to work with traders when I can. Every trader is different and therefore I think you need to treat traders differently. It's just, some people have the patience of a saint, most don't, others don't. So I want you to start with this, okay? The $197 here. In fact, I will venture to say that if you start with this, and you'll have to remind me about this because I don't think I've ever said this, but if you start with this and understand how to adjust your trading plan with these nuances to pass the prop trading evaluations with ease, and you decide that you want to go further and buy my loaded gun simple trading plan, I will apply this $197 to it. So I'll only say it once because I kind of want you to forget it. For whatever it is, I'm willing to do that. Listen, I don't want money to be the issue. There are payment plans I can make for you. My course is not expensive. I run specials on it. And in fact, I'll be running the last special this month. Instead of the $19.97, it's going to be $9.97. So that's what my loaded gun trading plan is, the investment right now. So it's, again, I'm not going to, gouge you with, and that again includes the 90 days of one-on-one with me, as many times as you need to talk to me about it one-on-one. I mean, if you want to ask a question, I'd rather you email me. But if there's a depth of understanding, we should get on the call and we'll do a Zoom meeting. Okay. So just wanted to know about that. Let's see. Could not find the chat. Oh, you're in the chat right now. Which is the better day? Which is better? I guess all I have to do is double click that. Yeah, which is better, day trading or holding position for more than a day to pass? There's no better. It really is a matter of it really is a matter of your trading style and the time you have to trade. Let me say it this way, that when you do technical analysis, when you're doing you can do that analysis on a daily chart or on a monthly chart or a 5-minute chart. It's the triggers should work on all those trading times, and they also. But I will say that, and this is just by little hairs, the longer the chart term, a daily chart will work a little bit more accurately your process than it will on a 1-minute chart. 1-minute chart is probably the toughest to control. Things are happening quickly. Anything can happen in 1 minute. A lot less happen in 5 minutes. A lot less happen in 30 minutes. And generally, the market will come to more normality when we're dealing with a longer time frame. So it really is up to you. When you say better day trading or holding, I'm figuring when you say better, you mean which is more profitable. It's the one that you're more comfortable with. There is no better. I used to trade, I still hold some trades overnight, but the vast majority, 99%, 95% of my trades, I like to offset, because there's tomorrow and I don't want to be concerned about what may be happening. I'm not beyond, checking the market at midnight to see what happened when I wake up in the middle of the night because my dog jumped on my feet or something. So I don't want to do that. I want to separate my trading business from my trading life, and really you should too. So I offset most of my trades, and I think for most people that's the best way, especially to start out. You don't want to hold trades overnight. So I hope that helps you there. Let's look at here. Sorry, I meant this program. Okay, I hope I answered that question. But no, this is not a trading plan. I'm not giving you a trading plan here. I'm giving you adjustments to your trading plan. I'm giving you mental constructs. I'm telling you a way of changing your trading plan to accommodate your new vision of your trading plan as a long-term income business, and so on. So again, if you don't have a trading plan, just write me. You saw in the chat, you see the Hallett at thedisciplinedtrader.com. Just write me, and I'll send you information on the Disciplined Trader Mastery Program. I'm sorry, not the Disciplined Trader Mastery Program. That is our mental training program. But our loaded gun, which is really, I had several trading plans that I used to offer, but now I just offer loaded gun. It may be the best trading plan that I've ever created, and I'd like you to have it if you need it. But if you don't need it and you have a pretty good trading plan, but you're struggling with it, there are things that you need to do, that you need to include and handle your trading plan. That's what this is all about. I want you to pass this prop trading, and you can do it if you make these changes in your trading plan. Okay, let's see if I've which is okay, we saw that. I'm trying to, sorry, I meant. Okay, come on, Norman. Why don't you, Gallo, why don't you tell me what your concerns are? Because I'm trying to address you, Gallo. Let's see, it's a different name here. I'm hoping I'm not missing anybody here. Do you want to use the extra time to go, more detail on the second piece? Want to go in more detail on the second piece and third piece. The second piece is the right kind of trigger. Well, I think I've given you all that I can here. The rest are going to, require kind of who you are and how you trade and so on. But no, I mean, what I'm doing here is giving you the option, the opportunity to get deep in these areas, and I just want to show you what that means, okay, and how that's going to help you. But the actual changes, that's what you're buying here. That's what you're buying if you believe that it's worth it, okay. But if you have a specific question about these areas, just let me know and I'll try to address it. Okay, a bunch of thank yous. I appreciate it. Thank you. Thank you. Let's see. I see the disciplined trader income might be helpful. Okay. The disciplined trader for, yeah. Oh, yeah. I mean, I think it's, listen, like I said, I have people that actually bought that own loaded gun that really, they've kind of, what happens is they start to buy everything that I think can help them, which I think is great. And they buy this and it really improved what they were doing, because there's some in here, in this long-term income with prop trading offer here, I'm giving you some concepts to settle you down, to have you lower your cortisol level to follow your trading plan. And I'm not using in this particular case meditations or EFT, some of the things that we use in our other courses. I'm just giving you structures in your trading plan that you can apply to make that happen for yourself. Let's see if I've got any other questions here. And can you short low float with these firms? I don't know the answer to that. Some firms you may be able to, but that's something that I've never been asked that question. I don't know the answer to that question. How can prop trading companies make profit and why should I rely on them instead of looking to hedge my own investment? Well, I'm not sure about hedging. I mean, hedging is one thing, but if you're looking to make money on your by trading, prop trading, I'm sure whether it's acting as a hedge or whatever. But I think there are two basic reasons why well, first of all, how can a prop trading company make money? They're charging you for that $50,000 account. They're charging you, for the $50,000 account, they're charging, I think, $167 a month. It's $290 a month for the $150,000 account. Okay, they're charging all, so every month, since 90% of the people never get through it, they're just collecting fees along the way for no risk for them. They're not risking any money. They're just offering you the chance to test, and you get to fail and pay them every month. And you get to keep on resetting the account, and they keep on pushing the dream to you in emails. I know you may be, but try it again. The more you try, the more you learn. And they'll keep you. I know people that were trying to qualify for years, literally 2 years, where they're paying that monthly fee. Now it's good to get in on, like I'm talking about, with an 80% discount, of which I have a code for you if you want to write me. I have a code for Apex on the 80% discount. So instead of $160, you're paying $30 a month for a $50,000 account, and for $150, you're paying $60 instead of $300. So there are ways for us to try to get around it, which are cool. But in a sense, you don't want to pay any kinds of fees. But the fees, don't worry about it. They're making plenty of money. Okay, they're making, and they want the 10% of people to make all that they can. They want us to brag. They want us to hold these particular types of, I mean, the industry wants me to talk about how great prop trading is, so that you can get in there and probably lose, because they know that 90% of people lose because they're not disciplined, and they don't have these kinds of adjustments in their trading, in their normal trading plan, to work through, to make their their rules that work kind of against you to work for you. And that's what I'm doing here with this course, this $197 course. It's all about turning those rules that can constrict you and restrict you into something that you can take advantage of. Okay, so that's why you should be, that's really why. Trading your own money, I mean, if you're trading your own money, you know how much you've lost if you're in that 90%. You know how frustrating it is. You know what it is. Here, you get to use to lose their money, okay, and pay small fees along the way. But it's nothing. Those small fees are nothing compared to the money that you probably are losing. You've probably lost by trading your own money. It's just much more stressful. It's a 3-foot hurdle instead of a 10-foot hurdle. Okay. Okay. Next presenter has arrived. I'm going to say thank you for the extra time. I'm going to thank everybody who's already. People have already. I see we have a parrot there. Thank you all that have committed. I'm hoping you get in with me. Thank you again, Rob.
Norm, thank you so much for filling the extra time and presenting the death of sim trading. Prop trading is changing everything. I have to give credit where credit's due. Congrats on passing your evaluation. Great information, and I see you've done your due diligence as usual. It's always great to have you on Traders Quarter. Over 1 million views on YouTube. Ladies and gentlemen, Mr. Norman Hallett, and you can find him at thedisciplinedtrader.com if you're interested in being mentored by a professional trader with 40+ years experience. And I will say, Norman is my friend. I'm in his Facebook group, and he passes prop trading evaluations with ease. Look no further. Click the link in the chat box. Thanks again, Norm. Have a great week. Always a pleasure.
Thanks, everybody.
I just want to take an extra moment to thank everybody for joining us on Traders Corner. We had over 1,000 registered attendees today from all over the world, and we're very grateful that you're here. And that will bring us to the next presenter, who's been an active trader for 15+ years, focusing on equities, commodity futures, currencies, and options, focusing on analysis and trading using price action, institutional levels, and historic data to put the odds in his favor. He began working on a global trading desk at the Chicago Board of Trade right out of college, executing trades in large block order flow for hedge funds, banks, institutional investors, commodities trading advisors, and high net worth individuals. He holds or has held Series 3, 7, 30, 34, 65, and 66 securities and futures licenses. Here to present how I cracked the code to more profits with a simple 3-step strategy is Mr. Silas Peters of TradesTrending. Welcome back to Traders Corner, Silas.
Hey, good afternoon, Rob. How you doing?
I'm always good, and if you can't hear my 2-year-old's making himself known in the background.
Yeah. I feel like you got your helpers with you today. You got parrots and babies, and feel left out.
No parrot, just the little guy that's reached parrot mode and repeats most things.
Gotcha. Well, appreciate you having me back on.
Hey, no problem. Feel free to run through till 1:30.
Okay, great. Thank you so much.
Awesome.
Won't use the entire hour in 10 minutes, but hopefully I can get my point and objectives across to the crowd. I appreciate you having me back on the show. Always a good show. I know we've got a huge crowd today, lots of good education. So I hope everybody's paying attention. I'm going to do a quick audio visual check with everybody. Can everybody hear me okay? Type in the chat if you don't mind. Can you see my screen? Can you hear me? If so, we'll go ahead and get started here momentarily.
Check on both.
All right, awesome. Thank you so much. All right, so let's go ahead and get started. My name is Silas Peters. I appreciate the intro there from Rob. I'm the founder and head trader of TradesTrending. And how's everybody doing today? Anybody doing any trading so far? I've been trading crude, bonds, NASDAQ, S&P, and silver today. And markets are at an interesting inflection point, in my opinion. And there's constantly setups and opportunities around the corner for those that are patient. And I'm going to be showing you multiple examples of what this bread and butter strategy is, how I use it, how I've been using it for almost 20 years now. I can tell you that if it didn't work, I would not be using it, and I certainly wouldn't be wasting your time. So this unique strategy that I'm going to share with you today, it's what I call my 15-minute trading blueprint. And like I said, I've been using it for the last 20 years or so, absolutely crushes it. And the best thing about it is its simplicity. It's a truly mechanical, stress-free, emotion-free trading method that can be applied literally on any market or time frame. So let's go ahead and get to it. We must first take a moment to read the risk disclaimer as required from the regulatory governing bodies and our attorneys who require us to share. We know past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading securities, options, equities, futures, and Forex. Only risk capital should be used to trade, i.e. you can lose money trading. So now that you know that, now that you understand that, let's go ahead and get rolling here. Let me ask you, what do you trade? What is everybody trading here? I like to get an idea of the audience, who I'm speaking to. Do you trade stocks, options, futures, Forex, maybe even crypto? I trade all of these actively: stocks, options, futures, commodities, and FX. Do not trade crypto on an active basis. I have, I guess, quote unquote investments in crypto. I do not look at it. I view it more as a lottery ticket. But let's see, we've got futures, all of the above, FX, futures and Forex, stocks and stock options, ES. It's awesome. And the best thing about what I'm going to share with you today is its simplicity. It can be literally applied to any of these markets, and I do so every single day. So what I'm going to share with you is highly accurate, works in all markets, as I just said, works in all time frames, 99% mechanical, and most importantly, it's simple. And not only is it simple, it's also perfect for small accounts. My wife, who is a very intelligent individual, doesn't know lick about trading. She can identify these patterns. I've used this strategy with a $2,000 account, $20,000 accounts, even $100,000 plus accounts. I use this in every market situation, from the 08 financial crisis, roaring bull markets, traded it through debt crises, government shutdowns, presidential elections, flash crashes, and more. From scalping and intraday trading to swing trading for a few days to position trading for weeks and or months. You can do this with small or large accounts, and it can take as little as 15 minutes a week if you wish. Now, before we dive into all this, let me introduce myself, who I am, and maybe why you should listen to me. I'm going to introduce myself again. My name is Silas Peters. I'm a proud husband and father. These are my beautiful blonde-haired, blue-eyed beauties down here on the right, and standing, or in the left rather, standing here in front of my alma mater at the University of Alabama. 3 days after I graduated, I sold my car, packed up my belongings, and I headed north to the great Windy City, great city of Chicago. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. I was bitten by the trading bug and have never looked back. While there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, working with large block order flow for hedge funds, banks, commodity trading advisors. What does that mean? It means that we were placing, executing, and managing trades in the size of several hundred or thousand contract sizes, multi six-figure, seven-figure position sizes where a single tick in the movement of a particular market meant $300,000, $500,000. It was not for the faint of heart. I've also been a part of building and managing several futures and equity brokerage firms, managing operations, trading, back office sales, and support from the ground up. We built firms from scratch to brokerage units with several hundred clients and block trading for clients doing several hundred thousand figure stock share order size. Also worked for a private family office where we manage around $2.5 billion, covering everything from investment portfolios, tax and financial planning, real estate holdings, timber, farmland management, private jet leases, you name it. Also have or hold or have held these various futures and securities licenses. And then in 2016, I launched my publishing brand, where we developed a community with thousands of traders and investors that use the education tools that I've developed over the years to help them become consistent and profitable. And then in 2020, we launched our advisory firm, Blue Marlin Advisors, where I'm a partner, founder, and COO. Now, let's talk about my journey. My journey was not always easy. There was a learning curve. In fact, several obstacles and hurdles on the path to where I am today. The first step was obviously learning. School cannot teach real life experience in the markets. In the beginning, I made money. I made a substantial amount of money. Was I lucky? No, but ignorance and greed cost me my profits. I blew up an account, blew up several others in what I like to call revenge trading. Took a small loan of $4,000, grew it to over $50,000 in less than a year, only to give it back to the market. And these were extremely humbling experiences. I almost gave up, almost quit. Nothing seemed to work. But I went back to the very first trading setup I learned almost 20 years ago. That's what got me back in the game, because I was in a dark place. I got back on track, started banking wins again. I'd gone off the reservation looking for that elusive holy grail. But my journey ultimately led me back to where I had first started. So I went back to my roots, worked my repeatable process, and found overall consistency. Now, enough about me. Let's talk about you. Does your trading desk look like this? Anybody's trading desk look like this? This is a bad joke. I found this on the internet. I thought it was funny at the time because I feel it's what the perception of what those on the outside looking in think this is what trading is. Think this is what it's about, that we're surrounded by monitors, listening to Bloomberg, CNBC. None of this is necessary. This is not my desk. Now, I paired back to just a handful of monitors for my day-to-day trading, analysis, execution, and internet. Now, my desk did look like this in Chicago for obvious reasons, but all this does is lead to paralysis analysis and unhealthy eyeballs. Who here is or has been a victim of paralysis analysis? I'm raising my hand. Per Wikipedia, the state of overanalyzing or overthinking situations so that a decision or action is never taken, in effect paralyzing the outcome. Who here is or has been a victim of paralysis analysis? Now, we know that trading is not easy, but it can be simple. We can simplify. And so I see a lot of you have been there, done that, got the t-shirt. And my goal for you today, my agenda, is that we're going to learn a simple and mechanical setup together that is repeatable regardless of the market or time frame. This will remove the analysis paralysis that you may be facing. Now, let me paint a quick picture. Everyone knows that a particular market doesn't go straight up forever or straight down forever. So they go up and down in waves or certain time frames. And literally trillions of dollars have been made by smart traders by recognizing these trends. And at the same time, trillions have been lost by those who think they knew what they were looking at, got it wrong. So right now, let me show you how to get on the right side of these moves. Because I think the most powerful thing that can be done is show you proof. As they say, proof is in the pudding. Let's learn about this exciting strategy together right now. I'm going to talk about and show you a setup where you could have identified shorts here at Halliburton, shorts here at Halliburton, longs here at Halliburton, shorts here at Halliburton. This is a daily time frame, but it doesn't really matter. We're talking plus 10%, 8%, 12% moves. May not sound sexy when you tune into CNBC or get some penny stock newsletter about gains of 800% or 1500%, but these moves can mean up to $1,100 on 100 shares, or $600 on 100 shares, or $2,000 on 5 option contracts. I think you get the point. Bristol Myers, I'm going to show you how you could have identified these advanced. That short here, that short here, that long here, that long here. We're talking 3.5, we're talking 6, we're talking 9% moves. Equates to $400, $800, $900 on 100 shares. These wins all start to add up. Lockheed Martin, we got a 5% move, 6%, 6% move. Who here could have identified these shorts or these longs by buying or selling the stock? Buying call options, selling put options. I'm going to show you. And I want to prove to you it works in all time frames. This is a gold chart 30-minute. This is an $800 per contract move. This is a $450 per contract move. Day traders, 5-minute chart of the E-mini S&P. We've got 3 points, 8 points, 6 points, and 10 points, $1,300 plus in a single contract in a single session. I'm sure you're starting to see the potential here. 30-year bonds on a 610 tick chart. We've got 4 ticks. We've got 7 ticks. That's $218 in a single session just with one contract. Who here would be happy with $218 a day, $500 a day, $1,000 a day, maybe $50 a day? Well, this pattern is responsible for identifying these moves before they happen and let you know when to get out. So we know, as I've said, trading is not easy. It is not easy at all, but it can be simple. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, systems, setups, you name it. I tried all kinds of stuff. Indicators, red light, green light systems, Greeks, alert services, robots, most of it was garbage. But the single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos and indicators, and started focusing on pure price action. Pure price action led me to seeing one simple pattern over and over again. And guess what? This is when it clicked. This is when it all started clicking. So if you're sitting here as a new trader or a struggling trader or even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. Because I'm telling you right here, right now, that this is a simple mechanical setup that anyone can learn. And you will keep this in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make you an offer you can't refuse. How you can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we will be discussing today is the 1, 2, 3 pattern. Who here is familiar with the 1, 2, 3 top or 1, 2, 3 bottom pattern? Who has heard of the 1, 2, 3 before? Probably a lot of you. I'm seeing a lot of yeses, a lot of whys, some no's. This is one of the most fundamental technical patterns in the textbook. We're talking technical analysis 101, but highly, and I mean highly, overlooked by most traders. And you're going to be kicking yourself on why you're not using this simple pattern for your day-to-day trading. Let's talk about the setup. Setup is price action based. And guess what? Price action is king. And speaking of king, did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's does tons of research. They look at maps, population counts, traffic patterns, competitive analysis, on and on until they find the perfect location for a new store. Burger King approaches it differently. They wait to see where McDonald's opens up a store and they open up one across the street or down the block. They get the same result with a lot less time and effort. So when we relate this to trading, we can let all of the Wall Street traders and institutions and wealthy investors do all of the research on which markets to buy or sell. But all we have to do is look at the price action, which takes into account all of their fancy processes. Basically, we are the Burger King to Wall Street's McDonald's. Now, the setup, again, is price action based. The pattern is comprised of a low, a higher high, a higher low, and a break of that higher high in the case that we're going long, inverse if short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a trend from down to up on a break above the 2 or B point. The strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can be found within the trading range, and I will stress that it works extremely well at significant areas of support resistance, supply and demand, other high probability technical patterns like head and shoulders tops, bottoms, double tops, bottoms. Let's take a look at the mechanics. Now, let's start with identifying 1, 2, 3 bottoms. When we're looking for 1, 2, 3 bottoms, that means that we are bullish. We're looking to go long. We're looking to buy that stock, buy that market, buy call options, expecting it to go higher. So as the market starts to head lower and finds that last support and trades up, we have our number 1. As the market retraces and pulls back, we have our number 2. And as the market stops printing these higher lows and pulls up, we have our 3. We have a 1, 2, 3. 1, 2, 3 bottom traders are looking to get long on breaks or closes above the number 2. Let's look at the 1, 2, 3 top. Same setup, same principles apply, only inverse. When we're looking for 1, 2, 3 tops, we're looking to short. We're looking to be bearish. We're looking to short that market by put options, expecting that market to go lower. Now here, we have the market trading higher. We find that highest peak or area of resistance that gives us our number 1. As the market retraces and pulls up, we get our number 2. And as we pull up and stop printing these lower highs, we get our number 3. 1, 2, 3 top traders are looking to get short on breaks or closes below the number 2. Now, one of the great things about the 1, 2, 3 setup is you don't have to really worry about the first 2 legs. It's not like you have to be glued to your screen watching the setup, unless you're, of course, maybe scalping. All you have to do to cash in on the 1, 2, 3 setups is spot when it's where it's about to go past the number 2 point. It's that simple to do. Now, let's start with some chart examples of the 1, 2, 3 top. Let's not waste any time because seeing is believing. So here we have a daily chart of the 6A. This is the Australian dollar futures. If you don't trade futures, you can look at FXA, the ETFs that tracks the Aussie. Forex traders can look at Aussie US, as you'll see the exact same patterns, the exact same setup. So this is a daily chart. Now, we don't have to use a daily chart. We don't have to look for 52-week highs or 52-week lows. We'll talk about ways later that we can kind of tighten that up or dial it in to find more opportunities. But for these example purposes, let's focus on a daily chart with 52-week highs. So we see a red 1 circle. Why? Because it's a 52-week high that gives us our number 1 point. We retrace lower, we pull back, and we come down. We have 1, 2, 3. Now, price action could have traded as high as up here as long as we didn't take out the number 1. So we have a 1, 2, 3. We already know the rules of the system, right? We know that we're looking to get short on breaks or closes below the number 2. But what about the other important ingredients of the recipe? I know where I'm getting in, but where is my risk, or where am I taking profits? Our initial stop is going to be above the high of the number 1. Our initial target is the distance between the high of the 1 measured to the low of the 2 measured down, which is about 225 ticks in this example. So you will see right off the bat that it is a 1-to-1 risk to reward ratio. That's okay, but we can do better. It's very important to let the market materialize in its anticipated direction. So as we start breaking below that number 2 and we start taking out support, where's our next logical area of risk? Where is our next logical area to place our risk? Above the number 3 high. So as we take out these support levels, we can move our stop above the number 3 high. We quickly cut our risk now by 50, 60, 70%. Okay, let's look at a daily chart of Walmart. We have a new number 1. Why? It's a 52-week high. We have a 1, 2, 3. We know weeks, days in advance where we're looking to get short or enter. We know our initial risk is above the high of the 1. We know our initial target is the distance between the high of the 1 measured to the low of the 2 measured down, which is about $5 in this example. We know that days in advance. We break down and then we trade down and meet our profit objective. Let's look at 1, 2, 3 bottom example. Same rules apply, but only inverse. Now, this is a 15-minute chart of the E-mini S&P. On an intraday chart, whether it's a tick chart, a 5-minute, 10, 15-minute, does it make sense to look for new 52-week highs or 52-week lows? No. So on an intraday chart, we're looking for what we call session highs or session lows. What does that mean? Well, if you're not familiar with futures or Forex, they trade virtually around the clock, trade 23/6. So wherever you start your trading day, whether that's the 9:30 Eastern New York cash open, maybe it's the 3 a.m. London session, maybe it's the last hour of the day, You're looking for new highs or new lows of that session. So we have a new session low as indicated by the number 1. We have a 1, 2, 3 bottom. Let's talk about a couple of entry methods. An aggressive entry might be working a buy stop a tick or two above the number 2 high, and you're triggered into the trade. A couple of alternative entry methods is to A, wait for that market to come bust up and retest, or do what we call a second pass or a hook. This is my preferred method. Now, if you work a buy stop, sometimes the market will trigger you into the trade and you go up and reach your profit objective. That leaves the person waiting for the retest or that second hook in the dust, leaves you at the train station. That's okay. There's no reason to get your feelings hurt. There's going to be plenty of other opportunities. So by utilizing this second pass method, this can help prevent you from entering a false breakout. Sometimes we'll come up and bust up, and then the market will roll back over and stop you out. So this can be a nice second entry confirmation method. Let's look at a weekly chart of Apple. A hell of a way to catch some position type moves. Here we have a multi-week low. We have a 1, 2, 3 bottom, double bottom as well. We get our confirmation on this big bullish break above the number 2. We trade sideways for a few weeks. We come back, retest, hook back above. That's our confirmation to get long Apple. How? We buy Apple stock, we buy call options, sell out of the money bull put credit spreads, whatever your flavor or style may be. Now, I hate to burst your bubble. Let's talk about failed trades. There's nothing guaranteed in life. There's no holy grail in trading or in life. This is a trade I probably took in my live account. Here we traded higher. We made a new session high. 1, 2, 3 aggressive traders would have got short on the initial break below the number 2. If you waited for the hook method, you came up, comes back down, and you enter here. You're maybe up 1 or 2 points. If you exercise any type of money management, you move your risk above the number 3 high, you're stopped out as the market reverses. If you sat on your hands and didn't do anything, you get stopped out above the number 1 high. Guess what? We get a new count. This high is greater than that high. We get a new 1, 2, 3, and we get an opportunity to short here, which ends up being a profitable trade. Let's talk about no trigger or voided trades. It's neither good, bad, nor ugly, and I'll tell you in a second why I love these particular setups. Here we have a 1, 2, 3 bottom. We're looking to get long here. Put the market trades lower, takes out that number 1 low. We get a new 1, 2, 3. Looking to get long here. Market trades lower, takes out that number 1 low. We get a new 1, 2, 3 bottom. Looking to get long here. We're finally triggered in that last trade. Can anybody tell me what is likely happening in this situation? We've got price action making lower lows, 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 lows. But if we had an oscillator, such as a MACD, stochastic, RSI, whatever, it's likely doing this. Higher lows, higher lows, higher lows. That is called divergence. So when we have that, that is extra icing on an already high probability setup. Now, let's talk about 1, 2, 3 pattern trade management. Again, the confirmation of entries on a break above the 2 or B point for a long, or a break below the 2 or B point for a short. Now, exit strategies. I would say if you're only able to trade one contract, whether it's one futures contract, one option contract, one share of stock, whatever, make your initial target the distance between the 1 and 2. If you have a setup, a 1, 2, 3, and your target is right up here, it's uncanny how more often than not the market will come to that target exactly and then reverse. If you're trading multiple shares, multiple contracts, I'd say, hey, take a third off here, half, 2/3 of your position, and then you trail your balance, trail your position, however you choose to do so. Exit strategies come a dime a dozen. If you want to use PAR-SAR, trend lines, moving averages, Fibonacci, choose what works best for you. I like to target good old-fashioned supply and demand levels. Okay, so there you have it. Now, I've showed you this setup works in any market, whether it's pips and Forex, Pepsi stock, potash or pot stocks, pork bellies, or the Polish zote. I've also showed you that it works on any time frame, whether you're a scalper, tick trader, 5, 10, 15 hourly, 4-hour, daily, weekly, and more, and on any trading style. I'm going to take a pause here for a moment. Tell me what everybody's trading style is. Are you a position trader? Are you a swing trader? Are you a day trader? Are you a scalper? Let me see where everybody is in the chat. So we got swing and position. We got scalpers, tick traders. We got all, depends on the market. Not trading yet. My point is that you've got to figure out what your bread and butter is. You've got to figure out what your bread and butter is, because I'm not going to sit here and tell you that this only works on a daily chart of Apple, or a 1-hour chart of the NASDAQ, or a 2-minute chart of Bitcoin, because it's not. It works on all markets, all time frames. It's a price action setup, and price action is universal. These are some of my favorite time frames: 5 and 10-minute, hourly, 4-hour, daily, weekly. I also like the 1 and 2-minute, and I also like the 6-10 tick if I'm able to focus on scalping. But only you can determine what your time frame is. We're all coming from different places. How much time you have available, how much time you want to commit in front of the screen, your capital, risk tolerance, etc. Okay. Now, you've seen the proof. Let's look at some real trade examples. Not to say that what I've been sharing were fake examples. They were real by all means, but let's look at some trade examples we've used in some of our services. Now, this is a chart of crude oil. You guys and gals can look at all this on the right-hand side. I'm going to be focusing on the chart and work myself from left to right. So, daily chart of crude oil. You don't trade crude, look at USO or other energy markets, energy stocks. Again, the same pattern, same setup. So here we have a 52-week high, as indicated by the red one circle. Excuse me. We've identified a 1, 2, 3 top. We know in advance that we're looking to get short on breaks or closes below the number 2. We know initial risk is going above the high of the number 1. We know our target is a distance between the high of the 1 measured to the low of the 2 measured down. So we break down, we quickly meet our $3 or $3,000 per contract price objective, and then we go sideways. I get asked all the time, Silas, does this work in a range-bound or consolidating market? The answer is yes. You can see we have a 1, 2, 3 range-bound here, ends up trading higher. It's a nice trade. I'm personally looking for new highs or new lows, but you can trade 1, 2, 3s inside of range all you wish. We have a new number 1 point high. Why? This high is greater than this high. So we get a new 1, 2, 3 top. Let me tell you why I was excited about this opportunity right here. One, because of the high probability nature of the 1, 2, 3 top that we've been discussing. Secondly, we're at a time of the year from a seasonal perspective where crude and energy markets in general typically trade to the downside. So we get a 1, 2, 3 top. We get 4 or 5 days of advance notice, even if you're an end-of-day trader. We're able to short that market. We quickly reach our $4 or $4,000 per contract price objective. We end up selling off. In fact, we end up selling off another $20 or $20,000 per contract. We simply trail the market until we get stopped out, or we have a new reversal signal, a new 1, 2, 3 bottom. We have a potential 1, 2, 3 here. We have a potential 1, 2, 3 here. Why is this not a 1, 2, 3 here? Because we never took out the number 2. In fact, we broke below that number 1, sold off another $10 or $10,000 a contract, and we finally got our last 1, 2, 3 bottom right here. We broke above, and we came up and met our $5 or $5,000 per contract price objective. Now, for those that are really paying attention, you may notice that this chart's from 2018. Come on, Silas, really 2018? show me something in a current market environment. Show me that this is working in today's current market environment. Well, of course it is. Here are the last 4 setups, or last 3 setups in crude. A $5,900 move, a $9,700 move, a $4,500 move. Let's look at another real world example. Gold. This is actually GLD, the ETF that tracks gold futures. I like to look at gold futures. You're not going to see all the gaps on the chart, but nonetheless, it's the same pattern. Here we have a 52-week high. 1, 2, 3. We break down, we sell, we reach our $4 per contract price objective. Then we flip to the long side. We have a 1, 2, 3 bottom, double top as well. Break above that number 2, we reach our $2 profit objective. Then we go sideways. Silas, what about consolidating markets, range-bound markets? Okay, well, if you want to trade those, 1, 2, 3 trades up, 1, 2, 3 right here, trades down. Pat yourself on the back. Good job. I'm only looking for new highs or new lows. We get new number 1 counts. You see this price action? This is making lower lows than these lows. So we start to get new number 1 counts. We have a potential 1, 2, 3 here, but this little guy is lower than that bar. So it's a new count. 1, 2, 3. We break above the number 2. In fact, we gap higher 2 days in a row. You wouldn't see that on a futures chart, but that's okay. We come back, retest, hook back above. That's our confirmation to get long gold. How? We buy gold futures, we buy GLD, call options, sell out of the money, bull put credit spreads, whatever your flavor or style of trading may be. 2018 again, Silas, you're killing me. How about recent examples? How about a $19,000 move, an $8,000 move, a $24,000 move? You could have traded gold, mini gold, micro gold, GLD, options. Let's look at a stock, Delta Airlines. I know this is becoming redundant by now, but I'm just trying to hammer home the fact that this is a repeatable process. Here we have a 1, 2, 3 bottom, reach our $4 per contract move. Now we get a chance to go short, 1, 2, 3. Market gaps below the number 2. I personally don't trade the gaps, but I got members and students that will aggressively be buying put options here. No worries. We get another shot. This high is higher than that high. We get a new 1, 2, 3 short. Trades sharply below the number 2. We get a small retest. Makes an $8 plus move. Now we flip to the long side. 1, 2, 3. Trades higher. Comes back, retest. We're able to hop on. $8 plus move. About recent examples, $8.50 move, $13 move, $5.50 move, $8 move. Forex traders, CAD, Swissy, Canadian dollar versus Swiss franc. 4-hour chart, we have a multi-session low, double bottom, 1, 2, 3. Aggressive traders are getting long above the number 2. The retest or hook traders are getting long here. We reach our 70 pip profit objective. What do we do now? We'll do anything. We wait for a potential reversal. We have a potential 1, 2, nope. We have a potential 1, 2, nope. Potential 1, 2, nope. Finally get our last 1, 2, 3 here. We break down, we hook up, come back down and reach our 40 pip profit objective. 80 pip move here, 70 pip move, 35 pip, 70 pip, 55 pip. Day traders, 5-minute chart of the NASDAQ. 1, 2, 3. We break above, we come down, we hook back up, reach our 13-point profit objective. New session high, 1, 2, 3. We break below, we trade sideways, we might have to pop some tums. Finally break down, reach our 20-point profit objective. New session low, 1, 2, 3. We break above. If you're lucky enough to get long on that retest, you're filled on your 30-point profit objective in about 2 bars there. Recent examples, 137 ticks to the upside, 60 ticks to the upside, 91 ticks to the upside. Are you starting to see the power of this strategy by trading the basic ebbs and flows of the market? So now is when I ask, why are you here? Are you here to learn a mechanical, done-for-you strategy for all markets, all time frames? I'm not sure if it gets any more mechanical, simpler, easier. There's really no guessing when to get in, no guessing where the market is likely headed, no guessing where to get out. If we had 100 traders looking at the same chart, we should have at least 99 seeing the same thing. There's always one oddball out there that needs to overanalyze. This is not rocket surgery, folks. Do not overcomplicate the process. But wait, there's more. The one weakness or drawback of 1, 2, 3 setups is that there are so many of them. How do you catch them all without spending hours in front of your computer? Well, what if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there's a pending setup? I don't know about you, but I would say that would be pretty freaking amazing. You remember the recent case studies we went over? Crude, gold, Delta, NASDAQ, and so on? Well, let me refresh your memory. This is that exact same chart of crude oil that we looked at earlier. I know you're smart boys and girls. Let's talk about what all of these colors and arrows mean. The green arrow is your number 1. The red arrow is your number 2. The blue arrow is your number 3. 1, 2, 3. What about these white chevrons right here? White chevrons. That's not a buy signal. That's not a sell signal. It's a visual aid waving at you, telling you, hey, we have broken below the number 2 point. We've broken above the number 2 point. Therefore, we have a potential setup. So when we break below or above the number 2 point, you're going to get your chevron print. If you break below or above the number 2 point, you're also going to get these 4 beautiful lines plotted onto your chart. What are those? What do they mean? The red line, or excuse me, the blue line is that entry or breakout level. Your red line is your risk or stop. Your lime green line is TP1, what I call profit objective 1. Your dark green line is TP2 or profit objective 2. Remember, TP1 is the distance between the high of the 1 measured to the low of the 2 measured down, and TP2 is 2 times the distance of TP1. I used to do every bit of this by hand. No longer. Why are we seeing all these green arrows? It's because it's telling us that we're making new lows. We're looking to potentially have a new 1, 2, 3 bottom. Remember this crude oil chart? This is a $20,000+ move. We get a potential 1, 2, 3 bottom here. We never take out the number 2 high. We get a 1, 2, 3 bottom here. We never take out the number 2 high. Hence no chevron, hence no colorful lines until we get to this last setup right here. Here is the gold example. Here's the gold example. Here is our long trade. We break above the number 2. We get our entry plot, risk plot, TP1, TP2. We don't get anything here in the middle because we're looking for new highs or new lows. Here we're getting new green number 1 arrows because these are making lower lows than the last low we got over here. And here's that last 1, 2, 3. We break up, we come back down, we hit TP1, we hit TP2, and you can see we're starting to get a new 1, 2, 3 top over here in the corner. Here's the Delta example. Here's our long trade. Here's our short trade. Here's our short. Here's our long. 5-minute NASDAQ. We have a 1, 2, 3. We break below. We hit TP1. We hit TP2. We hit TP2 to the tick, which happens to be a session low. So we get a new 1, 2, 3 bottom count. 1, 2, 3. We break above. We come down. We hook back up. We hit TP1. We don't hit TP2, but it's close enough for government work. You shouldn't have lost any money on the trade. and then we get a new number 1 point. This low is lower than this low. 1, 2, 3. We just nip this little head there above the number 2, so we get the print. We trade up, we come back down, we hook back up, we hit TP1. Notice that while we're waiting on TP2, we start to get new session highs. This clues us in that we may need to get ready to reverse our position. We actually hit TP2, and then we do get that reversal. Here's a 1, 2, 3. We break below, we come up, we hook back down, TP1, TP2, and we start to get a new count. No repainting. Know what everybody repainting means? These do not repaint. Once they trigger, they trigger. Is this training for you? Only you and you only can answer that. If you are brand new to the markets and want to jumpstart your success, if you are an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise that we talked about, the paralysis analysis, all the nonsense that prevents you from taking action, this training could be for you. You just want to simplify your process. Add a new strategy to your toolbox. Maybe you're already successful. Congratulations. Who doesn't want a proven successful strategy? If you want a specific step-by-step plan to avoid learning this on your own that you can do part-time, this training may be for you. Check out these recent examples. Having the indicator do all of the legwork for you. Locating longs, locating shorts, locating longs. Google, locating shorts, locating shorts. How could you have traded that? Go out and sell Google stock. Buy put options, sell bear call spreads. I love selling out of the money options, credit spreads, selling bear calls, selling bull puts. Here's a 4-hour chart of the Canadian dollar. 4-hour chart of the Canadian dollar. Here's a long, here's a short. 233 tick chart. This is a scalper's delight. If you want multiple setups and scalp for daily income, this is an awesome indicator. Why do all the work? Why do all of the work when you can let technology do the work for you? This is my scanner in Thinkorswim, where I'm scanning across 1, 2, 3 tops in the Russell 1000, only stocks that are optionable, $20 a share or greater. What would literally take days, if not weeks, to scour through markets is now done in seconds. I've got one monitor dedicated to multiple watch lists that are scanning across different asset classes, different time frames. So I'm not manually scouring through all that data. Now we've been looking at Thinkorswim. This is what it looks like on TradeStation, your indicator and scanner component. NinjaTrader, your indicator and scanner component. TradingView, 4-hour chart of Apple. This is your indicator component, no scanner. MetaTrader 4, 4-hour chart of the Euro Kiwi. Here's your long, there's your short, there's your short, there's your long. Wealth charts, indicator and scanner. Metastock, indicator and scanner. Isn't this a thing of beauty? Now we know there's no real crystal ball in the market, but I view this as one that provides me a process every single day to scan the markets for me, scan the setup for me. I go to my platform for entry and I manage the trade through exit using my plan and process. This is a rinse and repeat process that can be done every single day. And you can start profiting from these predictable patterns with a 3S code. So here's the offer you simply cannot refuse. All of this programming, coding, software, development costs well into the 5 figures. Think about this, 7 platforms, 7 different coding requirements, hundreds of hours of testing. But I realized that the original $3,000 price tag was way out of reach for most folks. Hell, even $2,000, even $1,000. I truly mean this when I say I want you to get started on the right foot right now with a proven, mechanical, no BS, no guessing, straightforward setup that you can literally take and use for the rest of your trading career. We've made this absolutely and completely affordable today for those that are willing to take action and get in right now with today's special offer. We've opened up 25 slots where you're going to get access to the 3S code and scanner. You're going to get access to the indicator for 7 platforms, the scanner for 6 platforms, the 3S code optimizer, weekly strategy and scan sessions, access to my private Telegram room, and all of my quick start guides and bonuses, all for a one-time lifetime fee of $397. Offer link is TradesTrending.com/code, and I just put that into the chat box for you. TradesTrending.com/code. Guys, you can also call 502-383-1182 if you want to place the order over the phone or speak with our customer support specialist. Now, let's talk about the platforms again. You're going to get access to Thinkorswim, TradeStation, NinjaTrader 8, TradingView, MetaTrader 4, Wealth Charts, and MetaStock. You're going to get access to these 6 platforms. Unfortunately, TradingView does not have a scanning component available at this time. However, if and when they do, it will be added at no charge. All future updates, upgrades, and enhancements to any of these platforms are included at no charge. If you think about this, it's very costly when we have to do this across so many platforms, but we do not pass that along to you. We've also offered a PayPal option for those that wish to finance or do a direct purchase through PayPal. You'll see that on the order form, TradesTrending.com/code. Now, let's talk about what else you're getting here. Weekly strategy and scan sessions. These are held every Thursday at 11 a.m. Eastern. They're all recorded and archived in case you cannot make it. We talk about real live setups. We talk about scanning. We talk about using this for day and swing trading, how to use it with minis, micros, options, and much, much more. We go through multiple trade ideas, give you multiple examples, and real world actual ideas that you can use that day. These are held every Thursday at 11 a.m. Eastern. You're also going to get the indicator scanner. I want to talk about what all this does. You're going to get the visual plot of the 1, 2, 3 top and bottom reversal areas that plot the entry, exit, stop, and targets for you. Customizable settings. If you don't want an arrow but want a square, you don't want pink, you want hot magenta, you don't like yellow, you want orange, you can scan for setups only or trigger only or both. What does that mean? Setups meaning those that are in the process of setting up. Trigger only, those that have already triggered, meaning they've traded past the number 2 point. You can scan for tops only, bottoms only, or both. Scan for day trading setups, swing trading setups, or both. Like I said earlier, I am scanning across weekly time frames, daily time frames, 4 hour, 1 hour, 10 minute, across stocks, ETFs, futures, and currencies. You're also going to get the 3S optimizer. This is where you can now take the mechanical 1, 2, 3 top and bottom strategy and create and run multiple back tests across different inputs and settings to find best optimization parameters that fit your trading style. We know back testing can lead to more profits, and this is just another tool that can help you progress in your trading. So here's me running a back tester in crude oil right here in Thinkorswim. This is me running a 4 hour British pound in TradingView. Here is the optimizer in TradeStation. Here is the optimizer in NinjaTrader. You can add and edit multiple variables such as EMA crosses, trend EMAs, minimum bar percentage requirements, and so much more. Now with the 3S code package, I'm throwing in additional bonuses to make this a no-brainer. My chart pattern principle trading manual and guide. This will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, how to look at it and understand the market the proper way. bonus setups, how we use the power of seasonality to trade the 1, 2, 3 pattern, 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a powerful trading instrument if you know how to use them properly. So it's important for me to include this so everyone can take advantage of options if they wish to do so and do it the right way using the 3S code strategy. And I'm also including access to our private Telegram room channel. Every day, I'm including ideas across stocks, ETFs, indices, commodities, currencies. I post multiple ideas every week. You get access as part of this package. These are some recent ideas, recent posts from the Telegram room, shorts here in Nucor, shorts here in Cardinal Health, trades setups here in the E-mini S&P, Moderna. Here are some unsolicited testimonials. I don't ask for these, they come in all the time, but most importantly, it's from people taking action. You're not going to see results if you're not taking action, and these are people taking action with the 3S code. So who here is ready? Who's ready to get started here using the 3S code? Simple mechanical strategy. We've opened up 25 slots. Why 25 slots? Because our team wants to make sure you actually get set up and running. You're not left in the dark. Our team will reach out to you. You can reach out to us. We are real live human beings. You can call us, you can email us. Our guys can actually log into your computer via a remote session and help you install on any of these platforms if you wish. We are here to help. All right, so there you have it. I think I've got a few minutes. I'm going to answer some questions. I like to also take a look here at a real live market environment because I think that is pretty powerful stuff. And then we'll take a look at what else is going on. Okay, so let's see. Is there a good way to scan for this 1, 2, 3 trade? Joe, hopefully I've answered your question. Hopefully I've answered your question. The answer is yes. We let technology do the scanning for us. We've got scanners available in TOS, TS, MT8, MT4, Wealth Charts, and Metastock. TV Trading View is the only one that doesn't scan. Let's take a look at crude oil right now. Can everybody see? Let's just hide some of my drawings here. Let's hide my drawings. Everybody see the plots on this chart of crude oil? Right here. 1, 2, 3. Look at how we tag TP1 and reversed. 1, 2, 3 on the hourly chart. We hit TP1, hit TP2. Look at the chart right now, 2-minute chart. We had a sell setup, we had a sell setup, we had a sell setup. We are currently in a sell setup as we speak. Let's take a look at the S&P. Today, the S&P. Look at the short. We hit TP1, 41.37 down to 33.75. Short at 41.40 down to 35, down to 31. Long setup, 41.35 to TP1, 41.44. There's your $450 right there, paid for the course. Will it work on 15-minute chart of Forex? Yes. Works on any market, any time frame, does not matter. Will it automatically enter and exit the trades or just give you the signal? Todd, this is not a robot. It's not an expert advisor, so you actually have to go manually enter the trade. We are working on some automation strategies, though. Haven't considered trade ideas, Joe. I'm not sure. All right. Thank you, Greg. Thank you, Maria. Dom, Randall, Calvin, Terry, Florence, Andy, you guys are in. Trade Station, yes, Michael. This is not a subscription. This is a one-time fee. Do I use it to swing trade? Yes. We've already covered that. In fact, this is these are some markets I'm looking at. Capital One Financial. Does everybody see this weekly chart? Who could have shorted this? Look at this chart. Weekly chart. Who could have shorted this? Who could have bought this? Who could have shorted this? Who could have bought this? Who could have bought? We have a long, we have a short, we have a long, we have a long, we have a short, we have a long, we have a short. SPY. Let's look at the SPY. SPY. Let's hide the drawing tools. Look at these swing trades. Massive. Let's go to the daily chart. Look at the last setups here, folks. I'm not making this up. Short hit TP1. Here's a long that went about 67% of the profit objective. Here's a long that went about 90% of the profit objective. Here's a long, hit TP1. Here's a long, hit TP1. Here's a long, hit TP1. If you want more setups, more signals, all you do is you go down to the lower time frame. You want more signals, go down to the lower time frame. Show you a chart of the NASDAQ for today. Let's go to the NASDAQ today. Here you are on the 2-minute. Here's your short. There's your short. There's a short. There's a long. You're 1, 2, you're 3 of 4 right there. Let's go to the 5-minute. You had one setup that was a long. Hit TP1, hit TP2. 10-minute. There's a short. There's a short. And we're currently trying to work a 1, 2, 3 top as we speak. In fact, here we are on the 1-minute. Absolutely, you can run it on multiple time frames. Edward, if you need help, we do have installation guides via video and PDF manuals. We do have guides for PDF, PDF and videos, installation for all platforms. But if you need assistance, should you need assistance, you can reach out and request a remote session with our team. Euro US today. Here's the last 1 hour signal. Here's our 5-minute. We had a short, we had a long, we had a long, and we had a long that just barely getting to TP1. Should lock in profits there. There's nothing to show on the scanner. Alex, the scanner is a scanner. You're going to put in your asset class or your watch list, whatever you want to scan across whatever variables you wish. I want to see a share price of at least X. I want to see at least, I want to see at least 100,000 shares traded. I want to see X amount of open interest or volume. Above the 200-day, whatever your parameters are, you hit the green scan button, and boom. How would you use it? What are the signs to trade? We cover all that inside the members area, Edward. We've got different, everybody has the ability to use different entry techniques, but when we get a confirmation, that is when you're going to get the plot. Here's a short, that's TP1, that's TP2. Here's a short, that's TP1, that's TP2. We've got different, we talk about different entry confirmation, exit confirmation techniques inside the members area. The scanning continued during the trading day. Yes, it's updating in real time. Lee, yes, you have access. You can load it on multiple platforms. So if you use TradingView and TradeStation, you use NinjaTrader and Thinkorswim, you use Wealth Charts and MetaTrader 4, that's fine. Can I show again how I use it for options? Yes. So if we go to the daily chart and we get a setup here, if I get a 1, 2, 3 bottom confirmation, now you can do a couple things and we can get very granular in options. As you know that there are multiple variables or multiple options on options, no pun intended. But the most popular ways to do this are buy call options. Once you get a confirmation entry, buy call options or call debit spreads. I like to sell bull put credit spreads. So if I get a long setup here, which we did, I'm selling bull puts. If I get a long setup here like we did, I'm selling bull puts. Short trades, I'm selling bear calls. That's how I prefer to use it with options. Or obviously you can trade the underlying. These are the platforms right here. You set it for whatever time frame you wish, Edward. Set it for whatever time frame works best for you. All right, guys, my time is up. I want to give a big shout out and thanks again to Rob and Marie and the Traders Corner team. Always appreciate the opportunity to come on. It's been a great crowd. I want to thank you for your interest. I want to give a shout out to all of our new students. I want to welcome all the new students that have jumped on board. If you've called in or emailed in with questions, please be patient. Our guys will respond to you. We are human beings. We will help you. We'll continue to work with you until you're all locked and loaded. But guys, this is very exciting to me. I love this stuff. I live, eat, and breathe it. It continues to work. I've got hundreds, if not thousands of examples, and I look forward to seeing you guys in the market. So thanks again, Traders Corner team. Everybody take care, be safe in the markets, and we'll see you on the flip side.
Silas, I want to thank you twice, and I have to say that I am thoroughly impressed. Ladies and gentlemen, if you're interested in a system to clearly spot easy to learn trade setups for day and swing trading that provides clear entry, exit, and risk price points, that removes emotions from trading and works in all markets, then Silas Peters of TradesTrending.com has a solution for you. If you haven't followed up with him yet, his link is in the chat box. Thanks again so much, Silas. Please come back and see us on Traders Corner.
Thanks so much.
Have a great week, sir. Ladies and gentlemen, we're going to keep the ball rolling, and our next presenter is a 9.5-year United States Army veteran and married father of 9. He's a leader in his local church and is a successful business owner and trader. That, however, wasn't always the case. His compelling Broke Dad, the 7-figure trading success story, will captivate and inspire you. He's dedicated to helping people from all walks of life fulfill their financial dreams while also achieving financial freedom. Helping others is at the heart of all that drives him on a daily basis. Ladies and gentlemen, here to present a step-by-step guide to making $10K a month in the market, it's my pleasure to introduce Mr. Casey Stubbs of Trading Strategy Guides. Welcome back to Traders Corner, Case.
Hello.
I love your banners.
Thanks, you can see it.
That's all right. And I got to say, I've known your story. I know I've read it a few times, and I'm hoping to write a similar one for myself. I'm in the process.
You're doing great. Thanks for having me. I'm trying to figure out something, so hang tight here. I'm trying to do my presentation.
Is there any tip I can give you?
Maybe. Well, let me share my screen first. I've done this 1 billion times and a half, so I don't know what's going on. Maybe I'm just losing my mind. Okay,
hey,
so
of all the things we've lost, we miss our minds the most.
Okay, I just found it. I forgot how to the presentation button. Okay, so you can see that.
Yep, we can see you loud and clear. Remember, it's a 45. I'll throw you a 5-minute reminder in the admin chat.
Okay, so what's the time that I need to get for it? So 2:15?
Yeah, around quarter after.
Okay, perfect.
Right. Thanks so much.
Good. All right, thank you. All right, well, so my name's Casey Stubbs. Thanks, everyone. Happy to be here today. I'm gonna talk to you about how to create a $10,000 a month from your trading step training to help you escape from a job to a life of freedom. All right, right now, if you can either show the hands or the chat in the questions, how many of you would be interested in $10,000 a month consistent revenue from your trade? Is that something you would be interested in? Is that too little? Is it like, let me know that number itself, if you don't believe is possible, you know, some general feedback about that. What's going on? So yes. Excellent. Okay. To see. Okay. Yes. As yes. Okay. Good. All right. Actually, it's really realistic, and I'm going to talk about that. So all right. So again, tradingstrategies.com is my website. I got 9 kids, happily married. I like outdoors and hiking, travel, culture, exercise, veterans, entrepreneurship, the local and trading in markets. Those are just most of my interests. I also like playing games on my phone. I don't know if any of you guys do that on my smartphone. I play some games from time to time. If you're having some trouble with my audio, okay, maybe I'll turn on the camera and see if that helps. Let's try that. All right, so maybe that'll be a little bit better. Bad connection. Okay, so anyways, today we're going to talk a little bit about trading, why trading is going to work. Thanks, Tom. I like showing my face because I want you guys to see me, but if that helps the picture. Trading mindset, what markets you want to trade, and how to scale, and a little history about me. So I started trading in 1996, and I joined the Army after an introduction to trading from my dad. He was into trading, and he didn't know how to use a computer because he's a boomer. Some of you guys might be boomers in the audience, and so no offense, but he didn't know how to use a computer in like the early 90s, and he needed me to teach him how to do it. So that was a good lesson for me about the stock market, right? And I taught him about computers. He taught me about stock markets, and I thought it was really cool. I was like, wow, this is great. I'm going to make money. I'm going to be rich. So I joined the Army after that in 96, and I was making, the salary I was making was $800 a month, which, you know, that's not a lot of money. Not $800 a month is not a lot of money, right? But despite that, I was putting my money into the market, and I was able to turn that $800 into over $30,000 in 4 years. Now, the good thing, if some of you might have been investing at that time, if you were, let me know in the chat. If you were from 96 to 2000, was anybody else in the markets at that point? But kind of shows you how long I've been doing this. But the $800 a month into 30 was that the markets were really good at that time. That was what we called the .com boom. Huge market. Everything tech went up big time. Okay, really big. Now, if you remember, some of the stocks went really fast and furious. Okay, so I was able to catch, and it was awesome. Okay, absolutely perfect. And plus, but it wasn't just that the market was good timing, but it was also that I made an effort to actually put me into the market, consistent strategy of putting, I wasn't putting the whole 800 in because I need some money to live. But it just goes to show you that you don't need to you don't need to have a lot of money to make a lot of money. And that's a great thing, right? It's a great thing that you can start small and slowly way up. Because in that time, at that time, $30,000 was actually a lot more. Inflation has a lot, so that's close to 60 that period of time, 90 versus what it is in today's money. Big, and so that was a lot of for a young guy, especially since I didn't have a lot. So what did I do with that? Well, I took that money and I invested it into a carpet cleaning franchise, right? So it was a 3,000% increase is what I made. And I took the profits and I invested it into another business. So I was franchise, and I pretty much drained all the money in my trading account, but it would have been probably better had I done that. But it was still good for me to take money and reinvest it into something else that made money. And so I've always had that mindset of taking my profits, reinvest into something else. And that's a really big thing. And so so somebody was asking about a question about the 800. I made 800 every single month because that was my salary at the Army. I worked into the Army for 4 years and they paid me $800 a month. That's what I made. The money, but then I turned my paycheck into over $30,000 through trading, right? So that money into the carpet cleaning business. And after that, I married, and then I started having kids. And it's been really great because it's given us the ability to be financially free, to travel. My kids have been in 48 states, across the country, taking everywhere. It's just been, and a lot of that is due to trading and investing, right? But it's not all easy along the way. I've had some very strong storms and difficult times. It's just been a lot of mistakes that I made, not following my plan. If anyone can relate to that, let me know in the chat. Not following my plan has been terrible. I've been my own worst enemy, but fear, I've made bad decisions because of fear. I would call that even self-sabotage, really. I've made some dumb, not having a good mindset, made some dumb decisions. One of the things I did, jumping from system to system, even when I took that trade and I put it into the cleaning business, couldn't quite figure it out. I was jumping from system to system. There was been times where I didn't have enough money and I was not time, or even being a slave to my job, and even following like I'm just kind of sharing all problems here, being greedy and making bad mistakes because of greed, and not having a good plan or a lack of discipline. All of those things have really messed me up. And slave to a job. For a while I had a job that I absolutely hated, staring at the clock every day, and I just couldn't wait to go home. It was just terrible, absolutely terrible. And so it wasn't all, this was what I've been able to get, which was been nice. But I've been able to live comfortably, been able to have work-life balance, and to spend time with my kids and to live life on my terms, and being able to travel and paying off debt and doing all the things that everybody really wants to be able to do. And trading's been able to do that for me, right? Having great relationships, being able to actually buy a property for my wife's parents, things like that, take a train trip across the country. give my kids a better chance than what I had, giving them a better start, helping me with just having a peace of mind and happiness and not having to rely on others, being my own boss, having a steady stream of income, even giving me the ability to do like hobbies and stuff, right? I know some people told me they wanted to play violin, right? Or take an Alaska cruise, or somebody mentioned that they wanted to donate to help rescue dogs. So there's a lot of different things that happen along the way. And so there's this image here that says, people see success. It's like they say it's an overnight success, but it's really like an overnight success that's 40 years in the making. And this is really what it actually has looked like been very painful along the way. It was actually, success looks great, but it was actually a nightmare. And now I just want to help people get through that part of it, right? I want to help them get through the nightmare. So at one point in this journey, I lost my source of revenue and I needed to support my family. And then I started trading and I tried to make money because I didn't have a job and I lost it all, right? And this is like in the middle of my experiment, right? It's in the middle of my experiment. It was really hard, right? And just being up with my back against the wall caused me to make even worse decisions along the way. Even worse decisions. It was terrible. And then that caused more pain. And then I was desperate and I didn't even have a way to be successful, and I know I've been on some of these trainings and they've been really good. Like the one we just saw, I was in a little early and I saw that. I know Silas from that company, and he's a great guy, and those systems are really helpful and good. But the problem is that usually we're our own worst enemy, and it doesn't even matter what the system is. We just beat ourselves up, right? I don't know if any of you have experienced that. I know, but with me, when I look back on it, sometimes I'm really upset with all the mistakes I made. But to be honest, I don't beat myself up because that's just part of the learning process. And you're never going to be in a place in your life where you're not going to make mistakes, right? And so I want to encourage people that if you've made some mistakes and you've done some dumb stuff, you've maybe lost money trading, or you've done things that wasn't really wise, or you've been your own worst enemy, don't beat yourself up, because that's not going to help. Don't call yourself stupid, or dwell over the mistake over and over and over again in your mind. But what is better is just make a decision that says, okay, I'm going to start over today and I'm going to do what's right. Right? So one of the things that you could probably do is, if you've lost money trading and because you haven't done something, is say, okay, today's the day that I'm going to get a trading plan. Write that trading plan, do the plan, and follow it, right? Follow your plan step by step. Practice trading with a practice account. Do the research that you need to do. Get somebody to hold yourself accountable. Stop trying to treat the stock market or whatever you trade, whatever you trade like a casino, because it's not a casino. Well, it kind of is, but you're not going to just get in and get rich quick and solve all your problems. That's not going to happen. You actually have to solve the problems in your own life, right? You have to learn how to follow a plan. You have to learn how to stop being your own worst enemy and get mindset and to work with successful people. You have to learn all of those things. And so even if you get into trading and you find a system that all the time, you're still going to make mistakes in your own life. And those mistakes are going to derail you. You're going to self-sabotage yourself, even if you have the right system. And I know, because I have literally thrown away systems that were perfect because I wasn't willing to do the work to follow the system. I've seen some really great systems that people are selling and they're like, oh, it's just not going to help me because I have too many issues. right? I've made too many mistakes along the way. And I keep thinking I'm looking towards the solution, but I'm not looking in the mirror, because I need to be looking in the mirror, because that's where the problem lies. Look yourself in the eyeballs and say, hey, you're the problem. You need to fix this. And I'm talking, I'm not talking to everybody here. I'm talking to me, right? This is me. I'm preaching to myself today. So one of the things I did to help me get some extra revenue, and this is just a history thing, you guys, I don't know if it applies to any, but I found a website that said make $1,000 a month, and I followed the plan, right? And it was about creating content, and I just created a trading educational website, and I learned how to do that. And then I took that extra money and I invested it into trading, and you know, it's helped me out, right? I've gone through some steps, and so you guys are all here. You know why trading's so great, so I'm not going to spend a lot of time on this, but it gives you time freedom, financial freedom. It's scalable. It can turn to passive revenue. It puts you in control, and it gives you a lot of upside potential, right? It's just a really good vehicle, and you can see all the people here. You guys probably know all these guys. If you don't, research them. You guys could learn a lot by reading these. These are all guys, and the old, you know, that kind of shows me that it doesn't happen right away. The amount of money they've made is a ton. You know, the best guy here is Warren Buffett, 109 billion, but they're all old and they've been doing this a long time, but they stuck at it. And I would love to be able to talk to these guys and get their ups and down stories. I bet they're pretty remarkable, like all of the amazing journeys that they've had. And so here's just some step-by-step stuff that you can do to get yourself to that point. Education, learning, mentoring, execution. Start small, get a consistent track record, scale your account, and reinvest your earnings. It's really simple. This is just a simple thing. Okay, and so you're being here right now. Good work, good job. Give yourself a pat back. You're taking the right step. You're trying to learn something, which is, you know, it's good to try to learn something. Okay, so good job. But then you got to, now that you're here, you got to start the execution phase. Come up with a plan, execute that plan, and then start small, right? You're not gonna, most of the people that I've run into that I'm working on teaching, they don't start small. They risk more than what they should be risking, and I'm very guilty of that. Everything that I am teaching here, I've been guilty of doing many times. And so I always say, look, see if you can make $1. Use the $10, right? Well, what if you could just focus on making $100 a month? Like, what would that do for your life? Some people were like, well, $100 a month's not going to help. It's not enough money. But you got to think big picture, because if you can learn to make $100 a month, you could learn to make $1,000 a month. If you could learn to make $1,000 a month, you could learn to make $10,000 a month. That's all I'm saying. And you could start trying to make 10,000 first, because that's what you need. I don't know what you need. Where everybody's in a different place. You might need 10,000, but you don't really start that level. You don't start at what you need, because it puts too much pressure. Because if you make a mistake, it sends you down a spiral, a downward spiral. And so you can't start out risking a lot, right? You just start out small. Don't despise a small success. Celebrate it. If you can make $100 a month, or even, like, you know, you focus on $1 a day, you're trading, take 1 trade a day, 2 trades a day, make $1 a day. You're going to have a consistent track record. And then when you have that consistent record that's building in some confidence, and that confidence helps in your system, and then you can slowly, step 5, scale your account. But a lot of people skip a lot of these things. A lot of people, and if you can relate to this, let me know at all. If I'm hitting any points that make sense, let me know. But a lot of people will start at execution and then they try to go to scale, right? They skip the education, learning, and mentoring. They go straight to execution. They skip starting small, and then they just start trading and start scaling. And you know what happens when you start scaling and trading? When you just do 2 and 5, what do you think happens? If you just go to 2 and then 5 and you skip all these other steps, what do you think happens? Let me know in the chat if anybody has any ideas. What do you guys think? Well, I'll tell you, since I'm not getting any answers here. It's not good, right? You end up risking too much money. You don't have a consistent track record, and so it just you bomb big, and then you get yourself into a worse place, and then you have to deal with your emotions, right? Because okay, I just made a huge mistake, now I'm depressed, now I'm upset, I got to deal with all of these negative emotions, and it's not easy, it's not fun, it's hard. So these are the steps that we got to take, okay? And so the next part I want to talk about a little bit is mindset, right? So I start here because it's impossible to become a successful trader if you don't have the right mindset. You've got to work at building up that mindset so you don't sabotage yourself. So you build in successful behaviors, or you program yourself. Everybody's been talking about AI recently. AI is really cool. I've been messing around with it. I did a training, and I don't know if I did it on the Trader's Corner, but I did one about how to create your own trading. AI is great. It's beautiful. But we have to take our minds and to teach ourselves to be AI. We got to program ourselves so that we're not self-sabotaging ourselves. Because even if you get an automated trading, if you're not working on this, you're still going to self-sabotage, right? You give yourself a great system, you're going to do something dumb. Again, from personal experience. It's happened to me quite a few times. So we got to work on our mindset. You got to understand that we have to create behaviors and take the proper steps and to go down the path, and understand that trading isn't get rich quick. It can happen fast, but it's not get rich quick. And so what I mean by that is you have to do the work. Do the work. Follow the process, do the steps, do the work. And you're here doing it by being in this training, so I commend you for that. Okay, so I want to start by just kind of running through some scenarios here. Okay, so how could we, I want to do some money management stuff. Okay, so how could we create $10,000 a month? So the first thing we need to know is that $10,000 a month is about $120,000 a year, okay, in profits. And so if we're looking at this trade calculator that I built, this shows your average win, your average loss, and your risk per trade, and how to get yourself up to $10,000 in profit. So if we risked $5,000, which some of you might not have $5,000 to risk, that's why we talk about working our way up to it. The other thing that we can do besides working our way up to it is you can get into a prop firm, right? Because I have a prop firm and it's called globalproptrader.com. I have a prop firm, and that firm traders an account up to $1 million. And on $1 million account, if they risk $5,000, that's actually not a ton of money for $1 million. So if you go to $1 million and we times that by 0.05, right? That's 50,000 is 5%. Okay, so if we could do $1 million, that's 10 million times 0.01, that's 10,000. So $5,000 risk is 0.5% on $1. So right here, $5,000 is $1 million, is 0.5% on $1 million account. So if you got into one of our prop firms, then you could do $10,000 a month. So Al, who in the beginning said, is this legit? Yeah, it is legit, right? But you got to be consistent. And that, if we go back to my spreadsheet or my slides, if I can find the, right here, I talked about scaling. A prop firm will help you scale quickly, because all you have to do is start executing, start small, get a consistent track record, and then you can scale. If you can make $100 a month, do that for a couple months and be successful, then you could easily scale into the prop firm, right? And so I'm giving people an opportunity through our prop trading firm, the ability to advance your scaling much quicker, much quicker. Okay, so let's take a look at some numbers here. Let's take a look at some numbers. So if we do a 1-to-1 risk to reward ratio, that, and win 55% of our trades, you can make $100,000 a year if you take 200 trades. That's just under $10,000 a month. So if we bump that up here, let's go to 220 trades. That's just under 10,000 still. We go to 240. That's $120,000 a year. That's $10,000 a month. So if you take 240 trades, and you're risking 5,000 and you win 55%, 55% of your trades. So Edward, great question. Edward as asking, what is scaling? So scaling is growing your trading capital. And so what that means is, if you start out, let's say you're practicing on a demo account, you learn to make $100 a month, or you can scale it and then you start making $1,000 a month, $5,000 a month, $10,000 a month. Scaling is just increasing your paycheck. Basically, you know, let's say you went up to your boss and he says, okay, I'm going to start you out and I'm going to pay you $5 an hour. And you're like, okay, great. And then let's scale that. Let's go from $5 an hour, $6 an hour, $7 an hour, all the way up to whatever you want to make. Okay. So if we have, good question, by the way. So I'm just kind of laying some framework here. This is not even a strategy. I can talk about that in a minute, but this is just some framework to kind of show you what you need to do, right? What you need to do. Robert, I will give you this spreadsheet. Email me later. I just sent you a message. You can email me to get the spreadsheet. All right. So, thank you for the questions. And I'm sorry if I get off track a little bit. Sometimes I don't take questions because I don't like to get off track, but I got a lot of time today, so I'm gonna go through this. So yeah, this is boring. This is a spreadsheet, but let's take a look at this. 240 trades. 240 trades, and if we divide that into 52, 240 divided by 52, and I'm doing 52 weeks. That's 4 trades a week. All right, 4 trades a week. Edward, you got to send me an actual email. I can't just go off of that. Just send me an email, okay? And request email and say request slides show. All right, now, or spreadsheet. Now think about this, okay? 4.6 trades a week. You're risking $5,000 to make $5,000. You're winning 55% of your trades. That's a 1-to-1 risk to reward ratio. So the question is that possible? Is it possible? Is it possible to win 55% of your trades? We know right off the bat, whenever you make a trade, without having any edge, without having any system, without using any support and resistance technical analysis, we know that you're automatically have a 50% odds. Statistically, you have a 50% chance. It's like flipping a coin. 50%. So all you got to do is give yourself a 5% edge. Can you give yourself a 5% edge, or could you give yourself a 10% edge? If you can, using a great strategy, you've just gone from $10,000 a month to $20,000 a month. $20,000 a month. Just at 60%. Okay, now I want to drop this down a little bit and see, what if we took 20 trades and see what happens. There you go. 20 trades in 1 month. We win 11. Look at that. 11 and lose 9. We win 11 and lose 9. What do we make? Look at that. $10,000. So it's just statistically 11 trades win. That's it. And you never know, right? What if you win your first 2 trades? You might just say, okay, I'm just hit my 10,000. I'm done for the month. You don't have to necessarily keep trading. But this is what's possible if you're just slow and consistent. We're not focusing on how much money we're going to make. We're focusing on following our system. We know statistically if we do that, we can hit 55%. So now I'm going to show you, I want to show you guys my strategy. Okay, and I'm going to try to find, let's see if I can find my chart. I had some charts up earlier. This is one of the problems with having 6 monitors. Too much. Okay, I just found it. All right. Here's some charts, okay? Now, this is a strategy that I use, okay? And this is just, it's so easy. I know that you guys see all the complicated stuff, but this is just so easy. So here's what I do. This is a euro dollar, and I'm going to show you some stocks on some stocks too. But I just find something that's trending. So there's 2 things that I've been doing recently. Number 1 is I've been buying the euro. Okay. The last week that hasn't been the trade, but right now I'm looking at buying on pullbacks, right? So when you identify a trend, you can identify, I use just simple trend lines, or sometimes I'll use the 10 EMA, and I like to use weekly time frames too. So let's just go through here. Let's show the weekly. Here's a 1-week chart, and you guys can see this. Look at this, look at from this period. This is just remarkable, okay? Oh, I lost it. What'd I do? I lost it. Hold on, bear with me. Launch chart. All right, now. I have no idea what I'm doing. Oh, you know, I changed the color now. Okay, so take a look at this. This is the euro dollar. I got a beautiful trend line here. And during this entire time, all I'm doing is following this trend. So anytime we get a move up, I'm shorting. Short, right? Short. The win rate on this thing is remarkable. Absolutely remarkable. So there was like 1 trade here. There's 1 here, and there's actually a lot of other trades. I could go through and back test all of it, but I mean the winning percentage here is really high. Okay, but it takes patience. Here's a short, here's a short, here's a short. Here would have been maybe a short that I lost, but here's a short, right? Just an amazing, amazing, amazing win streak. Well, so Edward, think about this, right? We are risking 5,000 and we want to make 5,000. So whenever you make the 5,000, that's when you exit, right? So if you, let's just zoom this up. Let's just use this as an example. So my simple entry is just really easy. I just use a price action candle. I'll draw a trend line. Okay, here's my entry. I enter on this break, put my stop loss up here. And so if I measure this out with a ruler here, I can see that this is it's 102.45. 1.02 is my stop loss. My entry would be 1.0121. So that's like about an 80 pip. It's about an 80 pip stop loss somewhere in there. 102. My entry was 1.12. Okay. And I don't have my ruler here. I don't know how to use the ruler. I forget. Here's the, oh wait, ruler. It looks like about 70 pips. Okay, 70 pips is the stop loss. So now, if we'd use that ruler again, from here, once down to 70 pips, you would get out about 70 pips. There's your exit. And you still got a long down. So the idea is just to go for a 1-to-1. Okay, but your exit would be right here. Stop loss would be up here. And so you can just do that time and again. Here's another one. It breaks down, stop loss up here, wherever your stop loss is. Okay, your stop would be right here about 118, your target 118. And if you just find a strong trend and you just do that 4 or 5 times a week, 4 or 5 times a week, consistent and you're patient. You don't have to trade a million times. You don't have to trade all day. You don't have to trade all night. You don't have, you can if you want, but I prefer coming in a couple and go boom, boom, in and out, right? So with that being said, let's go back to the daily, and I want to show you what I'm doing right now, what I've been doing recently. Okay, we broke out of here and I lost my awesome line. Let's put that. So once we broke out of there, I started buying this. I started buying the euro dollar. And right now we're kind of in a sideways market, so you just got to be aware of that, right? So here we're sideways. You want to try to find the ultimate trend, but we're in a triangle. So if we bounce back off of this trend line, I'll be buying here soon. Okay, what I do is right now I'm just looking for pullbacks and going into it. So let's take this. What I'm really looking for is for this to break out. If it breaks out to the top, I'm going to come back up here. But I'm all doing it for a nice 1-to-1. That's it. A simple 1-to-1, because all I have to do is win 55% of my trades. I'm not trying to get rich quick. All I'm trying to do is 55% of my trades. That's it. And so, okay, if I'm staying with the trend, I'm finding a nice resistance point. So you can see here, this is a nice resistance point because there's resistance support. We have a support over here, support over here. We got the trend line support. This is a great place to look bounce. I mean, really good place. A lot of traders are probably thinking that we're going to go short, getting in short, and they might get caught. They might get caught on this trade. But we're going to be smart. We're going to be patient. We're going to wait for it to break out. And when it does, we're going to take the trade. but you don't have all of that boring stuff on the front end to help understand that it's about being consistent. And all of those mistakes that we make is because we're focusing on making money. We're focusing on the wrong thing. We could just learn to focus on consistency and not worry about making so much money so fast and getting out of the pain of our life. You know, if I could make money, my financial pain would go away. And just by thinking, if only this, if only this, if only this, it's setting yourself up for self-sabotage. But don't worry about all that. Just focus on, can I consistently, for this only, from Monday, from, you know, today's May 17th, from May 17th to next days, take trades and follows for 4 trades. Could I do that? And focus on making a very little bit of money. And then when you do that, can I do it next week for 4 more trades? If you can, then you're on your way, right? Because you can become successful. You can slowly, consistently make that money, slow and consistent, and then you scale, right? So let's go ahead and let's look at some other charts here. Let's use some stock examples, okay? Tesla's a good one, right? So we got daily chart on Tesla. Tesla has really big trends. And as a matter of fact, we could have a really interesting potential setup right here. Look at this. What is that? We are in a downtrend, in a downward trend, and I like channels, by the way, because I like to buy off the bottom, sell off the top. But right now, we are in a big Tesla channel, and before that, we had another channel to the upside. And so some of these moves here were big. I've been trading this one for a while. Some of these were really big for me. I was able to catch a lot of bounces and breakouts. This actually, as a matter of fact, I took this trade right here. This was a great trade for me when it broke out of that trend line. Boom. And I didn't just do a 1-for-1 on this because I thought Tesla was going to go further. So I actually let this go really far. But that doesn't matter. Who cares what I do? It doesn't matter. Don't focus on me. Another thing that people do, and if you do this, don't focus on what I'm doing. Don't focus on what every guru in the planet's doing. Don't worry about their track record. Don't worry about any of that. Focus on yourself. Like I'm showing you that I made all this money on Tesla. Who cares what I did? It doesn't matter. What I did doesn't matter. The only thing that matters about what I do is if it helps you if it helps you understand what's possible. And then after that, don't worry about what I do. Yeah, we already have established, I just gave you all those rich guys. We have already established what's possible. Anything is possible, okay? Anything at all is possible. We know that making money in the markets is possible. Now that we know that, don't worry about it. I get people emailing me all the time. Like, honestly, it's crazy, the stuff I get. It's weird, nothing personal. But I had a guy yesterday, he said, well, what lot size do you use? What lot size do you use? And I just replied, I said, why are you worried about what lot size I use? It doesn't matter. It means nothing. Like I might trade 100 lots, and I'm talking currency trading. I might take 100 lots, but what does that have to do with what you're doing? Are you going to take 100 lots? Probably not. But ask the right questions. Don't worry about what everybody else is doing. It's almost like when I'm dealing with my kids and they're like, well, my brother's doing this, this, and this, and you did this for my brother, but you didn't do it for me. I'm like, hey, look, you worry about you. Don't worry about me. Don't worry about your brother. Don't worry about what the kid across the street is doing. You worry about yourself. And it's funny because with my kids, it's really obvious. Like, hello, I'm trying to drill that into my kids because they're always worried about everybody else, and yet they're not focusing on themselves. Just like what I said in the beginning, when you got to look in the mirror. Look, I'm not trying to point out things at you to make you feel like I'm judging you or whatever. Okay, I'm not. I'm just saying, look in the mirror at yourself. Don't worry about what everybody else is doing. Don't worry about Guru Joe. You worry about what you're doing and focus on consistency. Okay. So Tesla right now, good question here. Igor is asking me about Tesla. Tesla is at a really great place because there's two opportunities in Tesla. If I draw this trend line right here, if it breaks below here, we have a short right off the top, and we could come back down, and that could be a big downward move. I mean, we could get down here to 40 bucks. Okay, but if it breaks out of the top here, what could that mean? And I don't really go for like too much fundamental. I heard one guy say that he thinks that recession's coming. He thinks Teslas are going to stop selling as hot, and he thinks that they're not going to be in as good shape because of recession. And so he thinks it might go down. I heard other people saying that the recession's a myth. It's not really happening. I don't know, but I do know this. We're in a little tiny triangle. I don't know if Tesla's going to go up or down, but I know this. When it breaks out, it's a good trade either direction, up or down. Okay, up or down, it doesn't matter. All right, so great questions. So here's what we're going to do. So somebody's asking me, how many swing points do you look at before drawing a trend line? Well, if we look at this one, you can see we had 1, 2, I didn't even draw these, 1, 2, 3, 4, 5, 6, and to me, I don't necessarily get too worked up over that kind of stuff. Like some of them have a lot of touches, like this one had a bunch, and this one coming down has a bunch. But what I really look for is at least one, because I'm looking for the trend change, right? So in this case, if I deleted all these, and we just go here, I'm looking for it to change directions. And so this one wasn't really a change, but right here was the change. And once it changes, then I'm just looking, okay, right here, boom, look, down, up, fake, there's a short. So really I only need one. I only need it to break the lower, back up, retest. Once it backs up and retests, then I'm short. And so here, shorts, I'm looking for short trades. All of these are short trades, because once it gets out of that upward trend, I start using the short trades, okay? So, right, so Steve is saying, and by the way, you guys ask questions, I'm gonna show you one more thing. If you're interested in my my prop firm, but here's the thing, okay? Steve says the lots don't matter, it's the margin. That doesn't even really matter so much. Margin doesn't matter either. Honestly, what matters is that you're consistently making money. If you can hit 55% one-to-one risk to reward ratio, that's what matters, not how much your size is. If you can make So keep your size as small as possible. Let's go back to that spreadsheet. Keep your lot size really tiny. But what matters is, can you hit 11 out of 9 trades? Can you do that? Can you hit 11 out of 9 trades at risking $1? Don't worry about your lot size, and until you can do 11 out of 9, don't worry about it. When you do 11 out of 9 and you're making $1 each trade, then bring it up to $2, and then do it again and again and again, and you slowly increase your size. And once you're good at it, then get into my prop firm, which is at globalproptrader.com, right? Where you can get access to a $10,000 or a $10 million or $1 million account, right? That's what matters, okay? And so, Edward, I trade on options, stocks, and Forex. Yes, the strategy works with everything, but really what you need to worry about is being consistent, okay? Now, with that being said, I want to just put my slideshow back up because we're just about out of time, but I'm just going to say, send me an email. If you're interested in, send me an email at kcstubbs@gmail.com, okay? If you're interested, let's stretch this out, in working with me, where I will show you step by step, I can coach you on how to do this. If you're interested in getting your hand held, get training like this, accountability, and get you into a $1 million account where you can learn to be consistent, where you will learn to be held accountable, where you learn to make this happen. If you're interested in that, just send me an email. We'll get you into my $1 million prop account right here at kcstubbs@gmail.com. Okay, and I'll just send you the details on it. Okay. If you're interested in that, let me know right here. And I'm sorry for, I need to make this just a little bit smaller. Let's see. How do I do that?
I put it in the chat for you, Case.
Okay, thanks, Rob. There we go. I'm getting it. I did it. All right, well, I'm done. And thanks a lot, Rob.
Case,
Thanks a lot.
thank you. Great stuff. Not only is your story incredibly inspirational, father of 9, military vet, blue collar worker, perseveres and succeeds. Great presentation. I loved it. Your step-by-step guide to making 10 grand a month in the markets is like a must-have for all traders. Thank you so much for making such a generous offer to our members. Ladies and gentlemen, if you want to consistently find accurate entries, even in this crazy market environment, and have the ability to make 10K a month trading the markets, you can contact Casey. He put his email address up. I put it in the chat. He's of tradingstrategyguides.com, and we've placed the link in the chat. Thanks again, Case. I love your story. I hope you have a great week, sir. We hope to see you back.
Thank you.
Be well. Well, ladies and gents, as I mentioned at the top of the show, we have a great lineup, and our staff at Traders Corner sifts through hundreds of pro traders and brings you the most credible, qualified to participate on our shows. And our next presenter is no exception. He started his trading journey in 2006, trading firm money while he attended the University for Finance and Math. After that, he became completely hooked on trading the market, working for hedge funds, prop firms, technology companies, and individual traders. As a chartered market technician, he uses his technical knowledge in combination with years of quantitative and algorithmic trading to combine the best of two worlds to create a unique trading style. Here to present Anchored VWAP, the ultimate sentiment indicator, is Mr. Michael Nauss of Trade Ideas. Welcome back to Traders Corner, Mike.
Hello, can you hear me all right?
We can hear you now. See your screen too.
Perfect. Awesome. Thanks for having me back. I love doing these. I love hearing from, I love these types of webinars where you get to hear from different traders who do different things and focus on different markets and all the cool stuff that that comes with that. So
thank you for that. And I want to thank you for an additional thing. When you talked about RSI and not, looking to buy something that's oversold, but buying something that fails to get oversold, you've improved my profit factor, and thank you so much for that.
Oh, that's awesome. I'm so glad to hear that. I think there's so much miscommunication about indicators that you need to be a math nerd like me to really dive into to learn more. Which, speaking of, we're going to be talking about another one today, and one that I'm super excited about. So maybe this will help you out as well.
Hey, can't wait to see it. Take it away, brother.
Awesome. All right, so I am going to just get started here. I'm just making sure that everything's working all right. So we're going to talk about anchored VWAP, the ultimate sentiment indicator. So first of all, we have to get some of the stuff out of the way. I'm sure you've seen a lot of, but I am obligated to leave this up for a period of time and just remind you guys. So Trade Ideas at its core is a scanning and alerting, a backtesting platform, a charting platform. We sell the picks and the shovels for those who want to go up in the hills and try to find gold in the trading universe. So what we're not is a financial advisor and all that kind of stuff. So I just need to leave this up to keep the lawyers happy in case one of the compliance guys are peeking in on this webinar and make sure I'm doing all that. So next, just introduce myself briefly. I already had an amazing introduction going into this, so I'll keep this one relatively brief. But my name is Michael Nauss. I'm a chartered market technician, a chartered alternative investment analyst, and I have a certificate in derivatives market strategy. So that's a whole bunch of fancy stuff going on in there, but essentially means you can see the gray in the beard. I've earned that over periods of time looking at the markets. I started prop trading in university. You guys just had a prop trading firm right before me. Back in my day, the prop trading firms were all like local floors. So a guy came to a job fair, invited me down and asked if I played video games. And I said, yes, I'm an avid StarCraft player. Back in the day, for anyone who's an old video game player will understand that. And he said, you're hired, without even seeing that I was studying finance at the time. Because back in the day, before the HFT algos, we were the HFT algos. So being fast on the keyboard was really, really important. After that, I spent about 10 years in the hedge fund space. This was around the Bernie Madoff time. So everyone was worried about everyone else. So they paid me to essentially go into hedge funds as someone who had traded for a period of time and ask the traders what they were doing and how they were making money and what the risks of their trading strategy was. So that was an amazing opportunity to see how the big guys go. Then I'm currently an algorithmic day and swing trader, and I'm a consultant for Trade Ideas. So here's my Twitter, just Michael Nauss CMT. I'm a very Googleable person if you want to find more of the stuff that I do, and my personal website, just Stats Edge Trading. But I am here today to talk about Trade Ideas. And a quick question: is the question and answer panel, is that sorted from the top or from the bottom? I can't remember. I just want to make sure I've got an eye on them as I go, but I think it's sorted from the bottom. I see my name in there.
The most recent.
Perfect. Thank you very much.
They're timestamped.
Awesome. Thank you. All right, so we are going to talk about anchored VWAP. And I am not going to take credit for a lot of this. A lot of what I'm going to talk about is a product that we have built in conjunction with Brian Shannon. So he is a friend of mine. He's kind of an OG, a bit of a history of Brian Shannon. He is one of the OG original YouTube finance guys. He started his YouTube channel in like 2006. So what I did a lot when I was at that prop firm in university is we would have a daily stop limit, which I hit fair amount, just like a lot of traders, where it puts up a big red clock and it says you're done for the day. But instead of going home and admitting defeat, I would sit and I would watch Brian Shannon's YouTube videos. So he's been doing it forever. He's a very, very good trader, and he has kind of pioneered, not invented, but pioneered the use of anchored VWAP. So we're going to talk about all this today. I just wanted to preface this right off the bat with kind of where the source material comes from, and I am holding in my hand a copy of this book. So I'm going to leave it up on screen for a second, again, to give props where they are due. Maximum Trading Gains with Anchored VWAP by Brian Shannon. You can find it on Amazon. I think it's on Google Books and Apple Books and all that kind of stuff as well. Very, very good book if you want to go in incredible detail. It is very long. You'll actually see my name in it being mentioned, I think twice, with about 250 pages. So we're going to do an overview, and I'm going to show you kind of the tools that we built with Brian in Trade Ideas for this particular feature. But again, if you want to go really, really, really deep and you want to know a lot about this, highly recommend the book. So I just didn't want to come on here and pretend that this was all me. So I always credit where it's due. So those of us who are day traders or have tinkled with day trading and played with it a little bit, we all know, generally speaking, what the VWAP is. And this is for intraday trading, and I'm going to start there because I think it's a good way to kind of explain the indicator and what it's used for and how you can play with it, and then to expand that out into a little bit more about how we're going to take a look at it from an anchored and more of a longer term swing trading, investing type of a basis as well. But you can use this for both. So ideally, you load up most charting platforms in your broker and you're looking at day trading, and it kind of looks like this, where it's got your price action, and then if you put in the VWAP, it's this somewhat flat line that does some movement at the beginning of the day and then kind of flattens out. Now, what is this and how is it calculated? So let's quickly go into some math, but don't worry, there won't be a test. Essentially what we're doing is we're saying we want the typical price, so an average price multiplied by volume, divided by the cumulative volume. And again, don't worry, there's no test there. So we'll leave an anchored VWAP chart up here, or a VWAP chart, while I explain this. This is from a trade I took a couple days ago when I put this together, I think 2-3 days ago on Airbnb. So the idea of the VWAP is where most moving averages, let's just use a 10-period simple moving average, that is calculated by taking the 10 last closing prices, adding them together and divide them by 10, right? It's a very simple idea. When a new price comes in, you drop the old price and you continue that way. And they're used for a very long time. The reason moving averages are used so much is because of their simplicity of calculation back when people used to do this by hand, which I attended the CMT event in New York, and I was actually able to meet people who that's how they started their trading journey. So you better believe that there's a lot of them still about, and some of them still calculate them by hand. Now, what does a simple moving average like that lack? Well, it lacks any sort of discretion of what is a price, what is an important price and what is not, because it's just taking the 10 last moving average prices, dividing them by 10 and giving you whatever the 10 period moving average is. Now, an anchored VWAP basically takes every price that's gone by and every trade that's gone by and weights them in that way. So if there is a candle that has done a whole lot of volume, that is going to move this moving average, this volume weighted moving average, lower if it's under price, or higher if it's above price, right? So it is adaptive based off of where that volume is occurring. And that's why when we're looking at the intraday chart, we generally see it move a lot in the morning and then flatten out in the afternoon and stay flat out in the evening, because as we know, most volume in the market takes place in that kind of first hour, give or take. So that's interesting, and that's why it's calculated. But why and how is it used? And the main reason, the main purpose behind it being used, that is allowing this to be a significant moving average, and the fact that it's something that everybody is looking at across hedge funds and institutions, day traders and swing traders and all that, is the main reason is that it is, first of all, ubiquitous across everyone, right? We're talking about the intraday one right now. It is all anchored at the beginning of the day. Everybody who has accurate data on their charting platform, the VWAP is in the same place. That's one thing that makes it really interesting and important for trading. The other thing is that it is used as a way to reward hedge fund traders and execution brokers. And as you saw in my little bio there, I spent 10 months or 10 years in the hedge fund space, so I can certainly attest for this. If I, for example, said, I want you to sell Airbnb, I think this chart was maybe after the earnings date or something after that. And I'm a hedge fund manager, and I read the earnings report and I said, oh, I think this is bad. I want to get out of my Airbnb position. And I give that to my execution broker. How do I know whether or not that has execution broker or my trader has gotten me a good price? Because as a large institution, I don't have the ability, I don't have the pleasure like we do of just simply clicking a buy and sell button, right? It takes me long periods of time to get into positions and long periods of time to get out of positions just because of the amount of size that I have. If I'm buying or selling millions of shares, it's going to take me a long period of time and to get in, a long period of time to get out. So if the trader comes back to me and says, oh, I got you 108 was your average fill. Like, how do I know whether that was a good one or a bad one? Because the trade went over maybe the entire day if I'm a smaller fund, maybe the entire week if I'm a medium-sized fund, maybe months or more if I'm like a massive guy like we're seeing with Warren Buffett and Oxy, which I'll talk about in a bit. So how do I know if they get a good trade? Well, the VWAP is generally used as this kind of anchoring mechanism, so I know what the average price paid by a market participant for that day is. And right here on Airbnb, it's this black line right here. This is the average price that if you took every trade that occurred from the beginning of the day until when I took the screenshot, that was the average price. So if I'm tasked to sell that, I want to impress my boss, or if I'm an executing broker, I want to impress the guy who's giving me the order by getting him a better price than that. If I say, hey, I got you 109, and he looks at the anchored VWAP or the VWAP at the end of the day, and that's sitting at 108, he's like, okay, he got me $1 better than what the average market participant bought or sold this stock for. So I like him. I'm going to continue doing business with that guy. If he's an employee of mine, maybe I buy him some Knicks tickets or something like that, right? And sometimes it's actually built into your pay structure where, you know, because you're a trader and your job is to get the best price. If you do better than VWAP for a period of time, sometimes you just get rewarded. So you get money based off of what you did better than just an average market participant is. So that's for the day, and we're talking about anchored VWAP. So we're talking about for longer periods of time, like, because all VWAPs are anchored somewhere. You have to, because it has that cumulative volume that we talked about. And so let's kind of expand this out. So it's funny, I got some proof here. So, right, we all know ChatGPT. We're all terrified that it's going to take all of our jobs and maybe enslave us. Who knows? But I simply asked it yesterday. I said, what's the most common execution algorithm used amongst hedge funds and institutions? And then, you know, it does a little cover its butt. It doesn't want to say that there's a common one. Then right away, the number one was VWAP. VWAP algorithms aim to execute while minimizing impact of the market over a period of time, trading day, blah, 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 blah. Basically, this is known, right? This is a very known thing that these trades will take place around these VWAP kind of institution or VWAP indicators, which is why they can become very powerful. This is something I took from a Hedge Fund Weekly, which is basically talking about how different hedge funds will fight against different other hedge funds around VWAP algorithms to score these prices. Again, if you are a massive institution, if you're trading $100 million or $1 billion, I think the largest hedge fund I ever sat across the quarter was a $10 billion fund. Whether or not you get 108 or 109 on your entry and exit prices is a big deal, right? It's a percentage points. It's millions and millions and millions and millions of dollars. So these VWAP algorithms are not only being done by single institutions, they're being done by all institutions. And I know there's like this whole thing with Wall Street bets and everything that hedge funds are all out to get, you know, they're all a big conglomerate and they're out to get everyone. It's not true. They're out to get each other, right? They're all competing for money together. So they're all using these VWAP algorithms. And then this one, I think, was just on RBC's website. I'm a Canadian. This is a large bank we have where you can use their VWAP algorithm as a institution or even as an individual investor. You say, hey, I want to buy XYZ. I don't really want to play. This one's using VWAP and AI, just pulling from everywhere I can, just saying, hey, if you want evidence that VWAP is used a lot as a place that traders and institutions will buy and sell, look no further. Quick Google search will get that for you. This one was interactive brokers, which is actually where I use a broker at. And you can use VWAP algorithms built into retail trading platforms and RIA trading platforms and that type of thing. Again, to offload and to make algorithm and to make into an algorithm and to try to get these great prices on what it is you're buying and selling. So the fact that we've talked about that hedge funds and institutions and even down to retail brokers all use VWAP to enter and exit trades, well, then VWAP is going to be pretty important, right? I think I've proved that as something that you guys can take a look at. So the question is where to anchor your VWAP. So this is just anchor, no, nothing to do with the market in this shop, but that's really what it comes down to is, okay, so I understand fully that VWAP is important. I get it. Now, the day VWAP is simple for those day traders. You anchor at the beginning of the day, you watch it trade, you kind of see what happens around that price and you can place trades. But what about us swing traders and long-term investors, right? So again, this one's anchored at the beginning of the day, but we want to make sure that we're anchoring to other places that we think larger institutions may take action on. So the first idea here, and this is a chart, just the purple line will always represent the anchored VWAP, and this is a daily chart, and we have these picture-in-picture charts that we're playing with, and they're kind of cool. I'll show you. So then in the bottom corner here, there's going to be, this is a 30-minute chart, so you can see a little shorter-term action. But this is the anchored VWAP from the IPO price. So this is the IPO price of STR. And you can see when it's under this anchored VWAP, a lot of stuff's going on. There's some accumulation going on by institutions. And as it breaks through, this thing just rockets. Twice now, it's gotten through this and held through this anchored VWAP from IPO. Now, if you think about it, anchoring a VWAP from the IPO is pretty similar from anchoring a VWAP from the beginning of the day. As opposed to just doing the beginning of one day, you're doing the beginning of the lifetime of that particular security. So STR was, I don't know where it is now, but 2 days ago or so when I built this, it was about this area. Maybe it's going to go and do that again, who knows. Here's another one anchored from the IPO priced right here. You can see that anchored VWAP acted as resistance for a long period of time, finally broke through, and look at the explosive move it went. Now that might mean that there was an institution that was using this anchored VWAP as a place to sell. They had an order to sell, the stock IPO'd, and then maybe there was someone who was owning a lot of stock from the pre-IPO, a founder or something, said, hey, I want the average price, but I want you to get me out. You can see every time it hit that area, it fought for a while and then sold off, and then maybe this point right here is where the sell order was lifted and there was no longer anything in its way to stop it from running. You can pull back and it was right here, maybe it's going to test here as well. The other way to do it is from large gaps. So we talked about anchored VWAP from IPOs. What about anchored VWAPs from large gaps? Now this one is super interesting to me, and I'll show you the setup that I'm trading myself with it now from the swing time frame that I really like. This is ELF, which has just been an absolute monster. There's some sort of beauty supply type of thing, and it gaps up. So this shows, again, we got to remember what the anchored VWAP is telling us. It's the average price of all market participants is right here. So from the gap, from right before the gap, the average market participant owns this stock at this purple line. So as soon as it gets there and it plays around there for a bit and bounces off, away we go. Yeah, so this anchored VWAP from this gap is very, very interesting. And I have some more evidence here as well. So RCL, which we'll talk about today, I actually bought this on the day that I took this picture. It's actually trading up a little bit. Same kind of thing. It's saying, what is the average, where does the average market participant live from whatever point we choose to anchor? That's what the anchored VWAP is telling us. So now we're going in, we're saying, where is it important to anchor? IPO is one. These large gaps seem to work as well, because let's pretend I'm an institution and we see RCL gap up because we know that whatever, sorry, this yellow line right here always represents earnings on our charts. So it had great earnings. So I don't know what it is. I'm not a fundamental guy. I'm a quant and a technician. So RCL did something good on earnings, and we know it's good on earnings because it gapped up that day and then it ran the next couple of days. So there was some positive buying on earnings. So where am I going to buy, right? If I'm an institution who's been said, hey, RCL earnings was great, buy it and get me a good price. Well, what's a good price? Maybe the anchored VWAP from that gap price. And you can see it came right back down there, held in perfectly. There, looks like there may have been a large institutional order directly at that price. SMCI, I took this, I swear to God, I took this before yesterday's action, and I actually own some of this as well, a little bit above 140, same kind of thing occurs. So SMCI is a semiconductor company, gaps up, runs right after earnings. So it shows us whatever they talked about on earnings was good. Pulls back, hits that anchored VWAP, holds right there, and then you can just see it looks like 140 was kind of resistance. That's why I bought it as it went through there. We can look at that chart too, that's up. I haven't looked at it today, I've been too busy, but yesterday it had a monster day. Now, what about turning points, right? So we talked about, basically we're trying to predict where are the hedge funds anchoring their VWAPs so that that's where the trade is going to occur, right? IPO makes perfect sense. It's the beginning of the stock's life. Large gap makes perfect sense because that's a news catalyst that will interest a fundamental shop like a hedge fund or a mutual fund or a large institution. So what about swing lows and swing highs? So I anchored this VWAP right here on Netflix from its all-time low, or not its all-time low, it's bear market low, right? After Netflix kind of fell apart there. So as it's trading above this, people might go, oh man, the low is in for Netflix, and I like it for whatever fundamental reason I like it, but the low looks like it's in for Netflix. So then again, they go out to their execution broker, they go out to their trader, and they say, I want you to buy me Netflix, and I want you to get me a good price, and I'm going to find a good price as relative to the anchored VWAP from that low. I want to get a good price around that low. I want to get a better price than the average market participant that started buying Netflix at its low. And you can see it came right back down to that price and off to the races. So here's some that just I was looking through and I saw TU, that's TELUS. As a Canadian, I can tell you they're they do some stuff with medical stuff. They're basically a cell phone provider. That's a major important swing low. You can see it sold off dramatically from that point. Then it bounced dramatically after that. So marking that as a very important swing low. Pulls back in right here, holds, right? So maybe tell us if it starts to move higher, maybe that's going to be a good one to look at. SRGY, same kind of thing, very significant and important low right here. We can anchor from that low and we can look to see what happens when the market pulls back. As the book from Brian Shannon, which again I highly recommend picking up, will tell you is you don't just buy it when it gets there. You kind of watch price and say, is there, because we're trying to guess where the hedge funds are going to execute their orders. We don't want to assume, but we can tell because again, these guys aren't small. They can't get in and out easily. They have to get in and out very, very difficultly. So that gives us a little bit of a chance to make sure that we're kind of in the right direction there. So then the last kind of thing that I'll show you guys today and the kind of crescendo of all of this is what about the anchored VWAP pinch? And we're going to look at this point right here. And this is basically, we anchored a VWAP from the low. And you can see how that was acting as support for a very long period of time and still was on the last little pullback. So a very important anchored VWAP. And then we also anchored VWAP from the high. Again, going back to what is this telling us, right? What is this telling us? It's telling us the average market participant. So say you dollar cost averaged into AEHR from this low. This would be what your average price would look like. And again, with institutions executing around that order, that becomes a very important price. Now, so what about this anchored VWAP from the high? Well, it's the same thing. If you started to buy AEHR from this price, you can see that you're down money, you're down money, you're down money until kind of right here. This is where all of a sudden you're up money if you started buying it at what was at a time the worst possible price up here. And then ever since it's been above that, it's been great. That's why the title of this is the ultimate sentiment indicator, because we know where the average price is. And we all know, regardless of what all the polls will tell you, it is not price, or it is not, you know, polls or people's feeling that drive sentiment. It's whether or not they're making money or losing money. That's what's really going to drive sentiment on a stock. If you're making money, sentiment is good on the stock. You're happy. If you're losing money, your sentiment is bad on the stock, right? You're not so happy about it. So this is the moment that the sentiment on AEHR, I don't know why that's so hard for me to say, that changed. And you can see kind of the massive pop that happened after that. And then this VWAP became significant kind of from that point on, and we're hanging out there now. So here are some anchored VWAP, and this particular one is just called the anchored VWAP pinch, which basically means you're above the anchored VWAP from the low. So these people are happy, but you're below the anchored VWAP from the high, and these people are sad right now. But in the way I look at it, is it's a way to quantify a bull flag, essentially, which we all know a bull flag is big push up in price, sideways consolidation, and then a breakout of that price. And this is a way to quantify that by saying, I'm interested because it's holding this lower anchored VWAP, which shows me there's buyers in this area. But the people who started buying right here after earnings, well, they're underwater. So they, you know, they're not doing too well. If we break out above this price right here, those people are doing well again. So sentiment has flipped. Maybe this thing will start to move. Berkshire Hathaway, I included this one just because it broke out yesterday when I put this together. Said, hey, maybe this thing's going to continue. I think we're seeing some of that continuation right now. So I'm going to go into the platform and I'm going to show you, because I see some questions about how you anchor it and where you anchor it. And that's the thing that we built that is really, really awesome with Brian Shannon. Not only will Trade Ideas now scan for those setups that I described above, for stocks nearing their IPO anchored VWAP, for stocks nearing an anchored VWAP from a large gap or a significant higher low, we'll scan for all that for you in real time. And it also draws the anchored VWAP for you, so you don't have to do it. You just click through the chart and it draws the anchored VWAP and it shows all of that for you. So that's the thing I'm super excited about. I spent a lot of time working on it. A lot of people did. It's really, really, really cool. Now, if you're interested, trade-ideas.com/Nauss. I'm actually going to just put this in the chat as well so you guys can click. This will get you to, where's the chat? Right here. Boom. All entire audience, right? Send. This will get you to what we call at Trade Ideas a test drive. So for a very low price, I believe that low price is $10. You get 2 weeks free of Trade Ideas, including this anchored VWAP product, so you can start playing with it for yourself. If you end up liking it, stay tuned to your emails, because after the test drive, we usually give out a pretty sick deal for people who want to then become monthly subscribers. So I'm going to take you into the program. I'm going to show it to you, but just know Trade Ideas, trade-ideas/Nauss will allow you to have 2 weeks free, or not free, $10, basically free, to play around with the program. And that covers our data fees and all that kind of stuff, which is why, because we provide real-time data on the US market. So I'm going to go in, here's the platform right here. I'm going to go through some of the questions as well. This is the best time to ask questions as it goes. Feel free to kick me out if I'm going over. I believe I've got like 10, 15 or 10, 12 minutes left. But we'll go until I get the hook. I came here for Michael. Thank you very much. I'm glad someone's here for me. Will it work on Forex? Yes. Now, Trade Ideas doesn't do Forex, but in my talks with Brian Shannon, again, he's a friend. He's a friend of Trade Ideas and he's a friend of mine. I asked him about it and he says, yes, he knows a lot of people that use them in Forex. The only issue with Forex is that because it's not a centralized exchange, sometimes the volume part of volume weighted average price can be a bit weird. So make sure you're using wherever your broker is getting its data from, it's approximating volume really, really well. That's the one caveat he says there about that. So ES or NQ absolutely would work. I can show you some stuff on smaller time frames. We don't deal with futures. We're a stock at here. How do you anchor the VWAP? So we'll go over that. So first of all, you can in Trade Ideas. So this is Trade Ideas. Again, we are scanning, alerting, auto trading, everything from low float momentum stocks, if you're that kind of guy, to long-term dividend stocks, if you're that type of person. I know last time I was on, I talked about this very long-term RSI idea that I had, and everything in between. Again, we sell the picks and the shovels. If you want to scan, we'll build you a scan. And it will help you find whatever it is you're looking for in the market. Just wanted to say, we do a lot of stuff. I'm focused on a very, very small subset on what we do. So we can draw the anchored VWAP ourselves. So if we just go to the SPY, right, we can draw the anchored VWAP ourselves just by clicking on a little anchor thing that we have up here in the charts, and we can draw it. Boom, right? And it just draws out for you. You know, that's how we can do it within our charting platform. But the stuff I have to do is really, really cool as well. Michael Nauss, can we use a VWAP for intraday trades? Yes, I got some ideas for that as well, right? I don't have VWAP in my charts. Sorry, I can't help you there. We will get into Forex eventually at Trade Ideas. We're just not there yet. So, like I talked about, yeah, you can draw the VWAP yourself, and that's kind of fun. Let's get rid of this picture-in-picture chart for a second. But we can just load up, and if you have Trade Ideas, and if you're taking our test drive, you'll have access to this. If you have Trade Ideas and the anchored VWAP add-on that we've put together in conjunction with Brian Shannon, well, we'll do it for you. So this scan right here is the anchored VWAP from large gap that I talked about before. If we go click on RCL, which again, it was in the presentation right here. I own some at, I think it was like 66.50, I think, somewhere in this area. And you can see it just drew it there for me. Now, if I just go to RCL on its own, it's not going to draw it there for me because it doesn't know what I want to do, right? So I type in RCL. And if I wanted to do this myself, I'd have to then go in and draw the VWAP and do the analysis like that. But with the product that we built, and this is the really cool thing, it just draws it in for you. And again, this is the chart that I showed in the presentation. You can see how it popped after that fact. And as I click through these, you can see it's just drawing them in. So this VSH is something that I'm very interested in if it closes up here. Because again, we talked about how important this anchored VWAP from large gap. I don't know what these guys do. I don't know much about them, but man, that earnings is positive. Pulled back down, settled into that anchored VWAP, could be the sign that an institution is looking to buy this thing at that good VWAP execution price that we talked about, and popping off that. So as I click through these, you can just see, looks like that one's a buyout. But you can see these are being drawn in, right? McKesson, and these are basically gap up, it pulled into the VWAP, and you go. And the important thing to note is I am not asking it to find things that are pulling into the VWAP a few days ago. It's just it just works so much. It's crazy to me. I haven't added a new indicator to my trading repertoire in like 10 years because I'm an old man. But this one, after talking with Brian, I'm really interested in. So it's basically just looking for things in close proximity to that anchored VWAP from large gap. So here's Array, right? Same kind of thing. Whatever happened on this earnings day really reversed this price and started to push higher, and every time it's reached that anchored VWAP, seems like there's some buying in there. And again, what we're trying to do is we're trying to look and we're trying to say, is this something that I'm interested in, and is there a hedge fund or an institution that seems to be accumulating these things into this trend, right? This PNR seems to be this VWAP's acting as a floor. So I would look at this and you just apply your basic technical analysis to it. PNR, maybe if we get over $60 a share, we're interested. We know if this anchored VWAP lets go and there is no buyer in there, you know, it's time to go. It's time to move on. Again, just clicking through some of these randomly, seeing what they look like. Here's Lulu. So this was earnings on Lulu right here on this massive volume day. Now it's kind of come back. It's a little bit shy of that price, but we got some bottoming tails here in Lulu. Maybe this might be a good place to take a trade as well. And again, all of these are being drawn for you, and I'll show you that by I will switch into a different scan. So we'll go to AVWAP and let's do the AVWAP from IPO. Let's see what's going on there. So this is all the stocks that are near their anchored VWAP from their IPO price. So BVHN. So I click on this and it's drawing. I think I have to go further out. I think this one's traded longer. Yeah. So this is the start date for whatever this BVHN is. And it just draws in the anchored VWAP from IPO. So it's pulling the information from the scan and popping it on the chart for you, hopefully saving you a whole bunch of time. And you can see it seems to be acting as a bit of a magnet, right? Came down to it, that held as support, bounced off, and now it's been really fighting it here. So I'd want to see a move off of this anchored VWAP one way or the other, because you never know. There may be one institution that's using this to buy, there might be another one that's using it to sell. You have no way of knowing, but you know, a simple trading plan would be, okay, we got 15 as the high, we've got what's this, 1250 is the low. Breaks 15, great. If breaks 1250, great. You know, if you're someone who trades kind of in both directions there. This is the STR that I talked about. I think it was this candle. I think I built this presentation 2 days ago, and it looks like we're right there. So this is the one that popped twice as it broke this anchored VWAP. So again, we're using these things not as buy here, sell here. Like I talked about in the last presentation I did with you guys, I don't really believe in that as buy here, sell here, and that's how you trade. But I'm looking for ones that anchored VWAP seems to be important, and that maybe we can use price action to trade off of. Whatever getter is, GETR, you can see it IPO'd at $3 and absolutely just cratered. And now it's fighting this anchored VWAP from its IPO. So this one isn't really something I'd be interested in, but you know, it's got a pretty clear high here, like 75 cents or so. If it gets over that, that'd be interesting. So that's the killer thing that we're doing that I find is absolutely amazing, is actually drawing this for you just to save you so much time and energy as you're clicking through names, as you're clicking through stocks. Let's take a look at some anchored VWAP pullbacks. So these are the ones that are pulling back from a significant low, and we can see whether or not they're acting as support. So this SKY, basically in this scan, it's looking for the lowest point in a period of time. So there has to be trading above it on one side and then trading above it on the other side. So you can see this thing sold off, put in a pretty significant low around this area and then rallied. And now it's back down here. So if there's someone basically who missed this low and is using this anchored VWAP as a place to place a trade, then we know that that lines up kind of right with this area. So we can take a look at that and we can, I'm zooming the wrong way. I'm trying to zoom in, not out. There we go. You can see it seems pretty like it's one of those things. It's just crazy how much I see this thing actually work. You know, Brian, as a friend of mine, has been telling me for years to take a look at it, but until I got into the math as a big math nerd, I didn't really buy it that much. But man, you know, like low right here is the anchored VWAP, low right here is the anchored VWAP. This day's low is the anchored VWAP. Today's low is an anchored VWAP. So I would look at this and say, okay, as long as someone's accumulating in this area, that's interesting to me. The bold might actually just buy it down here. I don't think I would, but if it gets above this kind of 289 and starts to push higher, you may have a good trade there. And again, it knows exactly where it's time to draw that VWAP. So we talked about significant turning points in the stock. This is definitely a significant turning point in the stock. Big push up, comes back down, and it's at that VWAP. Again, the book gives you, if you want to buy it here, go ahead. But more likely, what I would look for in something like this, Consolidated Energy, Consolidated Edison, which is really boring stock anyway. But if it consolidates here for a period of time, starts to move higher, that's more evidence to me, right? I'm not just going to buy it because it hits a point, and that point becomes interesting, right? Like what we're seeing here, you know, we anchor to this low right here, this very significant low, pulls back, and so far it's acting as support. So if this thing breaks up, that's an interesting look there as well. So I'm just going to look at some questions here. Again, give me the hook whenever it's time to give me the hook. But does Thinkorswim have this? I don't think so. I don't think they have, well, they definitely don't have the scanning capabilities. So one thing that we do at Trade Ideas, which is really unique to us, is the depth in which we scan. You know, we score, just so you know, when I was building this system, I got yelled at a few times by our developers because I crashed the system, I think twice. Now, if we go back to that math equation that I put that shows how you calculate the anchored VWAP, it has to record every trade, the closing price of all these candles, the volume of all these candles, and then the cumulative volume across wherever the anchor is until now. So it's detecting the low, it's detecting and it's counting all of this data, and it's doing it for every stock across the entire market, and it's updating this. If you see at the bottom, there's a little countdown here. It does it like every 20 to 30 seconds. So you can just imagine the amount of processing power that this is taking in the back end. So can other places have anchored VWAP stuff? Yeah, maybe. The combination of the ability to have both the scan and the drawing in is just really, really, really server intensive. So yes, I think a lot of places where you can draw, I know TrendSpider, TradingView, I don't know about Thinkorswim, I'm Canadian and they're not really good here. But you can draw the anchored VWAP. That's a very common thing, right? So if you're interested in doing all of the drawing and all of that kind of work yourself, 100% you can do that with a couple different trading platforms. Again, where we're shining is scanning and then kind of drawing these in for you.
Mike, you never cease to amaze me.
What's going on?
I love the anchored VWAP. In the interest that you were just about done with the explanation, I think it's a good point to interrupt you.
No, it's perfect. I could go on forever, so I'm always glad when someone comes and gives me the hook, so to speak.
Well, let me tell you, you have me thoroughly impressed, and I sent you my personal email in the admin chat. I would love to do a follow-up with you, but I want to thank you for being here. As always, a great presentation. In the current trading environment, that was extremely relevant, and the examples you showed, you know, where it respects it, it is obviously working out beautifully. You know, your presentation shows how clearly, you know, how powerful something like this is, and could be considered the ultimate sentiment indicator. So great information, ladies and gentlemen. If you're interested in compounding your portfolio by always rotating into the strongest names and having ability to exit trades that have lost momentum, then look no further than Mr. Michael Nauss, who's a chartered market technician and has your solution. You can find him and take advantage of the special offer. $10 was a good estimate. I think it was $11.11 when I saw it at www.trade-ideas.com. It is in the chat box. Thank you so much, Mike, for taking the time out of your day to join us. We hope you can come back and see us again, and I cannot wait to see what you want to present next.
Absolutely. It was awesome. I can't wait to be back, and I'll talk to you guys soon.
Hey, have a great week, brother.
You too, man.
All that will bring us to our next presenter, who is a seasoned trading professional with over 14 years of experience trading the market. Over the years, he's tenaciously studied charts, strategy, and trade plan development. And since his own enrollment in NeuroStreet's coaching and training, he's found a way to consistent, profitable trading for several years now after facing a grueling 10 years of break-even anguish. He's a highly sought-after guest speaker for virtual events worldwide, tasked with educating and sharing his insights on how other traders can pull themselves out of the mire and into consistent profitability with discipline, proper money management, and a greater focus on the big picture. Here to present day trade stocks and options without using your own capital is Mr. Jim Simmons of NeuroStreet Trading Academy. Welcome back to Traders Corner as always, Jim.
Yeah, great to be here. Can you hear me okay?
Loud and clear, and your screen's up.
Screen is up and running. Good. How have you been? Everything going well? It's been a little while.
I can't complain. I took a nice little 20xer on the SPY breaking out today.
Excellent. Very good. Cool. Yeah, that was a big break. That was a good one.
It was
Yeah.
beautiful.
Awesome. Good. Well, you're feeling good then. So awesome. Hopefully everybody else is feeling great as well. I've got some really great stuff to show you here. So we're going to go ahead and dive right in the interest of your time and being respectful of that. So before we get too deep, we are going to be showing some examples of trades. So we have to show our disclaimer here. No financial interest in the outcome of your trades. We are not your trading advisor. We are educators. Products and services are used as such, and there is risk involved with trading. Please understand that risk. Who this is for. If you are a trader looking for better trades, if you're looking for consistent income, if you're in need of a winning strategy, or you're sick of getting stopped out, maybe you have no track record, maybe you're struggling, maybe you just want to add to your income, odds are that's probably why you're here, is for one of these very reasons. So if that's you, we're glad to be here presenting to you because this is for you. Who this is not for, well, if you already know it all, then I probably can't teach you anything. If you are looking to get rich quick, I'm sorry, it's probably not going to work that way. But if you're willing to learn and you're willing to put in some time and capital and willing to let go of the past, then we can help you. And if not, then we probably can't. So it's just good to get that out of the way and make sure we're all in it to win it, right? We've got the right mindset and we're ready to crush the markets and learn some new things. So setting the standard here. Again, as a quick intro, my name is Jim Simmons. I'm the manager of sales and education. I am a day trader. I also run our futures day trading room at NeuroStreet Trading Academy. Been trading the markets, gosh, it's going on 15 years now. Futures, Forex, stocks, I've traded it all. Crypto and DeFi, I'm involved in that as well. I've had the privilege of working, I'm fighting allergies too, by the way, guys. So please excuse me with the allergies here, but we've had the privilege of working with countless traders, and a lot of them come from all different walks of life, right? Coming from, maybe they're breaking even, maybe they're struggling, maybe they're brand new, traders blowing out accounts, blowing out evaluations, just all different scenarios. And we've been able to help those traders become consistently profitable, change their bad habits, learn some new things, and become successful. But here's my commitment to you. I've been around the industry a while as a trader and now as part of the team here at NeuroStreet. And, really the biggest thing that anyone wants from us is no nonsense, no false hopes, and to show us some real examples of real trades, real fills, and that sort of thing, real performance, right? And so that's our commitment to you, is that we're not going to bring any nonsense here. We're going to tell you exactly the truth here. So odds are, if you're here as well, and let's get a feel for who's here. How many of you are actively day trading? Let's just figure out, are you day trading? Oops. Are you day trading, swing trading? What type of trader are you? Are you trading stocks, options, futures, Forex? You can go ahead and type in the chat box. Let me know where everybody's at. Just good to get a feel. How many of you are trading evaluations, trying to get funded as a prop trader maybe? There's always a good crowd that are trying to do that as well. So go ahead and type that in the chat box so we get a feel for it. But and I'm not, frankly, I'm not sure how to see the chat box anyway, but I'm sure it's here somewhere, and that's okay. But really, odds are, if you're trading the markets, you're trading the markets either for significant growth or for income. Odds are, if you're trading and you're spending your time doing that, you probably want to see some return, either in the form of income or growth. And so the reality is, most traders are looking to make, if you're doing this for a living, which is often the goal is to work less and make more, right? And the goal is to make at least $500 to $1,000 a day and to have the freedom to live life on your terms. And so in the next 45 minutes or so, we're going to look at how our methods of trading are changing the world of equities and options trading, how you never have to trade your own money again, and why would you want to if you don't have to, the first ever equities and options funding opportunity, and how to create real day trading income. We're going to deal with some of the myths and the lies, get rid of some of the garbage from the past. We'll show you how to copy the trades of professional prop traders so you can earn while you learn and pass your evaluations or grow your own trading account. All right, so let's go ahead and dive into some charts here and take a look at some examples. So We have here at NeuroStreet, we have a stocks and options and a futures day trading room, but a stocks and options day trading room that actually trades the markets. Now, we're not just calling out, hey, look what the market's doing, or hey, check this thing out. We are actively scanning the markets, and we're actively trading the markets, and then we track all of our progress live. And so every trade that we take in the trade room, we do so in front of our students on funded prop firm accounts. And all of those trades are tracked for a sense of transparency and real performance, because we told you no nonsense, right? Now, most of you who are trading stocks are familiar with scanners, right? Everybody's got their own flavor, if you will, on scanners. And so we've built our own as well. And we have our own approach to that, where we're finding the absolute best stocks to trade right now at any given time, and which stocks have volume flowing into them at any given time. So we're finding stocks that are obviously going up and to the right in a high trajectory and have a ton of volume flowing in. And this is the what. This is what we're trading. This is how we find what we're going to trade. And this is where we find where we're going to trade, is of course looking at the charts. Now you notice here, I don't have a ton of fancy indicators. I don't have all this thing on. I've got volume. I've got a couple of exponential moving averages and a VWAP, and that's it. There's no other indicators needed. You don't need to use any sort of platform. The scanners that we use are Trade Ideas and TC2000, you know, just like anything else. Odds are some of you already have those. Okay, so very familiar stuff. So this is telling us what to trade. This is telling us where to trade and when. This is kind of the when too, right? So here's the breakdown of the trade. Market's going up. Huge move, a lot of momentum flowing in, a lot of volume. Market moves up, kind of goes sideways a little bit and then breaks out. We trade the retest. Now, the first thing we're going to do is we're going to look at a 5-minute chart and determine where generally should we look to get in, and then we filter that in on a 1-minute chart and we define that area even further to find the location that we want to trade. Now, in this case, you could have gotten in here, or you can find a better location at the edge of this area down in here, if you'd like. And either way, it's a winning trade. So rather than waiting for an apex break or waiting to trade off the highs or waiting for the breakout there or getting into a position that's adding additional risk, we're looking to get in at the best possible location. Because when we find the best possible location, we do two things. We can maximize our opportunity and minimize our risk. I'm sorry, I'm trying to draw with a mouse and it's horrible, and it is what it is. So how do we maximize opportunity and minimize risk? Well, we find a better location, because if we know that our stop needs to go down here, then what's going to maximize our profit is a better entry. And so that's what it's all about. Get your entry. Okay. Let's take a look at another trade. Again, hitting the scanners, we find it here. Hitting the scanners, we find it here. We've got market moving up, broke the highs, went sideways a little bit. Huge rally out. Quick trade. Take the money and run. We're going to take the money and get out. There it is on the 1-minute chart. There's another one. You can see market moving up, going sideways a little bit, coming back for the retest. There it is. We filtered it out on a smaller time frame. There's the trade. Trade back into the highs. So if you're looking to day trade stocks, I can tell you that we have an approach that is time tested, proven, it works, it's simple, anyone can do it. That's a pretty bold statement. Trading generally is not easy, right? So how do we make it easy? Well, we take years of experience, we build some really bomb scanners, and then we trade in the right locations. Now, how many of you here are trading futures, Forex, maybe cryptos, you know? So the fundamentals of the markets, the design of the markets, the design of the stock market is to go up. We always want the stock market to go up because that's when everybody's happy, everybody's making money, we're clicking our heels together, we're happy, you know, everything's great. But if the price of crude oil only ever went up, that would probably be a problem, right? If the price of euro dollar only ever went up, that would be a problem. Aussie dollar, whatever the case may be, right? That would be an issue. So we don't want those markets to always go up. We want them to kind of oscillate. We want them to stay in balance between supply and demand mechanics. But in the stock market, we want that to go up, because why wouldn't we? The only time it should ever come down is to take profit. You know, you're taking profit at a certain level. That's the only time it should pull back a little bit, or to get a better entry. So we want those to go up. So what if I told you that every day the S&P was going to go up? We'd all make a fortune, right? If every day we knew the S&P was only going to go up, and you're trading the ES on futures as an example, it's only ever going to go up. That would be a good spot to be in, right? Well, it's not that simple. What if I told you that every day crude was just going to go up and it was just going to keep going? You could make a lot of money. Granted, you'd be paying a lot of the gas pump, but you can make a lot of money trading it. Well, that's exactly what we're doing in stocks. We can tell you with certainty that these markets are going to go up. Every day we get into the market, we're looking to trade the market long. We're looking to trade the hottest stocks long. We're not going to mess with trying to trade shorts or trying to do this thing or that. Simple. Simple, simple, simple. We find the hottest stocks at any given time. We trade them long at the right locations. We take quick profits, and we do very, very well doing it. Simple. This stuff cannot be done in futures or Forex. This style of trading cannot work in futures or Forex trading because you only have so many instruments to trade. In futures, you're maybe trading ES or RTY and Q. You got your crude. Maybe you're trading gold or natural gas. In the Forex, you've got your pairs that you trade, and unless you're getting into exotics. With stocks, we have 8,000 different stocks to choose from, and I can promise you, even in bear markets, there are stocks that are going up. There are stocks that went up today. We took trades on those. We made money on those. So it doesn't matter if you're in a bear market. Now, if you are a day trader, your focus is to make money when? Today. Hence the term day. We want to make money today because that's why we showed up, to look at the charts. We didn't just look at them because, oh my gosh, they're pretty. We're here to make money, and we're here to make it now. So we need opportunities of different stocks to trade. Well, we have a handful at least every day at any given time that we can trade right now. We can make profit and continue to keep going. So here's another example. Coming back into this trade, there's another winning trade. Obviously, we have tons of them. We can show you plenty, but there's just a handful of examples. Again, market moving up, EMAs are up, everything's up, going sideways, we break, we trade the retest, back into the highs. Simple. We've also got scanners that tell us market sector strength. So if we're going to trade the strongest markets, the strongest sectors, and the strongest stocks in those sectors, well, that's probably a good way to go about business. Trade the strength. We're trading the fundamentals. We're not trading analytics. We're trading the fundamentals, stocks that have earnings releases or whatever the case may be, news and all sorts of earnings releases, whatever. We're trading the strongest stock at any given time. You cannot do that in futures, Forex, cryptos, so on. But you can do it here, and we do it every day. So if you are sick and tired of blowing out your accounts, or if you hate seeing others raking in the day trading profits and you're struggling or feeling sorry because, man, how do they do it? Or you're just thinking, man, does anybody make money in this industry? Is it even possible? Well, I'm here to tell you that it is possible, and we have traders that are doing it. You don't have to stay stuck in the 9 to 5. If you want to do this and make a side income for now, or build into it, there's opportunities to day trade. Well, what about pattern day trading rules? Maybe some of you don't want to risk the 25,000. Well, good news, you don't have to. We've been where you are. We've blown out accounts too. We get it. We've spent tens of thousands of dollars on other systems. A lot of them didn't work. Well, we're going to show you what's working for us and what's working for our traders. I'm going to mute the mic 1 second. Still fighting these allergies, geez. Well, if you can relate with anything that we've described, the reality is it's not really your fault. A lot of traders struggle because they're trading like retail traders, or they're trading like they're just, oh, here's the hot thing today, let me trade it. Well, where, why, when, how? So we need to get rid of the retail mentality, trading like a retail trader. We start trading like a professional trader. and we start going to the next level. And then we introduce prop trading. For those of you that want to day trade stocks, but you don't have the 25,000, or you just don't want to risk it, you can trade for a prop firm. And you don't have to move to Chicago, New York, London, Tokyo, whatever the case may be. So there are prop firms. Those of you who trade futures are probably, or Forex for that matter, probably pretty familiar with the concept of prop trading, which simply means you're trading somebody else's money. So they provide the day trading account and you trade it and they split the profit with you. Up to 80% of the gains go to the trader. So you have to earn a seat to be able to trade their money. And how do you do that? Well, you have to trade profitably. You have to hit a profit objective, and you can't lose more than the max drawdown. And they have a limit on how much you can lose, and you got to make enough in profit to be able to earn your seat and trade their money. And then once you trade their money, you get to keep 80% of the gains. Pretty good offer, right? Well, NeuroStreet is one of the only places in the world that offers this type of training and this type of program with equities and options funding, because we already do this in the future space. Been doing it for a while, but now we've partnered up with a great opportunity to where you can get funded through this company. We'll teach you how, we'll show you how, and we can do it in a very short amount of time. So let's first deal with some of the myths and the lies. How do we get ahead as traders? Well, the first thing we need to do is get rid of some of the lies that we've been told. Things like you need to risk a lot to make a lot. You need to know exactly what the market's going to do and when. Good luck with that. You need to be a specific type of trader to make money, swings, reversals, trends, breakouts, whatever. Or that you have to trade 2 to 1, 3 to 1, 4 to 1. Why? Why do you have to trade 2 to 1, 3 to 1, 4 to 1? Why would you? Well, didn't we just talk about how to maximize opportunity and minimize risk? It's all about location. So wouldn't that get you a 2 to 1, 3 to 1? No, not at all. Because wouldn't it be a lot easier to just take profit quicker instead of hanging on, hoping that this thing is going to go 3 to 1 because that's what you want the market to do? The market don't care what you want it to do. The market's going to do what it's going to do. Wouldn't it be better to just say, you know what, here's a major structure level, I'll probably just take profit there, but I'll also run the profit a little bit earlier. And so our traders are taking profit here. Everybody else is hanging on, and they're like, oh my gosh, I gotta get it to keep going because I gotta leave a runner on because I gotta do this, and somebody said I gotta do that, and all these type of things. And what happens is it comes all the way back down to break even. They don't make any money. Meanwhile, our day traders are making money. Because your job as a day trader is to do 2 things. But first and foremost, your job as a day trader is to take profit. Because if you don't make an income. It's that simple. Your second job is to not give the money back. Manage your risk. Because if every time you make money, you give it back, there again, you do not have money. So don't give it back. We can teach you how to do that. The first thing you have to do, though, is you have to decide who you are as a trader. We can't tell you how to trade. You have to decide that. We can show you some really great ways to trade. We can show you what we do for our multiples and entries and exits and all that stuff. But you have to decide what works for you. And don't let anybody else decide that for you. I know as a trader, I trade 1 to 1, all in, all out. I don't leave runners on, never have, probably never will. I trade 1 to 1, all in and out. Now that's me, and our stocks room is, they're trading, sometimes they'll trade multiple targets and different things. So they don't trade exactly like me. But I know what works for me, and that is what works for me because I get a good win percentage and my stop losses don't kill me. I can get my stop loss back on the next win. So that's how I like to trade. So, but a lot of these myths, they cause unhealthy belief systems, and they cause fear and anxiety and revenge, and they cause you to trade like an idiot. And we're not here to trade like idiots. We're here to trade like pros. So that introduces the emotional roller coaster of, you know, when some of us trade, we don't have that confidence. And so we just go, gosh, I hope this works. Oh, damn, that didn't work. And then you go to the next trade and you take a win. And you're like, hey, this is great. And then the next trade, you're like, oh, hell. This is horrible. And then the next trade, you're like, woohoo, I'm getting it. And then somewhere along the way, you start buying gadgets. or you start buying all this extra stuff, or you start taking education. There's nothing wrong with education and tools, don't get me wrong, but we lose our focus on being better as traders and getting rid of all the negative feedback, that negative feedback loop that was never designed for you to win as a retail trader in the first place. The market is not geared toward small traders trying to swing for the fences. And you don't have to trade, 4-to-1s and all that kind of stuff. You don't have to. You have to do what works for you. Okay. So how do you get to the next level as a trader in this type of program? Well, the first thing is you have to learn the landscape, but we're not going to teach you everything that there is to know about trading, because you don't need to know everything. If you want to, great, but let's focus on our primary objective, which is to get you making money consistently. Let's start there, because that's our focus. So how do we do that? Well, we're going to teach you what you need to know and nothing that you don't. We're not going to teach you all the fluff. We've got years and years of experience. We've figured out what works and what doesn't, and we're going to save you that pain and turmoil. Okay, sound pretty good, right? The second pillar is earn while you learn. So we have this weird belief that you should be able to come into our trade room and you should be able to take the trades that we take easily, and it should be simple, it should be clear, and you should be able to have enough time to get into those trades. Not only that, but we also believe that if you're going to be expected to take any trade whatsoever, that we should take the trade too, because why should you take a trade unless we're taking the trade with you? And not only that, but we should also trade on real funded accounts in front of our users, because that's the only way that we can prove that our performance is the real deal. Now, I can tell you, based on live performance, we track all of our trades, that we have 132 wins and 43 losses. Yes, we take stop outs. I know it's atrocities, but it is what it is. So we've got 132 plus 43 is 175 trades. 132 divided by 175 is a 75% win rate. Pretty solid for a day trader. You say, well, what about risk rewards? Very valid question, right? What about profit and loss? What about all these other things, right? And you should have a case of these what ifs. You should, because you don't know me and we have to prove ourselves to you, right? So that's a very fair point. Well, what if I told you that out of 36 trading days, 36 trading days, not days, trading days. So like, Monday through Thursday, Friday, so on. 36 trading days, we've had one losing day out of 36. So does that answer your question? Is this a profitable way to trade? Yeah. How many day traders do you know that can trade 35 out of 36 days profitable? That's rarer than you might think. Those of you who haven't day traded that, heck, some of you are like swing trading and you're like, I don't even get 35 out of 36 trades, right? Nor do we, but look, if our days are profitable, that should tell you everything you need to know, right? Day after day after day, we're taking winning trades on winning stocks, because why complicate it? So we have this idea that you should be able to come into our trade room, trade with us, see us trade the market live, and be able to bank profits. Here's an example of 1, 2, 3, 4, 5, 6. Is 6 trades a day enough? I think so. I think 6 trades a day is plenty. So you can take 6 trades a day and have 4 of them be profitable. Yeah, that's a good day. We'll take that. What about a perfect day? 5 out of 5. Well, that's a good day. What about another perfect day? What about a lot of action? What is that? 4 out of 6. And we have an entire, and it is important for us to show you these things, because seeing is believing. Just because I say it doesn't mean it's true. I mean, I'm a pretty truthful guy, but geez, you don't know me and I don't know you and all that. So it's, it's fine. So let's take a look. Let's look at some trades. And you say, well, how do we know you're actually trading these trades, right? Well, here's the real fills on real prop firm accounts. There's the track record, right? Those are the trades, 7 out of 7 that day. Green on the screen, something that we like to say, 2 out of 3. 2 beautiful trades. And you can see the actual fills. You can see the fills there. So I know a lot of you have been around the industry for a while, maybe a little bit jaded or maybe a little skeptical, and that is absolutely fair. And you should question things, right? But when you come in here and you see every day we're banking profits, this is game-changing stuff. And we haven't even talked about how to build a small account at the same time. So the idea is, if you want to day trade for a prop firm profitably for 2 to 3 hours a day, and you want to take winning trades day after day after day, and you want to make a living some point, once you get it down, right, and you got enough profit and so on. I can't tell you when to go full time with this stuff, but I can tell you that we have loads of performance in here. How many of you have tracked 175 day trades and had a trajectory where you were winning 75% of your trades, right? It's hard to do. So the idea is, the opportunity is here for you. This is exactly what we're doing. We have scanners built out for swing trading too. We haven't even talked about that. So if you want to build a small account trading options on swing trades, we do that too. We have a hedge fund manager, not a hedge fund manager, he's a portfolio manager. He runs a family office fund, trades $100 million. He's our portfolio manager that manages our swing trades for options. He also teaches options trading. So we have a trade room that trades in the morning. We have 2 afternoon sessions a week where we go into full detail on our trading strategy for stocks. And we have a full options trading course that we've built into the program because we just felt like we could deliver more by keeping it together versus selling them separately. We just felt like, well, if you want to trade stocks, you probably want to trade options at some point. So we'll throw it in. And not only are we going to throw it in, but we're going to cater the education based off somebody who does this for a living and has been for years and is massively successful. So that's who you get to instruct you, which is a beautiful thing, obviously. So if you want to trade leverage, you can trade the options. We have premium scanners that we've already built out that go over volatility index, all that stuff. Wouldn't let me unmute. Sorry about that. So we have everything built out for you. It took us probably about a year to build out all these scanners. So our portfolio manager also sends out swing trades for those of you that want to make some money on trades while you're not at your trading desk. You can do that as well. We have a community that trades we trade together, we win together, we support each other. Trading alone sucks, so don't do it. You don't have to. So that's the scoop. So to recap, we've looked at the first ever equities and options funding opportunity. The way that it works, really, since we're good on time, is you pay a monthly fee and you try out. And you prove to them that you can be a successful, profitable trader. And you start out with a 50,000 account to start. And as you hit different benchmarks, you keep growing until you trade, I think it's up to 10 million that you can trade. You just keep getting more buying power by hitting certain targets. And all the while you're getting paid as a trader. So obviously that's a good thing too. So how do you learn how to trade? How do you trade successfully? How do you prove that you can do it? Well, you come and trade with us. We're doing it with or without you, but we'd love to have you with us. So if we're trading our prop firm account, trade yours the same way. We call out the trades in advance. We show you exactly where to get in and out. And then we trade it with you and we track all the results. Seems pretty awesome. This is what we've been looking for in the industry for a long time. It's something that the industry has been very, very due for a long time. So we're really glad to be able to offer this. So you can create day trading income, you can scale a small account, you can make up to $500,000 daily, and you can keep going. That's just kind of a starting point, right? So you have a choice to make at this point. Do you want to struggle on your own or try different things, or check off different boxes and go, gee, I hope this one works, and stay on the emotional roller coaster? Or You can learn a proven and tested process from traders who are actually doing it, leading professionals who are actually trading prop firm accounts, and who actually give a damn about our traders. And if you reach out to us, we'll actually help you. So that's what we have to offer. That's what we're doing. What's included, we'll kind of go over that briefly. You get the full scanning package. So all of our scanning workspaces, templates, all that stuff comes with. On-demand trading education. So if you want to learn some of the foundations of trading and that sort of thing. Live trade room. We are in the trade room 8:30 to 11:30, Monday through Thursday. We don't trade Fridays in the room, Monday through Thursday, okay? 4 days a week. Weekly afternoon strategy classes, 2 times a week. And we have an options course and we have a stocks course. If you haven't traded options yet, you're still learning stocks, start there and then go into options later. Prop trading strategies, all the strategies that we trade, we have a breakdown of how we do it. Of course, we have our afternoon class that we teach those as well. Trader development, because, well, you probably shouldn't stay put, you should keep getting better. Trade plan development will help you put together that and turn this into a full viable business. And access to our instructors, deep dive options strategy course, like we talked about. Exclusive partnerships with prop firms that will get you funded. So you don't have to worry about pattern day trading rules and you can make some real money trading. Swing trade and options trade alerts. So if you want to swing trade, you can do that too. And then we have discounts on, you know, things like TC2000, trade ideas, all that good stuff. So here's your next steps. And I know we've got time, but we can answer questions and things like that. I have something to give everybody, okay? I have a link for you. And because we are so bold, oh, here, I see questions coming in now. I'm on the wrong thing. I usually am on the wrong thing. Look at that, we got all sorts of comments, cool. All right, so here is, I don't know if this is gonna get to you, but we'll try, let's see. Send to all, okay, cool. So I just pasted a link in here. The link is going to send you here, and I'll go through the questions here in a second, but here's what we've got for you. We've got 8 of our stocks and options prop trader resources. Most importantly, we're going to give you a guest pass to come to our trade room so you can watch us trade live. Because if we're doing it, then you should probably be able to see it, right? So come into the trade room and trade with us for free. No cost. It's our free gift to you for coming to this event, and because we're at the Traders Corner event, we're going to let you come in for free. Check it out. We're going to give you the intro to stocks course. If you're new, then great. If not, well, you probably don't need it. Intro to options, scanner deep dive library, scanner deep. That one's in there twice. That's got to be a typo. These guys. Prop trader 10 steps ebook. Stocks and options performance log and options strategy video. It's just free. The biggest thing is the guest pass. So if you go to this link, fill out your email and get access, and we'll follow up with you. We'll see how it's going. How do you like the trade room? All that good stuff. Bottom line, guys, we're here to help, and we want to see everybody being successful in trading stocks and anything for that matter. But yeah, so will we get a copy of the recording? Yes, we are recording it too. Admittedly, I've kind of started late on my end, but that's good. They're recording too, and so Rob, please send that to us as well. Any prop firms that allow options trading? Yes, absolutely, there is, and we'll partner you up with them. You can trade options with a prop firm, absolutely. This is a no-go. The trailing drawdown is a killer. Depends. I mean, not if you're taking winning trades. So after passing the eval, do we have to pay more money to get the funded account set up? Probably yes. I assure you, it's a yes. I don't know how much those costs are, but we can certainly in our, if you want to visit, we can go over all the details on who it is, how to get access, all that stuff. They're a reputable company. They've been around a long time, and they stepped into this space to where they're able to do this now, and really a great opportunity. Anyway, so I think it's around 100 a month-ish to get started. It could be more if you add different criteria to your evals, and then we have a discount for you. If you become a member, we give you a discount, so you get a little discount there. I don't know what the cost is for setting up the account or data fees or any of that kind of thing, so that's something we can find out. All right, so we got more questions here. Apex has consistently issues with Rhythmic. User never knows when the platform's working or not. So yeah, so I know they've had some issues with Rhythmic, especially last week. I know there were some issues there. This other firm is not using Rhythmic, so that's not necessarily an issue, which is great. The platform is decent, and we haven't had any issues with it, so it's been fine. And so yeah, so we've got another question about losing money. It's when you're in an eval, it's simulation. There's no real money until you get your funded account. So, and then once you do get the funded account, then yes, you are trading real money. So, and I don't know when these questions are coming in from.
Jim, pardon the interruption, but I remember that question being asked during the first presenter. If you look at the third column, it shows the timestamp of when the question was received. You probably want to scroll down significantly.
Oh, I'm looking at the ones from this morning, huh? Well, that's okay. I answered them anyway.
Hey, that's all right.
Good stuff. Oh, there we go. I was backwards. Yeah, okay. I'm gonna go to the bottom, not the top. All right, let's go through. How long is the eval? As long as it needs to be. There's a minimum of 5 days to get funded. Is there a coupon code? Yes. Do we use Apex? Not for this program, no. Yes, we'll give you the coupon. Here's the deal too. If you come into the trade room and you're like, this is fantastic, it's exactly what I want to get started, we'll hook you up. Just mention that you were at the Traders Corner event, and we'll make sure to give you a special discount so that you can get really, really great pricing. Okay. What platform is possible? You can use any platform you choose. However, if you're going to trade for the prop firm, they use what's it called? Clearly, I do not run the stocks firm. Sterling is what it's called, I believe. Link takes you to a different page. Interesting. Let me try the link here again. Should look like this. Info dot such and such. Let's paste it here. Send to all. So hopefully that works for you. What platforms? Yeah, we talked about that. The link takes you to a different page. Can't click the link. What's the fee? It's free. Come into the trade room for free, and then if you like it and you feel like it's a good fit, then we'll go over what the costs are and what's involved and how to get started, all that stuff. If you're curious ahead of time, you're like, I don't want to get like too far into this and want to find out more first, just reach out to us. We'll get you the info. It's not a problem. Funded day trading futures, cool. Yeah. BTC using NinjaTrader. We do use NinjaTrader for futures trading, but you don't have to use that for stocks. So in fact, now we're on the prop firm one. NeuroStreet Trading Academy is what you want to look for if you're on the Discord. Okay, if you're looking for the Discord, it's just NeuroStreet Trading Academy. And actually, if you go to our website, let's go here for a second, go to About Us, and then go to Community. And then join our Discord for free. And you can follow along the trades that we're taking, and you can ask questions and get more involved with us there as well. So that is good. The prop firm that we are using, let me go in here. I'll show you. Not there. Well, here, let me just do this. Excuse me. So this is the prop firm that we're currently using. They're called Trade Funder. As I mentioned, we have a discount for you, but you can do any type of trading. Really, where most of their traders are getting involved is stocks and options. And so oh, sorry, it's $199 a month, not $99. 100,000 buying power to start, and then profit target 2,500. Got to trade minimum 3 days. Clearly, it's been a while since I looked at this, so I'm glad we did look at it. Step 2. You get paid for qualifying. So this is like you're getting paid as a trader, but you have to trade 9 days and you got to profit 10,000. Once you do that, you get 80% of that. Okay. And then you scale all the way up to 10 million as you go. So, and by that point, you are trading live real prop firm accounts for a real prop firm that is very reputable and huge and all that good stuff. So cool. I think, okay, the link is working. The free sign up is not on the link. You should be able to just put your email, and I think that'll email you the link to get into the room. So, but cool. I think that's it. Can we use an InterTrader? Sure. You can use whatever you want. Yeah. Yeah, I think we're good unless there's any last minute questions, and I'll turn it back over to Rob here. I think otherwise we're good to go.
Jim, I think you're good. Feel free to interrupt me if a question comes in, but let me congratulate you on being the first in the industry, to my knowledge, of offering funding to a stock and options trader. Oh my God, I can't wait to get my son off my lap and put my email in.
Yeah, absolutely. Yeah, no doubt. No, we'd love to have you in there and come in and trade with us and check it out. These guys are they're just killing it. They're doing fantastic. It's like every day. It's like, you know, how many trades did you get, Jim, today? I got 2 or 3, and yeah, I got a couple wins, feeling pretty good. And they're like, oh, we went 5 for 5. I'm like, oh, geez.
Hey, it's a beautiful thing.
So yeah, you can come into the trade room first, Edward. Yeah, come in and join us in the trade room for free. And then the link's in there, and paste it in here again one more time. So you could just follow along at first. You don't have to have any money to trade with at first, and then we can get you funded if you don't want to trade your own money. So yeah, good stuff. Cool.
All right. Well, Jim, thank you for being here. And I guess small trading accounts and pattern day trading rules are a thing of the past. It sounds like a great way to day trade stocks and options without the roadblocks.
Yeah.
Ladies and gentlemen, if you're interested in day trading stocks and options without using your own capital and still reaping the rewards, Jim and the staff at NeuroStreet.net have you or .com. I'm sorry, have you covered.
Awesome.
He's put his link in the box. Mr. Jim Simmons of NeuroStreet Trading Academy. Thank you so much for being here and sharing an incredible offer, free. You can't turn that down or not afford it, with our audience. We hope you come back and see us. I wish you a great week and everything beyond, Jim.
Awesome. Thanks so much. Thanks for having us as always, and catch you next time. Thanks traders for joining in and hearing us ramble on about trading. So appreciate it. Thanks for hanging out with us.
Thank you again.
Awesome. Take care, everyone.
Have a great one. Well, ladies and gentlemen, I mentioned at the top of the show, we had a great lineup, and I hope everyone is listening closely, because our next presenter is a graduate of Syracuse University and has been trading the financial markets for the last 15 years. He wears several hats over at Right Line Trading. He's a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line Trading community. Here to present AI Auto Trader, powered by Next Gen Intelligence, is Mr. Rory Powers of Right Line Trading. Welcome back to Traders Corner, Rory.
Thank you very much, Rob. It's a pleasure to be here. I appreciate that nice introduction.
Pleasure to have you.
And I just want to take just a minute to make sure that you could hear me and see my screen. And that
got them
everything
both up
is
loud and clear.
Okay, excellent. Excellent. What a great event. And listen, this prop trading has really brought everybody into the trading game that, before these prop trading accounts, you had to be rich to be a day trader, to put your own capital at risk. And when you had all these other obligations, it just wasn't a reality to most people to be able to trade the market and have the potential to make an extra $1,000 or $2,000 per day. With these prop trading firms, for pennies, just a couple of dollars, you could, work your way into a $50,000 or $100,000 funded account with a lot of leverage in these financial markets. And it's really an exciting time for trading, and it's really opened the floodgates. So I really love the prop trading firms. I think they're great. If you do well and if you have the right tools, there's a potential to make a lot of money without putting any of your own capital at risk. which is just incredible. And I can tell you, I'm really excited today because we have a product that you've got to stick around and listen to this. I'm going to go through it quick because I know it's been a long day. But I want you to hear about our AI Auto Trader. It's an automated strategy. It's based on mathematical modeling, and it's an extremely powerful strategy that is great for prop traders or trading a live account. So stick around. I know it's been a long day, and I do appreciate and respect your time. So let me go keep it moving. Just to satisfy the CFTC, all signals and trading opportunities provided here are for educational and demonstration purposes only. We do highly recommend consulting with a licensed financial advisor before taking any trades. I am not a licensed financial advisor, so I do recommend you consulting with somebody who is licensed and meets those qualifications. There is a substantial amount of risk when you trade in the financial markets. So real briefly, I just want to give you a little bit of background here. I'm part of a team of experts that I'm so excited to be part of this team because I'm really surrounded by professional traders and programmers. And let me tell you, together as a group, it's just a joy to work with these guys. We have 3 live trading rooms that leverages our software. So not only do we have automated strategies, we also develop trading software that helps predict the future direction of price. And that's really the key when you're looking at the right edge of the chart and you have all of the static and all of the noise and all of the human emotions that go with it. Having an indication of the future direction of price is priceless. It's priceless. And what we do with that information, how we leverage that information, how we can extract some profits out of the financial market can be done in a variety of different ways. At the top right, you see David Kushner. David Kushner is our prop trader. He has 6 funded accounts with one of the prop firms. He went through the evaluations. He now has 6 performance accounts that he trades using a trade copier. And he also uses this automated strategy along with a discretionary component that he has solid rules, a rules-based system for entry and trade management that he follows that strictly adhere to all of these prop firm guidelines. So David Kushner has his own prop trader live trading room where he calls out the trades every morning. He starts at 8 a.m. and he goes until about 11. So that's one way that we leverage that information that our software provides. Another one is through options. Down at the bottom right of my screen, I'm not sure, maybe it's bottom left for you, but at the bottom there, it's Mr. David Wise. And David Wise is just like his name, he's a wise man. He's been a professional options trader for 12 years. He's part of the Reddit trading community. If you're not familiar with Reddit, Reddit is a community of traders that's about 40,000 members strong. And he has what they call a verified performance. He's verified with Reddit as being a professional trader. And if you ever go into Reddit, into their online trading community, his name in Reddit is One Wise, and you'll see it highlighted in a highlighted color. I think it's green. That signifies that he's been verified. So he's a professional options trader. He uses the signals that our software provides to leverage options, and you can find him every day from 9 to 4 in our options live trading room. We also have Mr. Craig Emery, who's really another success story that we're really proud of. Craig had been trading for 20 or 25 years. He has a very similar story to all of us. He purchased 10s, 20, maybe 30 or 40 different trading systems, hundreds of different indicators that just didn't work. Then he found a home with Right Line Trading. He purchased our software. It actually changed the whole trajectory of his trading career, and he's now an extremely successful trader. And he also leverages our software in our futures trading room. He primarily focuses on the NASDAQ and the E-mini, where David Kushner, who is our prop trader, is a little more conservative and doesn't really trade the NASDAQ much, but he looks at all the other equities and commodities. Then we have our development team. I've worked for a very long time here at Right Line Trading with Mr. Sergio. Sergio has a master's degree in computer science. When it comes to coding, this guy can make anything come to life. I've sat in several meetings that, Mark had, Mark is a mathematician, and he had, pretty involved mathematical equations and, orders for Sergio to bring his mathematics into life on the charts. And sure enough, he's able to do that. I'm not sure exactly how, but it doesn't matter. He can make it happen. If it can be done on a computer, Sergio can make it sing and dance. He also has some help. He has our AI prodigy down here, Mr. Jacob. Jacob joined our team just recently, and he's a college student. He also works in customer support and development with Sergio, and he's a great addition to our team. And before I get to the leader of our team, I just wanted to also mention a new addition. His name is Mr. Charles Sider, and he has over 30 years of software development experience. He's been providing global client support and service for over 30 years. So our team is led by Mr. Mark Miller. Mark Miller is an Army veteran. He's got an MBA from Cal State. And let me tell you, when it comes to this, this trading industry, he's really a breath of fresh air. With all of the, let me put it mildly, unscrupulous vendors and marketing, Mark is, removed himself from that. And he's very transparent and honest. He's a man of God, and we're very pleased that he is the leader of our team. Rob did a great job of introducing myself. So the point I wanted to make is I'm not here alone, trying to maintain an automated strategy. It takes a whole team. And we have a team of experts here at Right Line Trading. We've been around for close to 15 years now that are highly trained in what we're doing. And our goal is to build a community of traders that all collaborate and share and support one another in their trading journey. And I'm going to get into a little more of that in just a few minutes. I don't want to take too much time in this background information. I want to get right to the chart and right to the indicators and trading system. And I'm going to do just that in just a couple of seconds here. I just wanted to highlight what led us to develop this AI auto trader. I've had the privilege of speaking to traders for the last 10 years, maybe 7 days a week, 10 or 12 hours a day. I trade myself. I trade futures and options. And I love traders. Listen, we persevere. We're overcomers. And we can kind of like the Duracell commercial. We take a beating and keep on ticking. I've talked to a number of traders, including myself, that have experienced all types of different problems. People take a few losing trades and they revenge trade, or they take a few winning trades and they think it's going to continue forever, and they give it all back and then some. You listen, we all bought indicators that just don't work. We don't have a proven trading methodology or trade management, that we follow, a strict trade management program, and not having these proper tools and having all of these human emotions that are, just inherent of being a human. Uh, it leads to, it's led to myself. I tell you, I can't tell you how many times that I've blown out my trading account, and it's a terrible feeling. I don't know of a worse feeling than that. And I'm just so gung ho about trading, and it's really my passion. So, and I've talked to so many of you, and I know it's your passion too, because we keep coming back, and we're going to find something that works. Well, I have some good news for you today. The good news is we have something here that's working extremely well. When we get to that right edge of the chart, and we have all of that static that I was referring to earlier, we just don't know which way that price is going to go. So, having some insight and having some tools that don't lag price, that show us an indication of the future direction of price, that's valuable information. I like to use as an analogy a conversation that I recently had with David Wise. David was our options trader, who's really a brilliant guy. He really knows options extremely well. Anyway, it was the Jerome Powell was coming on. He was going to come in, and everybody knew he was going to raise the interest rates. The CPI report had just come out on Tuesday or Wednesday, and the inflation was just a smoking report. So we knew that the Fed was going to raise the rates. And it was the morning of Jerome Powell coming out. And I said, David, I have the privilege and the honor of being able to communicate with him every morning via Skype. And I asked him, David, I said, today, is the big Fed announcement. How are we going to monetize this? How are we going to extract some money out of the market with this? Do you think when he raises the rates, the market's going to go up or down? And I was just waiting for some, amazingly insightful information that I could take action on. And I see in Skype the little wheels are spinning, and he's typing away. Anyway, it comes back, and the message is, I don't know. He doesn't know. He doesn't know. And you know what? He said, until the technicals line up, until the indicators tell us which way the market's going to go, that's when he's going to know. So that's a perfect example of this slide. Is we just don't know which way price is going to go from the right edge of the chart. So there's two things that we need to create trading success. We need a software, we need a system that's going to identify and define risk. We don't want to take risks. We want to be in the least amount of risk as possible. We know every time that we take a trade, we have the potential to lose our money. So we want to take the entries that have the highest possibility or probability of becoming profitable. And with this fast moving market, and with the wild swings up and down, ideally, we would love to have a tool that can automatically get us in and out at the perfect time, identify risk, and execute and manage the trades on our behalf. Because listen, this is what the hedge funds and the big institutions are doing. They're not sitting and clicking a mouse like us retail traders. They have very high-powered automated systems that are entering the trades for them. So we want to follow along with these big institutions and kind of ride on the trend that they create. Now, my excitement is because this happens to be the most advanced auto trader strategy that we've ever developed. Why is it the most advanced and why am I so excited? I'm going to show you in just a couple of seconds here. We're going to go over the equity curve, the performance. We're going to go over the back testing. It gives us the capability of optimizing our templates via back testing. We also have a few other methods that I'm going to explain in just a few moments. Now, our secret sauce, this is not a black box system. Listen, I've bought some strategies before, and I've put them on my Ninja Trader and enabled them without having any idea of what it was even looking at. It was just a black box. And I kind of enabled that box and crossed my fingers and toes and hope for the best, with no indication or no idea of what it was even looking at. Well, let me tell you, that's not the case here. I'm going to tell you in depth exactly what indicators are being leveraged and what are the conditions for an entry to be executed. And this is an automated entry system, which also does, it not only does it execute the trades, but it does manage the trades as well. We have a great proprietary trailing stop that's tied to our 15 EMA. So when momentum wanes, it'll automatically take you out of the trade and take all of the guesswork out of it. So I think some of the biggest benefits of using an automated strategy is, basically what we go through in our heads. I've heard so many of the presentations today. Everybody had mentioned that the emotional setbacks that we have of overthinking or hesitating, or the market moves too quick, or we get distracted. Maybe one of our kids we have to go pick up from school, or the phone rings, and in a fast moving market, when price is moving so quickly and there's so many calculations that you have to consider to define risk, the smallest of distractions can throw us out of the zone that we need to be in. And being in that zone, listen, I'm no Michael Jordan. I don't know about you, but that's really what it takes to on a discretionary basis to trade these markets successfully, is you need to mentally put yourself in a zone. The nice thing about this robot or this AI auto trader is when you enable that button, it's game time. It's in the zone, whether or not you are. So it does place your stops and profit targets for you. There's no more cutting winners short. Now, how many times have you taken a trade and maybe you're up 100 or 200 or $300 on the trade, and you just want to take your money off the table and close it out, only to see it continue up for another 500, 1,000, 1,500, and you're just sick that you got out of that trade early. Or vice versa, a trade starts going against you and you've got your own skin in the game. I've done this, I can't tell you how many times. A trade will go against me and I'll start feeling it, and I start twitching in my seat and I get out of the trade only to see it reverse and go in my direction, and I would have had a huge winner. So all of that stuff is going to come to an end with this AI auto trader. No more mismanaging your trades, no more over trading. Now I'm going to go ahead and bring up, when I get to this slide, I want to just show you the indicators, and we call it our secret sauce. What I want to do first is just take off the text and markers, and let's just look at the indicators that are on the chart. The indicators that are on the chart, a lot of them are listed here. This was the entries that the AI auto trader took today. I have a $750 profit target, which it hit, and it shut the strategy down. But let's take off the text and markers just for a moment. And let me just run down the indicators that this system leverages. Number one, The system leverages market internals. I had mentioned earlier about the hedge fund traders and big institutions using automated systems. What these automated systems, what these hedge funds and institutional traders, what they create is a disparity between uptick and downtick. We also look at some declining ratios as well. And these are not caused by retail traders, okay? This disparity in those market internals is caused by institutional traders, huge numbers of contracts being placed. That's going to cause a disparity between that uptick and downtick. So you can see on my chart that the market internals are these small green triangles. When there's a large disparity between uptick or downtick, those little triangles are going to tell you, hey, it's right now, market internals are pushing this market or pushing the NASDAQ up in price. Now, the second indicator that's part of our secret sauce is our background bias. Now, you can see the background color of my chart is that green color. And what that is, that's a multi-time frame assessment of trend. If we didn't have this and we wanted to confirm our entries on a higher time frame, just to make sure we're not taking a counter trend trade, we would have to look at maybe a 10-minute or a 15-minute chart side by side, or a 5-minute chart side by side to the NASDAQ chart to see if the trend was aligned on the higher time frames in the same direction. Like David, before he enters a swing trade, he'll make sure it's aligned on a 5-minute as well as a daily before he takes a trade. And those are for swing trades held overnight. We don't have to look at that high of a time frame on this system because we're in and out of these trades fairly quickly. So we do look at a multi-time frame assessment of trend, which we call our background bias. And remember, we're defining risk. We've found through, I can't tell you how many, hundreds and probably thousands of hours of data that we've, gone over the results of what the lowest risk entries, and the lowest risk entries by far are when these multi-time frames are aligned on the trend on different time frames. So we also have the momentum-based trailing stop that I'm going to go into in a little bit later. We have the pivot. You can see on my chart, if I squeeze it a little bit, we have above price these red pivots. Below price down here, we have these blue volume zones, we call them, or supply and demand zones. Our system knows not to trade into these areas of support or resistance. We don't want to price to reverse on us. We want a clear pathway to our first profit target. So within our strategy parameters, which I'm going to show you in just a moment, we can even define how much room we need in order to enter a trade so we don't run into a pivot before we hit our first profit target. All right. And the order entry, the optimized order entry and exit parameters are done automatically. And last but not least, I wanted to briefly show you, while the market is still live, is what we call our dynamic dashboard. Now, our dashboard on the top left of my chart, all of the conditions that are within our strategy that must be met in order for the strategy to fire off a trade, all of those conditions are listed at the top left of my chart. The ones that are in green have been met. The ones that are in red are what's preventing it from taking a trade right now. Okay? When all of the conditions have been met, if you have a strategy enabled, it will automatically enter the trade for you. However, we have an indicator on the chart, which is the signal indicator or dashboard indicator, that when all the conditions are met, it it throws this cross, this green cross on your chart. So if I go back to my plots and execution, now they'll be very similar to where these crosses are on my chart. Okay, that means that all of the conditions were met and the strategy fired off a trade. So that dashboard is really a great tool. I've talked to a lot of traders that, for one reason or another, they just don't want the automated strategy. And maybe that's you too. Maybe you don't want the fully automated strategy for one reason or another. This system will provide you with those signals for entry that you can go ahead and execute those trades. It'll give you those crosses that are signaling you that, hey, this is an entry to take that has the least amount of risk defined by our software. Okay. And we've spent thousands of hours of optimizing these settings, and we know that these entries, they have the lowest amount of risk associated with them. So whether you want to use the automated strategy or you want to trade this system on a discretionary basis, it can be done both ways. The special offer that I'm going to make here today on Traders Corner is kind of a 2-for-1 special. It's going to include both the discretionary component with the chart template, and it's also going to include the automated version that has the strategy entry as well. So I'm going to get to the offer and the strategy in just a few moments. I just wanted to show you before we go into the backtest results and the performance of the system that this system leverages time-based bars. You can, adjust the bar types if that's something that you like to do. I know that probably 50% of the people today that are here probably just want to take it out of the box, load it up, and just enable it and let it run. Okay, and that's perfect because we do the heavy lifting for you. However, we have another half of you that like to get under the hood and you like to play around with the back testing and try to, come up with the inputs and bar types and the entries that you like and trade it on the instruments that you like. And listen, we're not dogmatic about how we make money and what instrument we trade. The only way that we'll load up a chart and trade a strategy, an automated strategy, is if we have proven results. A lot of people say, hey, do you trade soybeans or do you trade ultra bonds and they'll list off a number of different instruments. And the answer is yes, we trade everything. There's nothing that we won't trade as long as it makes money. Okay, if it doesn't make money, it doesn't make sense, and we're not going to deliver it to you. So what I'm getting at is the system gives us the ability. It runs on NinjaTrader 8. NinjaTrader 8, I know there's probably a lot of you that are very familiar with NinjaTrader. NinjaTrader happens to be, for futures, probably the most powerful platform there is for futures. If I was trading stocks or options, I probably wouldn't use NinjaTrader. But for trading futures, I'm not saying it's the simplest and easiest, because it's probably not. But when I say it's the most powerful and it has features to it, it's the most powerful that I've seen. And it has some features and benefits. One of them is the back testing, which in NinjaTrader, and this is my NinjaTrader Control Center. And within the NinjaTrader Control Center, they have what's called a strategy analyzer. And if I was to open up my strategy analyzer, it would look a lot like what you see on my slide here. And the strategy analyzer, listen, it's not the end all be all. The results are not 100% accurate. And that's what I want to illustrate on this slide. The chart on the left is what you see taken on a live account. All of the strategies that we deliver, we only trade on a live account before sending them. Okay, I just want to clarify that. But the entries on the left were from a live account. On the right is from the backtest results of the same exact trade. And you can see that the entries and exits are almost the same. They might be off a tick, you know, maybe a tick or two for slippage, which I think can be expected. In a perfect environment where there's not a bid and an ask spread, and there's not market makers, and there's not slippage, then we would get, you know, identical result. But it's not a perfect world. Okay, so it's not a perfect the back test isn't perfect, but it is fairly close. Okay, with that being said, let me bring down the slide deck, and let me go back. Okay, I'll tell you what, it might be easier for me to bring these, just slide these over. This was today's chart that I showed you the entries on. And I think we made a really nice illustration of the examples of how we get in the trades. But let's take a look at the actual strategy itself. And again, I've seen a lot of webinars where people present these automated systems and they just don't show you that. They don't show you the under the hood of exactly what it's looking at. And you don't have a clear understanding. And that's why I really don't like the black box, so to speak, strategy, where it's, you know, cross your fingers and toes and hope for the best. What I have on the right are the parameters of the strategy itself. We have global parameters that each one of our indicators that I've went over earlier leverages. I mentioned the market internals, the background bias, which is the multi-time frame assessment of trend. I mentioned our volume zone and pivots. We never trade into an area of support or resistance. Now, what's unique about this strategy as well, and if you're a prop trader or you have issues with over trading, or you have rules that you can't take a drawdown over X amount of dollars, what this input right here, this profit target input does, is once your trading system reaches $800, it stops trading. Okay, it's kind of capital preservation. Okay, it's not going to continue to trade, because we know every time we get into a trade, there's risk. We're putting our capital at risk. So I've decided that my trading plan, once I hit $800, I'm going to turn it off and I'm going to stop trading for the day. And once I've reached $375 on the loss side, I'm gonna disable this strategy and I'm gonna sleep okay that night. I might be a little upset, but it's not gonna, I'm not gonna worry about losing my home or my car. $375 is something I can live with, and I know I have confidence in my system that about 70% of the time I'm gonna go to bed happy and I'm gonna win. So tomorrow's another day. We also can configure the trading hours that we trade. These are configured in military time. So I have it starting at the New York Stock Exchange Open from 9:30 to 4 o'clock. Okay, so it won't trade before 9:30, but once 9:30 comes, it starts, and it's not going to stop until 4 o'clock or until I've reached one of my loss or profit targets. Okay. We have a really nice feature. We have members that say, well, we'd like to get into the trades a little bit earlier. So we have an entry, a metric that allows you to check the entry on the same bar, which would get you into the trade a little bit earlier intra-candle. We really get the best results right now in these market conditions, leaving that unchecked, and we get a confirmation candle and make sure it closes in our direction. So now the criteria for our entries is we have to have the market internal. Those are those green triangles, the disparity of uptick versus downtick. We have to have the bias signal. That's the multi-time frame assessment of trends. And we want the colors of our background chart, we want them to be that dark green or blue color. And we have a master class that goes into this. I'm not going to waste a lot of time going into detail. But if you do decide to come aboard today, all of these metrics, I have a master class that's recorded, and it goes into depth on all of these parameters. A lot of people ask me about trading after hours or overnight or pre-market. The answer to that question is yes. You can set your trading hours to any time that you would like. What we recommend doing is using a volume threshold. We don't want to be in a low volume environment. This system is really developed to follow in the footsteps of large institutions. During those overnight or sometimes in the pre-market, we're just in a low volume environment with other retail traders. And so what we could do is we can enable that. And if we want to not get in unless there's 400 contracts a minute or 1,000 contracts per minute, it would prevent us from getting into a low volume environment. And it would only take a trade in those after hours when there's a good jolt of volume. Let me take a quick sip. So the other thing that our system respects, if you noticed on my chart, we never take a short trade when the 50, this is my 50 EMA, this green line. The 15 EMA is the dotted line. We never take a short trade when our 50 and our 15 is green and price is above those moving averages. We do not try to call tops or bottoms. What we're looking for is the meat of this trade. This move up, we're looking for the meat of it. Okay, and once it becomes too overextended, we're not going to trade either. We're going to step aside. So we always respect market structure. Our MA diff is our distance. That price is from our 50. Listen, and an overbought today was a prime example. We saw in today's market, they thought they had a deal, I think, with the debt ceiling, and the market started rallying. But, after a period of time, there was a retracement back to the 50. So, the good times only last so long before we have a retracement, and it will revert back to the mean or back to the 50. And then maybe it might continue in the direction of trend or even reverse. But the point that I'm trying to make is we define how far off the 50 we want our strategy to be able to trade. We don't want to get into an overbought or an oversold environment. Okay. So the clear pivots, clear volume zone, what we do here is to ensure that we do not trade into an area of support or resistance. What we do is we define what our first profit target is here. So I've enabled to clear, I have to be clear of any pivot or area of support or resistance by at least 24 ticks. And that 24 ticks, that's not a random out of the blue number. That's the distance to my first profit target, okay? I want a clear path. I don't want anything in my way, any kind of support or resistance before I've got my first profit target in the bank, off the table. What the system does once I've hit my first profit target, and you can see right here, we've coded an ATM strategy right into the strategy. We've coded an ATM. What happens is once I reach my first profit target, my stop is going to immediately go to break even, and I'm going to take all the risk off the table. And then I'm going to be in the trade with no risk with a second profit target of 50 ticks. So now my risk to reward ratio starts slanting in my favor. What really hurts us as futures traders, is the risk to reward. Let's face it. Right now, you can see this stop has 25 ticks. We're trading two contracts. There's one contract on my first target, and there's one on my second. Listen, I can't tell you how many times I've hit 2 or 3 first target winners, trading on a discretionary basis, and I take that third or fourth trade and I take a full loser, and it just wipes out my entire, profits for the day. I don't know if any of you have ever experienced that, but my gut feeling is that you have. The nice part about this is our risk to reward. You could see our first profit target is 20, our second is 70. So we have the potential to make a 70 tick gain on this trade. And a full loser would only cost us 50 tick. Okay. So our risk to reward is slanted in our favor. And using these parameters of my strategy, I ran this back test from March 1st to today. Okay. And this was using our 1 minute template that comes right out of the box that we would deliver to you today. And you could see on the left are the results. The results of this back test were 24,000 in total net profit. And you can see the data is from March 1st to May 17th. Our max drawdown on that was 1455. So you can see, if you look at the analysis, that we have a beautiful equity curve that just goes up. So if you're wondering what size account do I need to trade this system, you can get started with the E-minis, trade 2 contracts on the E-minis, the NQ. You don't want to underfund the account, but $3,500 to $5,000 to trade 2 contracts, I think would be more than enough. You could also trade the micros. You'll get very similar results and start out with maybe $1,500. And if I go to my chart, it shows the exact entries that the system took when all of those parameters were lined up. Okay, so that's the 1 minute template that we send out for the NASDAQ. Now, I'm a firm believer that we want to, not only diversify a little bit and not all have all our eggs in one basket on the NASDAQ 1 minute. So what I do myself is I also run a 5 minute and a 15 minute. And I'm going to show you next the NASDAQ on a 5 minute. You can see right here, this was run from January 1st to May 17th. And this is leveraging a 5 minute candle on the NASDAQ. So this is year to date, January 1st to May 17th. And you can see that the number of trades has significantly gone down. You're not going to get as many trades as you would on a 1 minute, obviously. For the whole year, we got 186, where on the 1 minute, we got 366, and that was just from March 1st to May 17th. So you can see that the number of trades has significantly decreased. Our average winning trade was 204, and our average losing trade is 191. So our risk to reward is like a 1-to-1. But really what stands out about this performance is the percentage profitable. You have almost 85% trading the 5 minute chart on the NASDAQ. So even if the risk to reward is 1-to-1 in this scenario, it's going to give you an equity curve, again, that's really just beautiful, with no major drawdown that I hear from so many people that trade these automated strategies, that they just can't handle the drawdown. And these are the charts. The charts will plot every single one of those trades that I've showed on my test. So I also want to show you a 15 minute, because if the 1 and the 5 minutes not doing well, and I run these strategies simultaneously, okay? What I'm going to show you next is our 15 minute. Here it is here. Let me just move this one out of the way. And then I'm going to show the Russell and answer any questions that you might have. Now, this is a 15 minute. I'm sorry, that's a 5 minute. Let me get the 15 minute. All right, so our 15-minute chart. Now this is year to date, January 1st to May 12th. Okay, you can see again the number of our trades has substantially decreased, even from our 5-minute strategy. So the number of trades that you're going to take using a 15-minute is even smaller. Okay, and again, we have a fantastic win rate of 75%. The average winning trade is 324. Our average loser is 313. On our ATM, we took a second target of 100 ticks. With that higher time frame, we brought out our stop a little bit to 35 ticks. So we have a little bit more risk on the table, but it allowed us to move our profit target and our profit targets out. And we're in these trades for, maybe 30 or 45 minutes, an hour, or maybe 2 hours on certain time. The average time in the market was about 15 minutes, but I've been trading this 15-minute, and I've been in several trades that lasted an hour or two. So the 15-minute, to run the 1 minute, the 5-minute, and the 15-minute simultaneously on the NASDAQ has been working out well for us. Now we also have a great strategy on the Russell that I wanted to show you. Bear with me for just a moment while I pull that up. Okay. So now the Russell, the way that I set this strategy up is I found through the testing, and we do have a couple of different ways to do the testing. One is through that signal indicator that I showed you. One is market replay data. One is forward testing. One is back testing. And another one is NinjaTrader has the multi-objective optimization that allows you to test multiple parameters at once for each indicator. And that also speeds up our optimization time. So NinjaTrader is a really powerful tool. So this strategy here on the Russell, you can see that my loss target is 300 and my profit target is 600. All right. I only trade the strategy from 9:30 to 1 o'clock. I have traders that are using this even earlier, pre-market, that are doing very well as also. But this result that you see here is running it from 9:30 to 1 o'clock in the afternoon. That's Eastern Standard Time. You can see that our ATM strategy, we only have 15 tick stop. We're trading 2 contracts. Our first target is at 10, our second is at 20, and we're trading the Russell on a 2-minute time frame. Now this backtest result is from January, so this one is year to date as well, from January 1st to today. Okay, so you can see on my backtest results, just running it a few hours in the morning, $11,000 in net profit, 2 or 3 hours per day. My max drawdown, $625, 74% win rate. My average winning trade was 71. My average losing trade is 85, which is not too bad. But with that winning percentage, it's okay. We can get away with it. So if we look at our analysis, we had a little bit of a drawdown here in the beginning of January, and then it took off. There were a little, some peaks and valleys along the way, but for the most part, a very positive equity curve. And then if we look at our chart, it'll plot all the entries that the system took in those morning hours. So between those 3 strategies, running them all simultaneously, we get some really outstanding results. So we had 11,000 on the Russell. On the 5-minute, on the NASDAQ, we had 26,000. On the 15-minute on the NASDAQ, we were at 13,000. And last but not least, we had our 1 minute that had 24,000. So listen, we're not relying on just one strategy to take us to the promised land here. If one of them has a drawdown day, and I've seen it happen several times, if one has a drawdown day, they complement one another. I might have a red day on the 1 minute, but you know what? On that 15-minute, it crushed it. Or on the Russell, it had a big day, but you know, maybe one of the NASDAQs had a down day. So we've kind of diversified a little bit, which is really a very smart thing to do. And we've leveraged several different time frames. Like I said earlier, this system does not only trade the NASDAQ, but right now the NASDAQ is what's making money, okay? We're going to continue to add additional markets once we find that they're profitable. And then until we find that, we will not release them, okay? So it's nice to have 10 or 15 strategies, but we'd rather have 3 or 4 that work well. Okay, so they all complement one another, and that's why we're so excited about this AI auto trader. I just want to take a minute and get to some questions to see if anybody has any questions, and then I'm going to go over our special offer. Let me find a questions box. Bear with me for just a moment.
Rory, can I ask you a question while you're looking?
Sure.
I noticed the max drawdowns, and in my head, I'm thinking, is it a fair assumption that this auto trader would pass prop firm challenges?
Well, yeah, that's really, you know, like I had mentioned, you know, kind of towards the beginning of the presentation is this, you know, the prop firm allows, it's open the floodgates. You don't have to be rich anymore to trade a prop account. To run a strategy like this and in a prop account, you know, it really gives you the ability to automate your trading, automate your results, make passing these combines or these evaluations that much easier. Listen, trying to make these calculations in a fast moving market, you know, earlier I showed you, and you could see on the right, all of the things that this system is looking at. It's calculating the distance off the 50 that price is, of how far a pivot is, of whether or not it's aligned on multiple time frames, whether or not there's a disparity between uptick or downtick. All of these split-second decisions that a trader has to make are done for you. These advanced calculations are done on your behalf. So to answer Rob's question, which is really goes with the theme of today's event for prop trading, is it's ideal for trading a prop account. Sure. If you want to automate it, you could certainly do that. Or if you just want to click your mouse and take these signals, these crosses that come up on your chart, there's nothing to prevent you from taking those entries on a discretionary basis. Okay. So just a couple of questions that I see that I'm going to read out loud, and then I want to get to the special offer. In fact, I'm going to bring up the offer now and read the questions at the same time. I do respect everybody's time. I know it's been a long day, so I want to go ahead and get right to the special offer. And then I'm going to read some of the questions. Listen, we always do something special for Traders Corner. Traders Corner, guys, again, thank you so much for having us on the show. It's always a privilege and an honor to have this venue, to be able to talk to traders and show, you know, our products and services to some new faces. So we always, you know, make our best offers during these events. So what we're we're offering today is, like I had mentioned earlier, is kind of a 2-for-1. We're going to include both our discretionary system and our automated strategies for 25 traders. We want to keep the integrity of our entries. We do limit the number of people that we have running these strategies. So we're going to open the doors to 25 systems. This is a large event. We have about 400 people in attendance. So we're going to limit it to 25 systems today. And not only are you going to receive both the discretionary, what I mean by the discretionary, just so you know, is you're going to receive all of the charts with all of the indicators that can be used on any time frame for discretionary trading. You can also build these charts, and when you have the automated strategy, they will project the stop and the profit targets when you enter a trade. So all of the chart templates will be included. We're also going to share our proprietary ATM strategies with you that show where to put your stops and your profit target for each one of these instruments. Now, we're also going to have a coupon code. The coupon code is SAVE $100. And what that's going to do, it's going to bring the $3.99 per month right down to $2.99. Okay, so for $2.99 a month, you're going to get both trading systems, or our best value is going to be our annual subscription. Now, listen, I've talked to a lot of people, and they kick themselves in the butt for going with the monthly when the best value is with the annual. Today, we're going to take off $500 with the coupon code SAVE $500. So the $24.97 per year is going to be $19.97 per year. And I think that comes out to about $150 or $160 a month to have this, incredible strategy that's going to, really has the potential to make you that back in a month, even less. So $19.97 for the year. Use coupon code SAVE $500, or $2.99 for the month, and that's with coupon code SAVE $100. Now, you're also going to be part of a community of traders in our Discord chat group, and I'm going to bring it up live. We have a Discord chat group. It's our AI Auto Trader group, and our AI Auto Trader group has all of our members, everybody who's running the system, our entire community of traders that all share their results, their experience, any edits that they've made to their strategy. We put our updates if we're going to, listen, market conditions are always changing. From time to time, we do adjust the settings, and you'll always find those in the Discord chat group. We have our AI Auto Challenge. The challenge is, and it's a $400 cash prize every week. If you come up with the best strategy, it can't be one that's out of the box. You have to make your own strategy, your own parameters, and run it for the week in a separate account. And if you win the contest, it's $400 in your pocket. Okay? And that's a way to collaborate with our community of traders. I can't tell you how many great ideas that we've gotten from our members. Some of our best ideas, I'm not kidding you. I just got one the other day. A gentleman, great friend of mine named Rolf, Jamaican. He came up with a strategy for Thinkorswim that just has this, it blew all of our minds. So this is a way for our community to contribute, and they also get a nice cash prize. If you're having a problem, we have 3 or 4 technicians that will instantly assist you. I like the daily results channel. It gives you an idea of what everybody's making. So you could see today, this is Mark. He was up on all of his strategies today. We had a huge green day today. Here's one that cumulative. It looks like it ended up 184 positive yesterday. Mark was 400 down on his live account on that day. But every single day, here's plus 500. And I know today was just a huge day. Today, the profits were 23.10, 13.84, 11.46, 10.91. Just a huge day. Happy members in our traders. This is a chart on the 15-minute strategy. So if you do decide to come aboard today, you'll receive instant access to the Discord chat group, to the trading software, instructions on third-party licensing. We're going to get you up and running. You're going to be trading with us tomorrow morning. You'll get instant access. Fill out that. I believe Rob has put the link in the chat box. If not, let me just check and I'll put it in, and then I'm going to answer your questions. And I do appreciate everybody's time today. What I don't see is the chat box. Give me a minute.
I don't have the link. You have to paste it. I'm having issues with the keyboard.
Okay. So let me put the link in the chat box as soon as I find it. Okay, here it is. And I do apologize. Okay. Okay, here's the special offer. And I'm going to send it to everybody. It's going to be right in your chat box. And we do have 25 available. If you want to give it a try, I highly recommend it. You'll have the monthly or the annual option. Remember the coupon codes. If you have any questions, I have Jacob is on standby. He's available. You can see his phone number here on my screen. I'll be available after the event is over. If you have any questions, these 25 will probably go fairly quickly. So I do encourage you, if you could find the chat box, if you pop it out, you'll see that I've put in for the entire audience in the chat box, not the question box. And that should be connected to your control box there. If not, give Jacob a call. He's standing by and he'll help you out. Okay, let me go through some of these questions real quickly. Ernie asked, do all prop firms allow automated trading to be used? I have heard of a few that recommend using semi-automated systems, and we've made that available in this offer. Let me tell you, it's very hard to enforce that, Ernie. To distinguish whether a trade's been taken by a strategy or on a discretionary basis, I think is very difficult. Hey, Dirk. I will give you a call. Good to see you here. And Tom asked, I talked about starting with an account of around 3,500. How well does profitability scale to 10 times that amount? Well, Tom, the more that you're able to put at risk, the more potential you'll make. So that equity curve in your case, if you were to trade 10 contracts, and Mark Miller, who's the owner of Right Line Trading, is at one time was trading, I think, 6 or 8 contracts, and doing extremely well with it. He was making, there were days that he was making 5,000 and 7,000 a day. So but I also keep in mind, Tom, you're opening yourself up to, significantly more risk on a losing trade. But with the way this strategy's been running, your equity curve would be that much steeper. So the answer is yes. It would take the results would be very similar. You would just have to multiply by 5 or 10 contracts. Do you run on the ES? Good question, Dan. We are testing a number of templates on the ES on different time frames right now. However, we're not comfortable releasing it as of yet. As soon as we do have one that is consistently profitable, then we will be releasing it, Dan. We want to diversify, our template, not only with time frames, but an instrument. We'd like to have all the index equities and commodities. Does it work on the S&P 500, crude oil, natural gas? Yes, yes, yes. It works on everything. Okay. The tricky part is finding the profitable setting. And right now with the Russell and the NASDAQ, we've got them. Okay. So Walter also asks, is it possible to use this system for one price on multiple accounts? Yeah, of course. Yes, it is. Absolutely. Let me tell you, Walter, now that you mention that, I don't know if you use a trade copy or you have two different accounts, but NinjaTrader 8, in the parameters of the strategy, you'll be able to scroll down. You can run two different strategies that have the exact same settings, but on two different accounts. There's an input in the template that allows you, it's a drop-down menu, and if you have multiple accounts, they'll all be listed there. What David Kushner uses, who's our prop trader, is the trade copier. Now, I'm not endorsing anybody's trade copier because I don't know firsthand, but he uses it with success, and he trades 6 funded accounts with one of the prop firms using a trade copier. So, Tom, that's a great question. You can use multiple accounts by just buying one license. One license, you could trade 10 accounts. Is it possible to use this system? I've answered that question. Okay. Well, I think that's about it on all the questions. So I really wanted to say thank you, and I really appreciate everybody joining me here today and listening to the presentation. Really, if you
Hey.
come aboard today, I can assure you that you're not going to be disappointed. This is going to exceed your expectations. So
Thank you
thanks
so
again,
much,
everybody.
Rory.
Yes, you're welcome.
Your strategy looks amazing. We've been hearing great things about your automated strategy and how it's crushing it lately. Ladies and gentlemen, if you struggle with human error, overtrading, inconsistent results, or blowing out your trading accounts, Rory Powers over at Right Line Trading has a solution for you. You can learn more by clicking the link in the chat box or giving one of the members a call. Thank you again, Rory, for being here. We love having you on Traders Corner. We hope you have a great week and everything after. Come back and see us again, please.
Thank you. I will.
You're welcome. Well, ladies and gentlemen, that will conclude our online trading summit. The staff at Traders Corner wants to thank you all for joining us today. It's been an information-packed event, and we hope you all enjoy the rest of your weekend and have a nice evening as well. Thank you again for being here. All the presentations will be posted to our YouTube channel, hopefully by tomorrow afternoon. So long and happy trading. Be well.